Hey, Hazard Matt, how you doing? Uh, Things went okay. I'm trying to qualify the 250K account on the sale from Lilu. They gave the sale. It's okay. See, they're giving out 5 accounts. They call it a bundle, so you get 5 chances for the price for an 85% discount. And plus you get $1 reset on all 5. It cost me $4. They have edge enhancers. You have to go in and read it, but it cost me $4 to get 5 more. So I basically got 10 for $100 to qualify a 250 account. So I'm just YOLOing in trying to make it. You know what I'm saying? And then once I get it, I'll go back to my normal strategy and have a bigger daily um, drawdown, if that makes sense. So that's what I'm trying to do. So I'm doing 10 contracts on the NQ for 25 points. Yeah, that's what I'm doing. Yeah. So if you see crazy shit today and yesterday, that's what it was about. Because I'm just trying to get the bigger account so I have the bigger drawdown for my normal strategy. You know what I'm saying? So I can let the trade run a little more like a cash account. So I'm trying to get 25 points at 10 contracts on the NQ. If I can do that 3 times, then I made the account. That's the goal. And the NQ runs 25 points all the time, one direction or another. And get the news turned on.
Show the firm. So this is what I've heard from a lot of firms. If there's a 10% tax, they'll force their suppliers to eat some of that cost. Workers may eat some of that cost in terms of
Yeah,
less
well, that's a
hiring and
huge
things like
move on
that.
the
The
ES. For
firm will
the
take
ES
it
to
out of
move
their
30
profit
points in a
margins.
day is a lot,
And then
let
lastly,
alone in
some
a
of it
few
will get passed
seconds.
on. And as I mentioned last night, I've heard this for months now. Like
That's a
the rule
crazy
is
move.
10%, it's roughly rule of
That's
thumb
one you got to be in
30-30-30.
before it happens and get lucky that
Suppliers will
you're
eat
on
a
the right
third,
side.
firms will eat a third, consumers going to eat a third of that tariff. So if you eat a third of it and it's 10%, like I've been arguing, this is like
You
3
think we
tenths
uh,
on
you
the
think we grind down
three,
today, or do we keep
basically
moving
3
up?
tenths on the inflation rate for a few months, and that's it. And it'll persist if you do 12-month over 12-month. That base effect will not go away for a while, and then it'll just drop off a cliff. So that's why I've been arguing you want to look at like 3 months and 6 months to see if these tariff effects pop up and then go away. And so that's more critical than looking at
Yeah,
the 12
a
month.
move like that's pure luck.
Yes, but the way the president
You know,
is
unless
putting
it
these
goes your
tariffs
way
on
and you've already
might
been
not
in the
match up with
trade and
theory
you've got
because
your
the
stop loss set to
spoon dollar
profit,
tax
well,
was
then that
passed
was
and came
responsible.
into effect on a certain date.
But you can't predict it,
The
you know.
president is not yet
What do
put
we
on
got for
most of
news
these
today?
tariffs. They're in theory
Let's look at
still
the
coming,
news.
and we still haven't seen the Section 232 tariffs
Are
for the
you
most
working
part,
the
the
ES? Did you
national
say you
defense
work
tariffs that
the
we have to
ES?
put on semiconductors and pharmaceuticals, et cetera. So if the process is stretched out,
Okay,
consumers
cool.
could
I'll
be
leave
hit
the
by a
ES up today
series, an
then.
ongoing
I'll move the
series
news up
of
there.
tariff increases. And given what they've just been through, isn't there a danger that inflation psychology starts to seep in?
Well,
I'll go
that's
back to
exactly
the
the
NQ
point.
if I take a
All
trade.
my examples, Ben, is if you put the
This
10% uniform tariff
University
on and keep it
of
roughly in
Michigan
that range,
sentiment, this can
then
move
what
the
I
market.
described is what will happen.
It's
If
kind
there's
of like
constantly a sequence
it's
of
like a
higher
poll
and
or
higher and
something
higher tariffs, then you
of
have
how
an
people
impetus
feel about
rolling,
how things are going, and
potential
it
impact
has
on
weight,
prices.
believe it or not.
That's true.
Other than that,
If it's still just a
that's all
question
we
of
got all
delaying
day.
it, that doesn't change my argument. Whether you see the
Yeah.
spike in
So
July
watch
or
out for
it
that at 10
happens in
o'clock.
June or
But then after
August or
that, it should
September,
settle in and we
when it
should be able to
happens
get
is
some
irrelevant to
trades.
the economics. That's a non-starter of an argument. Firms could
Yeah, I'll
also
move the
just
news
spread
up
it out
here.
in smaller increments over several months. The total effect still ends up being the same. They just get there in a later fashion, and it'll be smaller amounts. So the bigger thing is if we
I'll
just
leave it up
continue
here
to get
today.
another wave
I'll
of
go
tariffs,
back to
another
the
wave of
NQ if I
tariffs,
get
another
something
waves
down
of
there.
tariffs, that's when things become more problematic, thinking about what's going to happen with inflation.
You don't
See
think the
what?
Federal Reserve.
Check this out.
I just want to talk about the experience of
I've
last
got all
year.
these.
The
All I
Reserve
gotta
done a
do
fantastic
is
job
I
of
got
covering
5
this over the
chances
last
to
6,
qualify
7
one of
months.
these to get the
The move we
250
saw last
account, and
year,
it only
100
cost me
basis
like
point reduction in interest
$110.
rates on Fed funds. And then we saw a corresponding
mean,
move of
that's a
100
pretty
basis
good-
points higher.
And you
at
can
the
get a
long end
payout
of the
every
yield
2
curve.
weeks.
Yields down did not happen. It was yields
The max
up, and
payout
mortgage
is
costs up as well.
$2,500 every
How
2
do you think
weeks, which
one
is pretty good.
informed the other? And
Until
how
they
might that
ask you to
affect your
go
approach to
live.
cutting interest rates this time
You know?
around?
Well, I think last September there was a lot of, remember, the long-term rates were going down.
It's a,
through
it's for a prop firm.
August and early
You know,
September. This
if
was
you can
not
afford the
any
$100, it's not a bad
contradiction
deal.
what we were doing.
But you got to
It's
be able
just
to afford the
after September
$100. You
meeting,
know.
The data just came back. And
Look
the
back at
absolute growth
7:30,
was up,
8:30.
productivity
Okay,
was
hold
up,
on.
Employment suddenly took back off. And then you have
Like right
real
here.
growth expectations being much higher. We were seeing productivity growth and GDP growth of close to 3%.
So this is
So in that
7:30.
case, long rates go up anyway. So it's not necessarily there was some counter reaction to what we were doing. I never saw inflation.
Oh, every day.
Adjust that caused all this.
You don't think it was a market question?
Does it got a bump every day at 7:30?
If it would have been, you'd have seen it in inflation expectations in the market.
Yesterday was crazy. Yesterday was just a
But we didn't
run
see
up.
it. I mean, inflation expectations stayed fairly anchored all through this rise. So I think the increase in the long rate was just all the data was coming in for a better, stronger economy than we thought it was going to be in September. That's fine with me. You know, sometimes you're going to do these things taking a shot that I want to make sure we don't have a hard landing.
This is yesterday at
As I said,
7:30.
with any kind of an insurance cut, sometimes you don't need the insurance. It didn't work out. But that doesn't mean you go back and say, oh, that was a stupid decision to make.
Market-based expectations of inflation.
7:30.
Let's sit on this. There are clear and obvious threats
8:30.
to the central bank's independence right now.
Yeah.
Every single day on this
Yeah,
program,
I've
we're
noted.
quoting the
Yep, I
president,
noticed
calling
that.
the chairman too late. and
News
going after
news
low
will
interest
come
rates.
out.
And I think a way
to-
that you and I can have this conversation without addressing those calls directly.
Yeah.
is to
So
think about
right
what's happening with
yesterday, if you
inflation
got in at the
expectations.
drop here,
Do these threats threaten to de-anchor
you were at
market-based inflation
honestly, if you got in
expectations?
around
And is that
8:30
something
yesterday
the
and
committee
could
might
hold
become increasingly
and
sensitive
just
to in the
held,
months to come?
that was money.
Well, like I said, I look at the, after the tariffs
That
coming
fucker
on,
ran
everybody
all
was
day.
worried about
Look at that, all day
de-anchoring
long.
expectations,
Oh, you
particularly
got a
for some
little-
of these Michigan
you got a
savings
pullback
coming up.
there.
When I always look at the market,
And then it ran again.
because people have money in the game. Firms are making decisions on
When
what
the
their chief
open, it
economists
pulled
are
back
saying.
before the open.
And if those
You know,
things
at
are
the
wrong,
open,
they're
it
gonna
pulled
lose a lot.
back.
So I've always paid more attention.
Roughly.
I haven't seen
About 9
much in
o'clock
the way
it
of
pulled back.
market expectations.
Yeah,
being
that 8 to
anchored
9
in
o'clock
any
run
ways you
was a
wanna
good one
measure 'em, any
yesterday.
forward. Now in the near term,
And then
of
at
course,
the
they're a good
open,
one,
it
because
ran
you would
again.
see inflation in the short term. But in the longer term ones, I'm not.
I don't know
I'm
if it's
not
going to do
seeing
that
it.
today.
So either the market is just dismissing all of this as chatter and noise, or at some point, if something happens such that it becomes much more serious, then you might see a discrete jump, and then that's going to be a problem for everybody.
One of the questions that we get all the time, Chris, from people on Wall Street is, or one of the posits they make is that all this criticism of the Fed is hurting Fed credibility, and that the next chairman's going to have a tough job because there are going to be expectations for the next chairman
Bouncing off the
set by
VWAP
the White
now.
House rather than by the economy. Do you feel that inside the building?
No, to be absolutely honest, we just do our job every day. I go in, I just focus on my work on monetary policy, payments, and oversight of the reserve banks. That's what I do. I let this stuff go and then just try to focus on my job. And I think that's how all of us are proceeding with this. I mean, at the end of the day, the president, whoever they choose, you're going to have somebody that has credibility with the markets, or you will see, as Jonathan was just talking about, you're going to see inflation expectations spike. You will not get lower interest rates. You will get higher interest rates. This is well known. We've seen this everywhere around the world when this happens. And I know Scott Bessent knows this. So this is not something that is lost on anybody.
You were nominated by this president for the seat on the board.
Yes.
You were previously director of research for Jim Bullard way back then. Is it a position you would like? Is it something you would like to do in the future?
Look, in 2019, the president contacted me and said, would you serve? And I said yes. If the president contacted me and said, I want you to serve, I would do it. But he's not contacting me.
We'll see if he does.
If he says, Chris, I want you to do the job, I'll say yes. But he's not talking to me, so that's it.
That
it's
might
a
change.
hypothetical that
That might
isn't
change, sir.
relevant.
It's good to see you. We appreciate your time.
All right, thanks.
You've been very generous with it. Thank you very much. The Federal Reserve Governor there, Christopher Waller. Mike McKee, thanks as well to you, sir, as always. Up next on the programme, we'll get you some morning calls, plus we'll catch up with Dan Ives of Wedbush, and we'll break down this conversation we've just had around this table, the case for lower interest rates.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, yet ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Jumpstart your trading day on Bloomberg Open Interest.
2 hours of single stock stories that are driving the opening bell action.
We'll take you to Wall Street, Main Street, the C-suite, and beyond.
These are companies that are growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the narrative.
If you have bad earnings reports, you're going to get punished.
They're not buying what the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
The headline numbers for the labor market, what we're seeing are okay, but it's like when you get underneath and start looking at the data, the private sector is not doing as well as everybody thinks it is. If you're walking on a lake and the ice is frozen and it sounds safe, but when you start hearing cracks,
MFI? What's
that's what
MFI?
I feel like. It's too late once you go through the ice.
Federal Reserve Governor Chris Waller on this programme just moments ago, Lisa, making the case for lower interest rates.
Yeah, saying that you have to do it before it's too late, making the case that we've heard a lot. I mean, too late has taken on a new meaning now. Of course. There is this question.
No, is that like a volume indicator?
And he really raised the point. This is
that like the
good.
Delta
You
or
want
something
to
like
set one
that?
turning point in the economy, and that's typically when you do have countering views.
Really refreshing. He talked about there should be debate amongst policymakers. There should not be this groupthink, which is something most people on
Kind of
Wall
the
Street
forecast
and
clouds, kind of
administration
like the
completely
Delta.
agree
It
with.
kind of tells
When
you
it
what's
comes to
happening in the
whether or not he
volume.
would be the next Fed chair. So the president has not reached
Oh,
out to him.
that would be the
president did reach out to
stochastics.
him to join the board. And if he
So
was
the
asked to be Fed
stochastics
chair,
tell you
he
if
would
you're
serve.
overbought or
These 2 points that he
oversold.
made this morning
So you
and
see,
last
there's
night
I
from
have
New
a
York
slow.
City on
It's like on a
tariffs. This is the key
14.3 and a
item
60.
to confront the rest
So
of
the
FOMC
slow
with.
moves
The
faster,
large
so
share
it's a
of tariff
quicker
increases
indicator.
won't be passed through to
So you
consumers.
see, once you're
And if
over,
they are,
this is
that
right
increase
here.
will fade over time. It's something we
You're
should look
overbought,
for. Point
and look
one,
it up here.
inflation. Point 2, and I think this is going to be maybe a little bit
When
more
it started to roll over here, look at what happened. Everything pulled down, and then you're oversold, and now we're on the up move. You kind of see what I mean on the stochastics?
It isn't just Mickey Bowman, it's also Mary Daly. And she said it really would not be a good thing to see the labor market.
Does that make sense?
More greatly than it has already. You're also seeing Neil Dutta, you're seeing others talking about how the private.
So I always kind of want to be, like when I'm paying attention and I'm really kind of in the zone, you want to take the trade in the same direction that the stochastics are moving in. You never really want to take even if the whole forecast is green, but your stochastics are pulling back,
labor
it's
unions
better
to
to
come
wait for the
forward,
next
that, I think,
rotation.
is getting
You know what I'm
attention.
saying?
We talked about tariffs as a tax. We talked about how it's really divided amongst the supply chain. So that tax, when it hits the consumer, is only about a third. He said constant
So sometimes,
continuously ratcheting it up, not 10, 15%. That could potentially
you know,
be a problem.
sometimes
But
if
how
you
difficult
get
is it
in a
to do?
rotation
We
or
even
two
said about that,
rotations
that's a tremendous
early,
amount of
that's
credibility.
why
Being
it's
on the program,
kind of good where
saying
you
that
can
tariffs are
hold
only a
longer.
one-off increase in price
You know,
levels.
that's kind of why I'm
Then
trying to
Joe
get the
might come out
bigger
and say,
account.
well, we can't move
Because that's a
because of the
mistake
tariff
that you can
rates.
make,
Well,
is
here's an
getting in
individual
too
saying
early
we should be moving,
before the
and the
stochastics
tariff
are
rates
running
don't
your
matter.
direction.
It's a credible argument for lower interest rates, which might find some company on the committee, and for that reason, he's going to find it easier to engineer the kind of lower rates that the administration would quite like.
If that makes
You go with
sense.
someone from outside of the building, you've got a much, much bigger problem.
I'm just having my boiled eggs, so.
Isn't it? If this market perceives them just to be a political puppet and someone without the credibility.
If they're lowering rates simply because they're doing so in response to the president, that's going to lead to inflation expectations becoming unmoored. And you'd see that in market pricing, not the University of Michigan thing, as Governor Waller said. And that seems to be what his argument was this morning.
Don't we get the University of Michigan thing later
We
this
do.
morning?
We get a University of Michigan thing. And actually, it's been doing better, but a lot of people dismiss it.
Sounds like Governor Waller doesn't open that one.
Up next on the program, we'll catch up with Sarah House of Wells Fargo on the state of the consumer. Plus, we'll speak to Yahara with your morning movers and a sign that high-end shoppers are still spending. Live from New York City, this is Bloomberg.
You're on a cash account, right, Hazard Matt? Or are you paper trading still? Yeah. Yeah, I when I first kind of discovered this whole thing, I was, for a short time, I was working for this remodeling outfit, doing like high-end remodels for bathrooms. You know, we do windows and like all kinds of shit. And I was putting together a project for this guy. And in his basement, he had like 6 fucking screens up with all kinds of stuff on them. And I thought it was the greatest thing ever. And he kind of explained it all to me. And he was on NinjaTrader. So I went home and tried to mimic it as best I could. And I bought a lifetime license. You see, with NinjaTrader,
Okay, ready?
it's kind of like the OG of the, you know, of the the home trader brokerage type thing.
And I began to wonder how much longer I'm likely
That
to
and
live
Tradebait.
and what I could do to extend my life.
But
on longevity, I
the
talked
forecast,
with
my
leading
strategy,
experts in
I've
science
almost
to
got it to
educate
where
people
I'm trying to get
about
it
how
through
they might be able to
licensing.
change their conduct
So with
that they can live
NinjaTrader,
happier
you
and
can
healthier
license
life.
your
I'm David
strategies and let
Rubenstein.
people
Join me on a
subscribe to it
four-part
and use
journey
it.
as I explore the great quest for longevity. Only on
So that's why
Bloomberg.
I'm kind of invested with NinjaTrader.
What is going to be the consequence for U.S. markets? We are basically
Yeah, there's a lot of
taking
bugs in it
earnings
though.
season.
It won't get through licensing the way it is.
How we're faring when it comes to Asian markets.
I'm kind of waiting a little bit. I got to pay like a real programmer.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents.
I found this programmer that's got his own his own foundation for strategies, and he can basically take each part of mine that's already here and build it into that and do an NDA But it's big fucking money to do with that, you know?
Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the
I'm hoping to just get this account qualified, get a few payments going.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg.
Order flow, yeah, it's like $6 a month or something, $6 or $7.
60 minutes away from the opening bell, equity futures on the S&P 500 positive by 1/10%. Looking to add some weight to a record-breaking rally.
$6 or $7,
On
yeah.
the Nasdaq 100, we're positive by
No.
0.06.
No, not for just basic data. I just do level 1. I don't watch the orders because I feel like half of it is just fake, trying to get people to commit on a fake order. So I don't watch. So I just do level 1. Level 1 CME. CME is like the ES, NQ, MES, and oil, gold. You get like 10 or 15 instruments on the CME, and it's only like $6.95 or something. It's $8, something like that.
And we turn to another company that just reported.
I thought that short was coming. I was thinking about getting in here, up here.
The top and bottom lines, thanks to a flurry of activity in the second quarter. Though there were some weak spots, Schwab attracted.
So I just pay that for level 1 data. I used to try and track orders on the DOM, and I didn't get anywhere with it. I couldn't put anything together that made sense to me. So I just watch it through the stochastics and volume.
Just this morning, we heard that Hess won its
I tell you what, man, I wouldn't fall in love with shorting this market, dude. Like yesterday, I burned a couple of those accounts trying to get cute and guess the short, and it never came.
Let's turn back to the big story of the last 24 hours. One Federal Reserve Governor, Christopher Waller, continuing to build the case for a July rate cut.
Yeah, but it's hard. Well, when it's this strong, man, you never know. It could take off and leave you forever. You know what I mean? When it's this strong.
Find friends on the committee. The question is, how much do they buy into the need to do it in July? We've heard a lot of people, including Mary
I'll be right back.
today, speaking with us, say that they are worried about the labor market, and they are worried that they could be too late, but that it doesn't seem to have the urgency of a July rate cut. So Waller and perhaps Governor Bowman are going to make the case for it. We don't know how many people are going to buy that case and would vote for it. So we'll not only be watching the news of the meeting, but we'll be watching the minutes to see who spoke up and what they were saying.
Mike, also the statement. Talk to us about the statement and the kind of concessions that maybe the rest of the committee might make to some of the dubs that are emerging on the FOMC. Some of the language there at the moment that might have to change.
Well, the Fed has gotten away from very long statements, so they might try to finesse this by just noting that the labor market has shown signs of cooling. The real question is, how much of a commitment do they make to a September cut? In the past, we have seen negotiations behind the scenes that lead to the Fed not doing something what a prominent member wants them to do, but suggesting that will be on the table in the future. Do they put a rate cut in September more firmly on the future to satisfy Waller and Bowman and to try to get them to vote unanimously in July? Or do they let that go by? That's going to be something that Wall Street is watching very closely on July 30th.
Mike McKee, you enjoy wherever you are and wherever you're going next. It's good to see you. Mike McKee there, following the Federal Reserve and the arguments for lower rates at the Fed later this month.
You know, I have to say, the argument for more percent is one that resonates with me.
Oh, without a doubt.
Given the fact that it shouldn't be groupthink, number one. Number two, this is a complicated, difficult economic moment. It is one where people can have different opinions and different interpretations, and you see that across Wall Street. It might, in that statement, be a really good thing to show an active debate and how different members are thinking about it, because it gives a sense of what the scenario analysis is at the Central Bank of the United States.
And what did he call you, Mitch? What was it?
The you-Mitch thing.
That you-Mitch thing?
Yeah, not interested.
That's survey.
That you-Mitch thing comes out a little bit later this morning at 10 a.m. Eastern Time. Sarah House of Wells Fargo has this to say on the consumer. Headwinds for the consumer persist. Slower job growth and higher inflation are a recipe for weaker real income growth. Joining us now is Sarah House. Sarah, welcome to the program. Let's get into this consumer and this labour market. What we just heard from Governor Chris Waller is that this labour market is on the edge. Do you agree? Is it on the edge?
I agree. I think it's certainly more fragile than you would expect it from if you're just looking at the top line payroll numbers and the unemployment rate. When we look underneath the surface, as Governor Waller highlighted, slower growth in private payrolls, and also just looking at the breadth of industries adding jobs has been one thing that's really stood out to me. If you look at that diffusion index, it's below 50. We've only seen that 3 times in the past 15 years outside of a recession. And one of those times was just 2 months ago. So I think there are certainly signs that the labor market is more fragile than it looks. We see this with demand continuing to weaken as well. Businesses not using employees as intensely, for example, looking at the average work week. So I think that does challenge the consumer as we move through also a potentially higher inflation period over the next few months.
One thing that John asked Governor Waller that I think is one of the key questions as we talk about the potential fragilities in the labor market is corporate America seems to be doing just fine, and the earnings are actually outperforming expectations, and you're seeing record highs. How do you square that?
Yeah, so I think part of it comes down to, we're looking at some of the biggest, most well-funded public companies, but of course a lot of job creation is by more of your mid-sized firms, of course your small businesses as well. And there I think we're seeing more struggles. So you can see this with, for example, the NFIB hiring plans and the overall index, and also just a lot of the middle market companies that, we at Wells Fargo talk to a lot, they're seeing some pressure as well. So I think it's just like we're seeing in the consumer, sometimes it's a little bit of a tale of 2 sizes here.
Which also raises the question of where we're going to see the investment boom that everyone keeps talking about. The beginning of a new bull market, as we heard Mike Wilson say of Morgan Stanley yesterday when he was speaking with John and Anne Marie. I'm just wondering at what point that creates jobs, at what point that creates inflation, at what point that creates growth that people are discounting when they talk about this fragility, these cracks.
Yeah, so I think in some ways, when we look at the productivity potential that we're seeing already, we've seen pretty strong productivity growth this cycle. Still a lot of upside when we think about some of the Gen AI enhancements, but of course that could challenge what we're seeing in terms of overall employment growth, but it's also coming at a time of slower growth in the labor supply. So it could actually potentially be a nice offset to a lot of businesses' needs, and then to the extent that this is productivity enhancing, that's actually going to be beneficial for the inflation outlook.
What's the smaller growth, though, in the labor supply? Governor Waller was just talking about the
All right, I'm
unemployment
back.
rate for college grads at 7%. That feels uncomfortably high.
Yeah, I agree. So again, this is, we're looking at slower growth in the labor supply, but that's coming largely from immigration. We've seen a very noticeable drop-off.
Can you hear the radio over the mic?
In the labor force, but they're filling a lot of jobs that your college grads are not looking for. And so I think that does speak to more underlying weakness and payroll growth slowing, not just because of the supply side, but also because we're continuing to see demand weaken.
So do you think that, Sarah, it is all sufficient to say that any kind of inflationary hit from the tariffs will be temporary?
Hey, Hazard Matt, did I ever show you how to read the forecast box when it's on?
So here at Wells Fargo,
If you're kind of watching it while you're doing other things?
Move up to a little over 3% by the end of the year, but then move back down as we move through 2026, with really the lift coming entirely from the goods sector. We're not looking for that to spill over into services, but I think understandably a lot of other Fed members remain cautious given the bout of inflation that we just went through, and I think concerns that given how high inflation has been, we're more than 4 years above target, that even just one more supply shock, even if it should be temporary, does that begin to unanchor inflation expectations? So understandably, they're a little skittish, maybe a little bit scarred from the episode that they just went through, but perhaps another few months of data showing that it's not bleeding into services, I think could be helpful and help resume rate cuts as we move into the later months of the year.
Sarah House of Wells Fargo. Sarah, thank you. Appreciate your time, as always. It's why some members are holding back still. Is 2 months of data enough to get to September and say, we're ready to go?
Yeah, how much are they scarred from their previous experience where they didn't catch up to inflation quickly enough and they said the T word? If they don't want to go back to the T word, it's a little bit worrying some to them. At this point, though, an increasing number of economists...
Yeah, I know. It's like you can't lose on a long, can you?
She also talked about this, that she
If
also
you hold on long enough, you'll be okay.
It is going to be a one-time price shock, especially when met with the weakness that we keep talking about with potential cracks in the labor market.
This conversation will continue at least for the next 2 weeks, and maybe.
Can you hear the stereo through the mic?
Elsewhere this morning with your Bloomberg brief. Here's Lizzie Burden. Hey, Lizzie.
Hey, John. President Trump has been diagnosed with a chronic venous insufficiency, a common condition causing swollen ankles.
All right.
The White House medical unit says that he remains in excellent health.
This is a
though,
pretty
with
good
no
mic.
signs
It
of
doesn't,
DVT,
like, I got the
heart failure,
stereo
or
pretty
systemic
loud and
illness.
it's not, the mic's not
Attribute
picking it
recent
up.
hand bruising to aspirin use and frequent handshakes, calling it benign.
Yeah, I know. Let's see what it
Elsewhere,
does off the
Sarepta
VWAP. Let's see
Therapeutics
if we get a
are plummeting
VWAP
after the
rejection.
company said another patient has died from acute liver failure after receiving one of its gene therapies. That news follows the recent.
Did I
deaths
go
of
over
two
how to
teenage
kind of
boys who
read the
participated in
forecast
early
box
stage
when it's
trial
on?
for the treatment. The company
With
says
you?
it's in discussions with the FDA about resolving safety concerns. And
I didn't know
a
how
change in
long
the
you've been
late-night
watching.
lineup. The Late Show with Stephen Colbert will air its last
Oh,
episode in
I
May
can turn
of
it
next
down.
year. CBS says it was a purely financial decision. The moves come days after
I don't want to get a strike.
Paramount settlement of President Donald
It's
Trump's
good?
lawsuit
Okay.
over a 60-minute story. Colbert called it, quote, a big fat bribe. And that's your Bloomberg Brief. John.
Lizzie, thank you. Have a good weekend. Up next on the programme, setting you up for the week ahead. Plus, we'll catch up with Sunil Desai of Franklin Templeton on the tension building at the Federal Reserve. From New York City, you're watching Bloomberg TV.
We got a VWAP rejection. Look at that. That was pretty nice. That VWAP, excuse me. The VWAP is like cocaine. It's a powerful indicator. That cocaine's a powerful drug. See, that's the bug I was talking about. It'll kick the strategy if I move it around too much. I'm kind of like, I'm a perma bear, man. Bye, low. I'm a perma bear, man. I think everything's always going to crash. I listen to too much news all day. I don't even understand how we're up this high, to be honest with you. It must be the tariffs are going to work out better than mainstream lets you think. Yeah. This is goofy here. Look at that. That's a goofy stochastic.
African startups to watch list.
About 2.5 years ago, we created a solution. We are able to generate.
Did I go through how to read the forecast box and what everything means while you were on yet? I don't. I had somebody asking me yesterday, but I don't. It wasn't you, I don't think. But I didn't know if you've been around long enough for me to go through everything, so you can kind of know what everything means.
Uncover is a women's wellness brand that is specifically made for women of color. It's based in Africa, which is the most underserved beauty market in the world. We are making Africa.
Oh, okay. Yeah, I can't do anything about that. It took me like a year and a half to make affiliate for a year. I can't. Okay, so the green and red zones are the forecast. Okay, that's kind of how I named it. So that's the forecast cloud.
Can you hear the
So what this means is, do you see like down here where the red changed to green? Right here. Let's analyze this right here.
in the dissonance that moves
Here, let me see if I can blow it up without it
the
kicking.
rising course conducted by AI.
Okay.
There's music.
So when the red so this means there's more, when the red cloud is happening, it means there's more buying or more selling volume than buying. So when it's opening up and getting bigger, that means there's more selling coming into the market. When it starts to close up, that means the selling is going away and the buying is starting to come in. So when it's all closed up, and it changes color, that means it just changed from a short condition to a long, because there's more buying in the there's more buying orders in the market than there are sell orders.
2 days of
Okay, and then
going into the weekend looking for record highs.
the control, and that's the forecast cloud right here. So this will be red
On the S&P 500.
when we're in a zone. Yeah, when we're in a zone, like I'm in a no trade condition because I don't typically trade pre-market. Like now that I got these like 10 accounts, I might take one pre-market and see if we, you know, if I took a short here, I'd hold it through the open. But anyway, it's a long story why I don't trade pre-market. Typically, it's because there's the volume so low that any crackhead can come in with a big account and push the market one direction or the other with, you know, with no, it won't even make any sense. So I typically don't like pre-market because that's when the news comes out. News will come out at 7:30, 8:30-ish, and it'll just blow it around, and you can't really predict it. So I've got this locked out till 10:15. So you see here it says time before 10:15 and time after. So the box will only be accurate, or the box will only be on between 10:15 a.m. and 3:20 p.m. So those are the times we're looking for trades. So once the trade box, most recoveries are overnight. Yeah, it's like I used to try and trade through the night, but it was burning me out, man. Like I've caught some really good moves, like when Tokyo or London come online, but it was, you know, it was before I started working for Int. Because so pre-market, there's almost no, it's very low volume, right? It's all based on volume. So right now, we're only averaging maybe,
nothing but groupthink. All the meetings are the same.
The volume's actually not too bad right now. So we're averaging maybe 800 or 900 contracts per candle.
Some people don't want to cut, some do want to cut.
So when the forecast is on, I need an average of 3,000. I need an average of 3,000 minimum. And if it's over 9,000, the box goes off. Okay? And that's just after, like, believe me, hours, weeks, months of back testing and working through trends. When the volume is below a 3-bar average of 3,000 contracts on the 152-second candle, it is completely unpredictable. It is very unpredictable unless you're going to hold. Yeah, okay, you understand that. So pre-market, I've been burned so many times on the low volume, and all of a sudden somebody comes in or news drops, and like the chop blows me out. So I just don't trade. So I turn on the forecast at 10:15 because at 9:30 is the open. And that's when everybody comes into the market, and it's super crazy for at least half an hour to 45 minutes. And typically, you know, news might drop at 10 o'clock. So around 10:15, I let it turn on, and then we see how the volatility is, and then let it settle in and start hunting an entry. So it's all that decision is based off in volume.
The opening bounce about 42 minutes away as we work our way towards the
so
weekend.
if we were in our zone and we were inside the proper volume range on a 3-bar candle, when the control EMAs, now the control EMAs, the slow is the red solid and the fast is the green solid. So when the green is below the red, that'll be red. Or when the green is below the red, that's a sell. So the control EMA will be red. Once it crosses, this marks your direction change, okay? So if you have the forecast cloud changing directions, if you have the EMA cross, and you have the stochastics all running in the same direction with you, that is the A+ setup to go long. Does that make sense? And the chart and the box will read it. You get it. Okay. So this is our A+ setup. And a lot of the times we'll try and front run it. So you see maybe when we're down here at the 20 EMA, the 20 EMA is the yellow dotted. It's in the box also. So the 20 EMA, maybe we take our long here because we're anticipating the front run of the EMA cross. Because we just saw the forecast cloud close up. We've got a huge angle on our slow control EMA, and we're like, fuck it, I'm gonna front run it. I'm gonna take a long before, and I'm gonna say we're gonna cross and go long.
That said,
So maybe try and front run it a little bit, but you got to understand it could reject and roll over. So you got to make sure you manage that. You know what I'm saying? So this is like the perfect A1 setup. So if I had been watching it and looking for an entry, the entry probably would have been on this candle. Somewhere on this candle would have been the entry to go long. And right now, if you got in somewhere around there, so shit, you only got 4 points. And that's another thing is there's no volume, so you're not moving a lot of distance. So yeah, you took a long here, but right now you're only 4 or 5 points in, and it took you an hour to get it. You know what I'm saying?
Good health right now.
You know, that's another reason why you kind of need more volume, so it's moving faster.
Let me turn it on its head and say from its current
Okay,
levels,
so
which, by the way,
that's basically how you read it, and then it'll be in reverse on the way back.
inflation to be.
So another big thing is the VWAP. The VWAP. The VWAP's like like a crazy wife or a crazy girlfriend. You never know what's gonna fucking happen around the VWAP. So the VWAP is here. When the price is below the VWAP, it's red, and when it's over, it's green. So I shaded. I programmed in a shaded area around the VWAP. And this is a solid no entry zone. So if the price is inside this area, the box will be gray. Now the reason for that is so many people sit on the VWAP to either go short, or they sit on the VWAP to go long, or they'll sit on the 20 and it'll bounce, and you'll get a lot of chop around the VWAP. Okay, so what we're looking for it to either reject the VWAP and confirm outside the shaded area, or we're looking for it to work its way up through and confirm on the high side, and then that's when you start looking for your entry again. Does that kind of make sense? Because I've been burned on that VWAP so much that I've had to find a way to not trade around it.
Prepared to say that we're getting to a point of significant weakening of this economy.
So does that
And
mean that you're all in on
another thing to look out for, and then I gotta get my work stuff set up. So it's something that I'm gonna add to the forecast box, and it's very important. In my opinion, it's good to watch the NQ and ES at the same time. Because they're kind of connected. So the biggest one to watch is if the price is above the VWAP on the ES and the price is below the VWAP on the NQ, that will create chop. The whole market will oscillate in that area, back and forth, until both of them pick a direction and confirm on the same side of the VWAP. Does that make sense? You can get yourself chopped up really bad trying to take fake entries when the ES is above it and NQ is below or reversed.
You also think the market
So you gotta be on the same side.
Between Trump and Powell. Are you willing to close that
And
door then
so-
about the White House and Trump potentially
So
firing
those
him?
are some of the
Don't think it's
biggest
gonna happen
things,
at all?
and that's kind of how you read it. So during the day, we're really, like, if we're not like going full retard and doing stupid things and not paying attention, we're really only looking for this A1. Okay.
Which I'm doubtful about, but supposing it does, and supposing Powell is fired, I would just note, what exactly is it that we're all terrified about? An enormously dovish Fed chair? Can I ask everyone on the program today, who was our last hawkish Fed chair? let me tell you, it was Paul Volcker. You have to go back 50 years.
a long tour.
So let's not act as if getting a dovish Fed chair is something none of us have ever encountered. I give you Janet Yellen. I give you Jay Powell, who actually did preside together with the supremely dovish Fed over one of the biggest policy errors that we've seen in a very long time. That policy error was not to be overly hawkish. It was to be overly dovish. So I think when I say it's being overhyped, it is this notion that somehow we're going to get someone truly beyond the pale who is going to come and knock monetary policy completely off course. It's 12 members who get to dissent or not to dissent. I think that the institution has a certain amount of credibility, and no incoming Fed chair, who, by the way, survives this administration and whose term will run into the subsequent administration, would like to have his legacy fall under that footnote that Arthur Burns has in the annals of the Fed.
You ever seen that scene of a bunch of football fans watching the game and they score?
Yeah.
And then all the beers get thrown into the air.
Yeah.
And now people have put different video in that screen, and then they throw the beers into the air. That was Sunol Design, the big screen. And it starts going on that rant about the Federal Reserve.
Yeah.
All the beers getting thrown into the air, everyone's going crazy.
Yeah, that's very much. That was a fantastic, fantastic explanation and, frankly, history lesson.
Sunol, thank you. Sunol Design there, Franklin Templeton. It's got a point. It's got a point, and a point a lot of people, I think, will share.
Yeah, the idea of no one wants to be Arthur Burns. No one really has the stomach to be Paul Volcker either, and that's certainly what we've seen over the past, what did you say, 40 years?
And Paul Donovan recently made the point this week with Danny Berger of UBS that actually that Arthur Burns type Nixon relationship, where on the surface you think this person is independent, but actually what they're talking about, you see later years in the minutes, is
Going to
pretty much
hope
what Nixon
for
was
it to
saying.
bounce up
So that is the worst type of Fed chair we can
63.47.
get.
Okay, that's the VWAP.
They're just flying by, aren't
So
they?
you're hoping for a bounce down,
Think
right?
about what's happened in the past month. I mean, I can't remember half of the things that were headlines that dominated our life.
August is going to be fun. 2 more weeks
Okay.
of July, of course, but a couple of trade.
But
pipelines
you,
in this. Should we go? I think we should go. Coming up on Monday.
Okay, yep,
Lori Calvasino of
resistance,
RBC,
yep.
Bob Michael of JP
I get
Morgan,
it.
Tony DeSpirito of BlackRock, Chris Harvey of Wells
I don't know
Fargo,
where I got cut
everyone here
off
at Bloomberg
talking to you,
Surveillance.
but
Thank
I was
you
just
very
trying
much for
to
choosing Bloomberg TV.
go
Have a
over,
wonderful weekend. This was
some
Bloomberg
stuff
Surveillance.
to look out for if you're trying to read the chart or read the strategy.
It's the most fascinating time
But
for the
that
global
would be
economy
good
in
because
years,
the
and our
NQ is
conversations
below,
front and
and it looks
center.
like the NQ is starting to roll over.
Ideas, and investors around
Yeah,
the
no
world are
worries.
scoring them in real time.
It's
Hoping
just
to
stuff I
translate
found over the
policies from
last,
Washington
I've been
into
working on this for
actionable
about,
ideas for
I've been
Wall
trading for about
It's
4.5
the molecule
years. I've
you
been working on
actually
this
want to
strategy
be a
for
part of.
most of
Separating
it.
the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
All right, I got to set up real work stuff. Oh, you blew
How much
through
does the
your target.
geopolitical volatility emanating from the United States perhaps
You want to be
undermine
careful
the
now.
bull
You've
case
got
for
the, you've
Mexico?
got
Is that a scenario?
the ES is above the VWAP, NQ is below.
Speaking, we do still have a very positive
NQ is below,
On the macro side,
ES is above. So this is a dangerous, plus you got low volume. So this is pretty dangerous.
Competitive in terms of costs. The
Anything
wages
can
in Mexico
happen.
are much more competitive than the wages in China. So why would the U.S.
All
companies
right,
not take
I'll be
advantage
back
of
in a little
that?
bit. I got some stuff I got to do to get ready for 9.
Mexico to continue to contribute to the growth of US as well. The value chains, the supply chains are so integrated that Mexico has to play a continuing role in the further development of the US. And US is growing very healthily, very nicely. It will benefit Mexico. This way or that way, it will benefit Mexico.
Mexico for BBVA is, a source of resiliency of earnings, and it generates, it complements the diversification that we have from the footprint. But there's another topic that is very important, which sometimes we don't focus a lot about, and why we're so convinced that Mexico is going to continue to do well, which is the leverage in the country. Because the leverage in the country is only 33%. And when you've seen Mexico grow and BBVA grow in Mexico, structurally speaking, the leverage is so low that just a little bit of growth in the leverage is going to be able to support that bull case in Mexico. So that's why we're structurally positive in Mexico.
In case you missed it on Bloomberg Insight,
losing a few people is not actually that unusual. These companies are constantly pulling people, in both directions. The real question is, can it turn around Meta's fortunes? It's about who is leading in terms of adoption, in terms of B2B use cases, B2C use cases in different countries. And we're seeing Chinese companies certainly making a strong showing across many of those fields, even if, I would say that the US is still generally in the lead. But what we've seen at the company level and at the product level is actually that continued decoupling. So I think it's a pretty safe bet that is going to continue to be the case.
Not to bring up the past, but you've criticized Sam Altman. I'm just wondering whether you've made peace with Altman on the back of that drama.
So we haven't actually interacted since the time. I'm sure at some point soon we'll end up at the same event, and the AI world is pretty small, but no, haven't had a chance yet so far.
Don't miss Bloomberg Insight live weekdays.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
End of a long week of economic data is trying to break back into the green this morning, up about a tenth of 1%. We're looking pretty good 30 minutes into the start of trading. I'm Sonali Bass.
And I'm Danny Berger. Matt Miller and Katie Greifeld are off. Bloomberg Open Interest starts right now.
And coming up, the case for a cut. Fed Governor Chris Waller says private sector hiring is driving his call for a rate cut. And streaming success. Netflix blew past estimates last quarter, but investors still aren't impressed. And a big victory in big oil. Chevron wins its arbitration fight with Exxon, clearing the way for it to buy Hess, Danny.
And we start right there, Sonali. A clear market reaction this morning. Both Chevron and Hess shares on the rise following that 3.6%, 7.6% respectively. The $53 billion deal was announced more than 20 months ago. Chevron CEO Mike Wirth says this merger of two great American companies brings together the best in the industry. And Sonali, we will be speaking with the CEO later. Really looking forward to that conversation.
And from big oil to big tech, we're looking at Netflix today. It is down about 2.4% pre-market. Results beat expectations in every major metric, and it raised its forecast. But that wasn't enough, given that the stock has soared almost 50% from its April low. Netflix executives are looking to the future. The company says that they look to ramp up spending on gaming while providing creators with new tools to enhance films.
We remain convinced that AI represents an incredible opportunity to help creators make films and series better, not just cheaper. There are AI-powered creator tools. So this is real people doing real work with better tools. Our creators are already seeing the benefits in production through pre-visualization and shot planning work, and certainly visual effects.
For more on Netflix, we are joined by Bloomberg Technology co-host Ed Ludlow. Ed, a beat across every metric.
Right.
Shares down 2.3% though.
Yeah, it's a simple story of a beat that is not as grand as the great expectations of Wall Street. A lot of the sell side are particularly focused on the ad-supported tier, right? The revenue from that ad tier is going to double in this calendar year. But it's also a stock that's up, 43% so far year to date. It has a $500 billion market cap, eclipsing all of those sort of legacy stalwarts of the media space, Disney being the most obvious example. So Netflix has been saying for a really long time, Wall Street, please judge us on these sort of historic financial metrics. And on all of those metrics, it did a really great job. The content slate looks good, but it's just a standard. I'm really sorry, Danny. I feel like you're like rolling your eyes over there in New York going, come on, spill the tea here. But there isn't any tea to spill. It's just simple expectations against delivery.
Okay, I get a kick here, Ed, out of Morgan Stanley's reaction from earnings, because I think it says something about the rest of big tech earnings. They say that Netflix's early but growing use of Gen AI tools to power content and product innovation would reinforce their bullish view. Does that mean that Wall Street is going to get excited about the investment in AI for the rest of earnings season, or are valuations just too high to support that view, even if people are bullish?
Think so. Really interesting to kind of demarcate the infrastructure play from software companies. Netflix is basically a software company, right, that still needs to evidence some top-line growth that directly results from investments in AI. The use of AI in Netflix's case is really interesting because the sell side this morning is also saying, okay, actually, we look at the content slate for the second half of this year, it looks great. Squid Game 3, I've just watched the finale 2 nights ago, fantastic. You have Happy Gilmore 2. Those pieces of content are known to be in the works and will be coming. But what happens thereafter? You have to feed the beast kind of thing is how I'd summarize the analyst notes this morning. And there's not yet evidence that AI technology is feeding the pipeline. But if they say that it will, then I guess the street takes them at face value.
Ed, we thank you so very much. We're looking forward to the rest of earnings season with you. Of course, that is Ed Ludlow of Bloomberg Technology. Looking forward to your show as well. Chevron now also, as Jenny had been talking about, won its arbitration battle with ExxonMobil, clearing the way for its $53 billion deal to buy Hess. The decision ends a period of limbo, 20 months of limbo, that hurt Chevron stock and prompted questions over the quality of the company's due diligence when it agreed to buy Hess 2 years ago. Joining us now with more details, Simon Casey, Bloomberg's managing editor for energy and commodities. Deal's done, right? I mean, what does this mean in terms of the ability to squeeze out that dollar to bring back what was lost over the last 20 months?
Well, I mean, must be sighs of relief all round at Chevron this morning. As you say, this has been going on for a while. This has been, as you said, an overhang on Chevron stock. The stock has underperformed. It's just sheer uncertainty over the past 20 months, the inability for Chevron to do very much except hang on, wait for this arbitration deal. So now, excuse me, you have analyst notes coming out this morning. The streets are saying Chevron get on with integrating these assets, boosting its earnings, focusing on Guyana, which is a very, very promising oil play. Exxon's been there for some time. Interestingly, Chevron and Exxon are going to be working side by side on this joint venture off the coast of Guyana. So how does that go on? There's a lot of love lost there. Some bitterness, I would imagine. Something to ask Mike Wirth later on today. This has been a real problem for Chevron the past 20 months.
Well, it's also a Chevron that's been trying to engineer restructuring, that's also been letting go of employees, trying to cut costs. What does it mean to be integrating Hess at a time when they're trying to do this and make sure that things stay in line, again, especially when it comes to cost pressures?
Look, I mean, I think they're raring to go. The deal closed today. They'll get on. They'll do that. Yeah, the cost cuts that you mentioned, the cost savings over the last several months, I mean, that's part of an ongoing process. We've seen that at Exxon as well across the industry. The post-pandemic oil industry in the US has been laser focused on costs. The integration process now will be reasonably straightforward. Hess's assets, half their revenue comes from Guyana, the rest is from largely from the Bakken shale field here in the US. Chevron will integrate those assets pretty quickly. It already has a very big shale footprint here in the US. It's a very experienced operator.
Yeah, we'll see how two enemies in the legal proceedings get along to be two co-workers in a JV in Guyana. Simon, thank you so much for joining us this morning. That is Simon Casey of our Bloomberg Oil and Gas team. And tune into our interview. Mike Wirth, Chevron CEO, will join Shonali and I in the next hour. But first, back to one of our top stories. Federal Reserve Governor Christopher Waller says he is starting to see cracks in the U.S. economy. He spoke to Michael McKee, Bloomberg's international economics and policy correspondent, in the last hour.
The private sector is not doing as well as everybody thinks it is. Like most of half of the employment growth we saw last month was in the public sector, and that means the private sector is not doing particularly well. So I was just joking that, if you're walking on a lake and the ice is frozen and it sounds safe, but when you start hearing cracks, and that's what I feel like, it's too late once you go through the ice.
The Fed's Waller speaking to Michael McKee, and I'm pleased to say that Mike joins us now. Mike, this is off the back of a Waller who last night also said he was ready for a 25 basis point cut. What was your takeaway?
Well, I think he is firmly committed to a 25% cut now. He wants to get ahead of any potential problems for the economy, and he sees more problems than perhaps some of the others do. He suggested that we could see the labor market freeze up rather rapidly, and it's better the Fed get ahead of that. Now, we all have to put this in the context of him being mentioned as a potential successor to Fed Chairman Jay Powell. I asked him if he would dissent, which would be maybe seen as a sign to Trump that he is on board if the rest of the committee is not. But he parried that and said he's made his views very clear and he's not going to pre-commit to one thing or another.
He also spoke to you a little bit about the potential for the Fed chair position. He said he hasn't really spoken to the president about it. Of course, he's been very much in the news around this position. How do you see the race playing out and where he falls into the bigger picture?
Well, it's interesting that Chris Waller is saying he has not heard from the White House because, as you mentioned, he is on everybody's short list for Fed chair. And we have heard from Scott Bessent, the Treasury Secretary, that they have begun the process. Now, what does that mean? We don't know. How far have they gotten? Have they done interviews? We know that the president has spoken with Kevin Warsh often, and we know the president has spoken with Kevin Hassett and Scott Bessent on a regular basis because they are in the administration. So Waller's kind of the odd man out, which he acknowledged today. He said, I'm the outsider. But he did say if he was asked to become Fed chair, he would accept the position.
Mike, we appreciate you so very much. That is Bloomberg's Michael McKee off of a very busy week of Fed talk, both in terms of who might take a future position as well as the economic data that could or could not suggest a rate cut early this year. Now, some more movers on our radar. We're watching American Express outperforming expectations in the second quarter as affluent clients continue to spend. It's not enough to please the market pre-market. Amex still down about 0.4%. But of course, we know that a lot of people are watching this K-shaped recovery. However, Danny Schwab, I think Schwab and Interactive Brokers are quite interesting. Robinhood reports next week. Both of those stocks up. As Schwab beating earnings estimates, client assets hit a new record.
Yeah, and you have seen retail investors flock to stocks. They keep buying the dip. And it is that volatility, to your point, Shanali, of the Schwab and IBKR being connected. It's also that volatility that allowed Interactive Brokers also to beat net estimates, too.
Absolutely. And then, Denny, it's really interesting. You see that the retail trade is something investors are watching more and more of. You're seeing a lot of others also flock to the crypto world to see where those retail investors are going, and that has been getting a big boost in the market.
Well, Scott Rubner, who was previously at Goldman Sachs, now over at Citadel, wrote this really interesting note saying that the breadth of demand coming from retail looks like 2021. It looks like the pandemic. So are we back in that environment, especially as crypto picks up again, too?
And Citadel Securities, of all places, will know because they handle so much of that retail volume, Danny.
Very true. All right, coming up, we're going to talk more about Netflix analyst John Blackledge of TD Cowen. Next, as it kicks off the big tech earnings season, Netflix down 2.6%. This is Bloomberg Open Interest.
Asia is at the forefront of some of the world's biggest stories. I'm Chevrian in Tokyo.
And I'm Heidi Stroud-Watts here in Sydney, where the trading day begins. We're here in the center of all the action to get you set up with the numbers, news, and knowledge you need for the day ahead.
The demand is indeed recovering. We've been waiting for this moment.
The opportunity of a century.
Join us on Bloomberg The Asia Trade. Weekdays only on Bloomberg TV. Context changes everything.
As Bloomberg's global financial correspondent, I get to meet the people shaping the way money flows around the world. And I want to bring you with me. Now we're playing.
Yep, now we're playing. First and foremost, I am a capitalist. The capitalist system is the best system in the world. There isn't another one that works as well.
Citigroup moves $4 trillion a day.
5.
Wall Street used to be a place.
I love all these new Wall Streets. Y'all Street, Wall Street South.
Now it's more of an idea.
The optimism here is infectious.
You think our New Yorkers are negative?
Yes.
Anything that trains people to understand probabilities and just think through things with a greater degree of nuance is a service to humanity.
you survive the day?
I did. It was a busy day.
Bringing you the latest in tech and AI news whenever and wherever it happens. I'm Tom McKenzie in Paris, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
And now to high interest, a look at what's making headlines around the world. 3M beat profit estimates and raised its forecast as it makes strides in its turnaround plan under CEO William Brown, who joined the company last year. 3M has put measures in place to mitigate tariffs, including shifting production. And Union Pacific is exploring an acquisition of Norfolk Southern in what would be the largest railroad deal ever. The combined company would have a market value of nearly $200 billion. Analysts are positive about a possible deal, but warn that any transaction would face significant hurdles. Norfolk Southern still up almost 3.6% pre-market nonetheless. And Meta has hired a pair of key artificial intelligence researchers who worked at Apple, and this is shortly after poaching from their former boss from the iPhone maker. The hires are part of a scramble for AI talent across the technology industry, with Meta being especially aggressive in its recruiting, Danny.
I was going to say, this feels like what, like a daily occurrence now that Meta poaches some person for X company. So I'm sure we'll hear more of that.
Stories we've seen before.
It's exactly spending so much money. And look, it is going to be Meta we're hearing from next week or later when it comes to their earnings. We already heard from one tech giant. It is Netflix. It beat expectations in every major metric, raised its forecasts. Shares, though, down 2%. 2.6%, I should say, in the pre-market trade. Joining us now, I'm pleased to say, is John Blackledge, TD Cowen Senior Equity Research Analyst. He has a buy rating on Netflix with a $1,450 price target. Great to see you this morning, John. So after a nearly 43% run-up in shares so far this year, was the bar just too high for Netflix?
Yeah, and it's almost doubled over the last year. And as you guys said, we got a great second quarter. Revenue accelerated. They beat on op income. The 3Q guide was ahead of consensus. They raised fiscal 25 revenue, operating income, and free cash flow guide. And we raised our numbers slightly, and our price target went to $14.50. But and shares were up 2% yesterday. I think they probably, and I think investors got what they were looking for. They were definitely looking for a raise to fiscal 25 guide, but I think it would have had it been Herculean for it to be up significantly off the print, just given the run as you just mentioned.
But being up is one thing, being down is another. It's still down about 2.7%. I mean, to the extent that this company could have given investors a little more to hold on to, what would that have been?
Yeah, I mean, well, they raised revenue guide $1 billion at the midpoint. They raised the margin guide to 30%. I mean, I think some people were kind of picking at engagement. They're publishing this engagement report. It was up 1% year over year. The market share has been kind of flat in the U.S. And the company's like, basically like, hey, we've increased our spend on content 50% since 2020. We're focused on scripted and unscripted, episodic and feature film content, and obviously growing out, kind of their live event business. And they think that their engagement will go up. And I heard you guys talking about it before. They obviously have a massive second half slate. So they think engagement will go up in the back half and in coming years based on their various investments in content.
Well, you just hinted at this, John. Netflix said yesterday that its addition of U.S. viewers, of U.S. customers, it hasn't grown. It's about the same it has been over the past couple years. Is this just an oversaturated, stagnant market, or is some of what you're talking about, a big slate coming up, enough to reinvigorate the American market?
Well, they actually said that they don't give that member metric anymore, right? They stopped giving that this year. But they did say that their member net adds grew more than their internal expectations in 2Q, and it was late in the quarter. And the interesting thing about it is what did they launch kind of late in the quarter? They launched Squid Game Season 3, and they also launched other good content in June. And so I think that had an impact on the member growth in 2Q. And they told us, management told us in our callback that members grew across all 4 markets. Most of the growth was outside of the U.S. because the U.S. is the most penetrated from a broadband household penetration perspective. But I think what's interesting about the strong member growth in 2Q as it relates to the back half of the year is they do have Wednesday returning in the third quarter. They do have finale of Stranger Things in the fourth quarter. And I think those things will help drive members, both retention and member growth in the back half of the year. And that will be helpful for them and momentum, going into 2026.
I'm wondering, John, if there's anything to extrapolate by how investors have been treating Netflix's earnings. For example, if you pull up the Magnificent Seven, which Netflix is not one of, right? You do see only significant price appreciation in about half of that index. And does this mean that even if a Netflix can show pretty solid results and see a little bit of a dip post-market, does that mean the rest of the Mag 7 are far more vulnerable?
I don't think so, and I don't cover all of the Mag 7, but I do cover Amazon, Meta, and Alphabet. I think it's specific to the companies. Just for instance, we have Meta, Amazon, Alphabet beating sell-side consensus revenue and operating income, but specifically for an Amazon, just very quickly, we're looking for AWS revenue growth to accelerate. That's a big thing for Amazon and accelerate in the back half of the year. For Google, Alphabet, looking for Google search growth to be strong, and also the cloud business to be strong. So there's different things for each company. Meta, the ad business should be good, but as you guys mentioned, their release of Llama 4 was disappointing, and now CEO Zuckerberg's in this AI talent grab. They did that big investment in Scale AI. So it'll be very interesting how they talk about their AI ambitions, as all 3 companies actually are, as you guys know, are investing significantly historic spend in AI infrastructure.
Yes, it is capital expenditures that are quite literally lifting up the entire market with the sheer number of dollars being spent. So John, we'll get those Meta results not next week, but the week after. At what point do we start to think again about this idea of the year of efficiency? It feels like so long ago for Meta, but at what point do investors stop rewarding the AI push and the spend going on to it and start thinking again about this idea of efficiency?
Yeah, I mean, they're growing headcount. Their cost growth is accelerating a bit this year, and obviously, a lot of people are talking about these huge pay packages for the recent AI talent grab that the company is doing. But I think investors expect them to beat with their core ad business. That growth is strong. AI is helping drive, kind of content recommendations, ad targeting recommendations, and CEO Zuckerberg is a great communicator and inspires confidence in investors. And they get the company and the shares get some benefit from his communication relative to maybe some of the other players in the space.
John, we thank you for joining us this morning. That is John Blackledge of TD Cowen, setting up to be a very interesting earnings season after Netflix's report. But we're going to talk about another darling in the space of technology. Traders keep piling into NVIDIA, but the rally is showing signs of overheating. We're going to take a look at the stock next. This is Bloomberg Open Interest.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. loves earnings.
I know it's like your Super Bowl, right?
I can't wait. It's like opening presents in the morning.
All right, it will be exciting.
Nobody covers earnings like Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom Mackenzie in London. These are the stories that set your agenda.
Taking you from the U.S. markets close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything. Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question.
Great question.
I so appreciate that question. You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
And want to get a check on futures ahead of the opening bell because we're looking at green on the screen. The S&P 500 more than 0.1% higher heading into that opening bell. The NASDAQ 100 pretty much flat. It's trying to break into the green as well. Let's see if that could hold. Of course, we have those Netflix earnings this morning that are sending that stock lower at the very least. But of course, earnings season is just really kicking off. Russell 2000 futures, though, are flying a little bit higher, about 0.5%. Keeping an eye on NVIDIA this morning, super interesting, up about 0.25%. It's interesting. A lot of analysts now a little worried that this is entering overbought territory. The stock is now worth, according to its market value, about $4.2 trillion. BTIG says the sentiment is getting borderline giddy. So, Danny, a lot of interest in this. Of course, this is what's leading the Magnificent Seven a little bit higher.
But maybe it's worth it, especially if you have a Jensen Huang who is now being able to shape White House policy. That's being allowed yet again to sell H-20 chips into China. You could look at it not exactly the same, but kind of like Elon Musk in the beginning of Trump's presidency. Maybe he has the president's ear, and therefore some of that valuation, extra valuation and premium might be worth it.
This is a strange earnings season because you have the political rhetoric also really seeping into the market. That's kind of overlaying how people feel about the numbers themselves. We heard from TSMC about some guidance. We heard from ASML. But we're ending the week pretty strong with all of that noise. And, Danny, we are less than 4 minutes away from the opening bell here. We are looking at an S&P 500 that's looking to break into the green, end the week strong. We were at 6,300 earlier in the week, a new record high. Might have forgotten that in the middle of all the earnings and data. Stick with us. We're going to begin the trading day with Lori Heinl of State Street Investment Management. This is Bloomberg Open Interest.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Anand, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
And we are moments away from the start of trading. This is Bloomberg Open Interest. I'm Shonali Basak. We are trying to keep in the green this week. We have the S&P 500 futures still riding higher about 0.1% as we head into that market open. NASDAQ 100 also holding on, accelerating those gains heading into the open about 0.2% higher. And there you have it, the bells. Let's take a look and see who is standing at the NASDAQ. We have FinWise Bank, and they are about to join they are joining the Russell 2000. They're celebrating that milestone, and of course that is an index that investors are watching very closely. And of course on this side we have New York City Emergency Management, Danny, ringing the opening bells at the New York Stock Exchange as investors try to end the week in the green.
Well, here's one stock that is decisively ending the week in the green, Shonali, and it is Chevron. It has won its arbitration battle with ExxonMobil and has closed its deal finally. $53 billion deal to buy Hess. It took 20 months. That's how long ago this takeover was announced, up 2.5%, 2.57% to be specific. They're going to have to work with Exxon now in Guyana. Really interesting how this moves forward. And Shonali, I'm pleased to say that the Chevron CEO, Mike Wirth, will be joining us in about half an hour's time.
Very much looking forward to that conversation. We're also keeping an eye here on Netflix. Results did beat expectations in every major metric. It raised its forecast. That was not enough, given that the stock has soared almost 50% from an April low. You're seeing Netflix shares down about 2.7% at the open. And speaking of valuations, Bank of America strategist Michael Hartnett is warning that a bubble is brewing in U.S. stocks. In his latest note, he writes that the clearest sign would be if the market ignored an increase in inflation expectations and bond yields hitting new highs. That all is as we await the latest UMich sentiment data in less than an hour. Joining us now, Lori Heinl, Global Chief Investment Officer at State Street Investment Management. What do you feel about where we are in valuations for the U.S. stock market, particularly the S&P 500, relative to where you see fixed income trading right now and any upside risk to the bond market?
Well, right now, we think that valuations, while they're extended, they're somewhat warranted, given what we're seeing in terms of earnings growth. And we don't forecast yields to go much higher from where they are right now. Actually, if anything, we see short rates coming down, which will give room for a bit of a rally in bonds towards the back end of the year. So right now, we're in a bit of that sweet spot where valuations, while a little stretched on a relative basis compared to other parts of the world, look pretty attractive.
How much confidence do you have so far in this earnings season? What we've heard, Lori, from the airlines saying that more customers are going to be buying tickets to the banks with a really strong showing. Is this full steam ahead a very resilient U.S.?
Well, I'd hardly call it full steam ahead, but certainly a lot of the risks have really passed. I mean, that crisis moment in trade has passed. That's given a little buoyancy to consumer confidence. Labor markets are still pretty strong. Earnings growth is coming in pretty good. And it seems as though between the balance of how tariffs are evolving and how companies and consumers are navigating that, we're kind of getting behind what we saw in the March-April period. So we actually upgraded our forecast for the U.S., and we actually think we're accelerating it to 2026.
How do you feel about earnings season so far and what it could mean for any upside potential for the broader index? Do you feel that it's what's been working well,
hey, Henrik,
keep working well, or do you see any undervalued opportunities to push these indexes higher?
Well, there are a couple of things. First and foremost, it is still going to be very idiosyncratic. So we're starting to see some of the areas like you described,
Yeah, Bloomberg.
IT or some of the consumer discretionary or some of the other areas doing pretty well in here. And importantly, some
Yeah,
of
I
the
understand what you're
top-line
saying.
forecasts being upgraded, which is even a better sign in many respects. That doesn't mean we're out of the woods completely. Certainly, we still have a
I
lot
find
of
that they at
specificity
least
that has to
cover
come out
news
of
for what
the tariff
news is,
negotiations.
and they,
And then
you
finally, the
know,
other
they
positive
don't
here is
have
that
much
we
of a
finally did
slant.
get
They
some
just
fiscal
cover
certainty,
it.
if you will, with the one big beautiful bill passing. So
But their
there again,
guests,
the momentum seems to be to favor
sometimes
U.S.
their
stocks
guests,
right now.
I
And you also still like short
have an
duration, where
agenda.
you say they retain their appeal. How do you understand what is
I don't
pricing
know what's going on right now. NQ's going crazy.
where the Fed goes to the intrigue over what
There's
happens
really
to
good news
Powell's
on
future
housing,
and
though.
who the next Fed chair might be? What exactly is in the price?
Well, a lot of it still is fundamentals, right? So we believe that the U.S. economy is looking pretty good. We're downgrading our risks of a recession. But we also think that there is going to be a need for some policy stimulus towards the back end of the year to perpetuate that. So we are still forecasting some moves by the Fed later this year. And so that to us believes that it leads us to take more of a short duration position, but also be constructive in terms of not having a lot of backup in yields from here.
Now, as we talk about the potential for where interest rates are going through the remainder of this year and certainly into next year, I do want to point out just a little bit from our interview with the Fed's Chris Waller as well. Let's take a quick listen.
Whatever they choose, you're going to have somebody that has credibility with the markets, or you will see, as Jonathan was just talking about, you're going to see inflation expectations spike. You will not get lower.
You get in on anything today, Henrik?
This is
Since
well known.
February,
We've
the
seen
dollar
this
is being
everywhere
hammered
around the world
down.
when this happens.
So
And
indexes
I
are
know
going up, but
Scott
dollar.
Besson knows this. So this is not something that is lost on anybody.
Now,
Inflation?
I want to point out here that you're looking at a 10-year yield that
think?
since the end of the prior month, we're 20 basis points or so higher. And you do have Christopher Waller.
Well, if the dollar is
recognizing
worth
that
less.
without any certainty around the
Snooze.
Federal Reserve's future
Heyo.
composition.
What's up, Snooze?
For example, you could have that upward pressure and inflation risk under the surface.
Well, I guess
And of course,
that's,
Christopher Waller is
Henrik,
one
I
of
guess
people
that's the
that has been
classic.
on
If the
Bloomberg
dollar's
TV
worth
right
less,
now
things cost
for a
more
future Fed
to buy.
position as chair. Now, how much risk is there from now until May of next year?
I know, it's
when
out of control.
the
Did you
Fed
get-
chair does
did you
step
get smacked
down
around
in terms
this
of
morning?
Who the president chooses, what the strategy is in between,
Yeah.
and all of his allies.
I don't know why it did what it
for
did.
change in the Federal Reserve's course.
I mean, the news was good at 8:30, but that
we
was an
try to
hour
focus on
ago.
the fundamentals,
Yeah.
right? What's the growth of the economy? What are the inflation risks? And we actually think that inflation will remain relatively under control.
I'm
We
loaded
try
back
not
up.
to
I
worry
got
about the
I got my 5 more
politicization, if you will.
250K
If you think about,
evals.
the role that the Fed has here, it is a very judgment-based role. I mean, they have to look at, where inflation is. They have to look at
I'm
where
going to try and do 10
employment is,
contracts
and
on
if
the
anything,
NQ
they've sort of
for
faded towards
25
focusing
points
on that
each, and
employment
that'll get me
picture
my 15
as one of the
grand.
big
So
markers for how they're going to pursue policy going forward.
I need
So
an
we still think
entry
that the
with
Fed
10
is likely to
contracts.
cut
I need to get
before the year
25
is over.
points
In
3
fact,
different
we've
times.
penciled in as many as 3 cuts. So we think that will be
Sounds pretty easy
constructive
when I
for
say it like
elongating
that.
this recovery.
Lori, can you continue to ignore the politics, especially if we get one of the Kevins in?
Hey, Henrik, why do you think the dollar's going down? Do you think it's that big bill that we signed?
One of them at the chairmanship,
Like the $10 trillion bill or $5 trillion or whatever it was? The big, beautiful bill?
What might happen does not necessarily manifest in what actually happens when various parties get seated. So we're going to wait and see how the economy unfolds, how employment picture and inflation dynamics unfold, and then we'll watch and see, as some of these other things play through.
I want to talk also about a part of the market here that's been a little underloved. And if you are still seeing the market pricing in at least one rate cut this year, if not 2, then the Russell 2000 you would expect to be performing just a little bit better. This did get a bid in the center part of the year so far, if you will, but it's still only up less than 2%, about 1.6% on the year. Do you believe that rate cuts can provide the boost to this index that investors have been waiting for?
Well, more importantly, again, the economic backdrop improving is the number one thing that will boost that market. And we've actually recently upgraded our allocation to small cap stocks on the back of that improving economic trajectory. Rate cuts would be an additional buzz, if you will, but it's not necessary. We don't think that rates are necessarily restrictive right now relative to the underlying economic strength. So while we do forecast cuts, we'd like to see cuts. We don't think that's necessary to let small caps unleash a little bit of power here.
Laura, I mentioned this to Shonali earlier.
Starting to grind down. I wonder if today we get back some ground.
Pointed out that retail share of trading volume has gotten back above 20%. That was the kind of levels you saw immediately after the pandemic and in the 2021 meme kind of craze. It's these sorts of things that people point to, saying things maybe look a little bubbly, maybe a little bit of frothy. Does that concern you at all? At what point do you say, I know you said at the start you're not worried about valuations. What do you look for maybe to start getting concerned again?
Well, a couple of things that we would look for to start getting concerned again is that suddenly the employment picture deteriorates massively. And we have seen some recent high-profile examples of companies that are announcing layoffs and things like that. So the employment picture is one that we are watching probably the most closely because that will feed into consumer sentiment and into consumer health. The other thing that we are going to keep watching, though, is that inflation picture, because again, if you start to see inflation get out of control, whether it's because there's robust underlying growth or because something else happens, that would be something else that would be destabilizing and would probably put upward pressure on rates. So we still focus on the fundamentals.
Lori, we thank you so much for joining us. Happy Friday to you. It's the end of a long week, and again, next week is another busy one as we continue into earnings.
Hey, Henrik, do you think that has anything to do with like people moving to
Let's
bricks?
get a check on the stock market right now because we are looking at
Like
some
people are not
green
using the
and
dollar
in
as much?
solid territory, almost 0.2% higher. And when we take a look at the movers here, it's very interesting to see your actual biggest decliner on a points basis is Netflix. So they've given investors largely what they want, but they are still down. Now it looks like about 4.6% into the market open. So pretty fascinating.
This
there.
is
This is the market
this
trading
is
on
what the
valuation.
ES
On the
is
flip side,
worth in
Tesla
euros.
is the largest points mover on the upside, followed by Amazon and Nvidia. So big tech performing in a very mixed way today. I would also point out American Express is
After Trump
the market
started
opened.
the dollar.
They also impressed on a lot of levels, but not quite enough. I want to flip up the board
March.
here, also look at sectors and see what we're taking a look at. Yields are lower on the day, yet you do have that providing a boost.
When did he announce the tariffs? Was that February or March? That was March, wasn't it?
But utilities, here you have it, your biggest gainer. It's almost 1% higher to help that index. But you could see broadly, Danny, we're looking at broad-based gains in the S&P 500 to end the week. So a very healthy trade, even if you do have a mixed set of outcomes from this earnings season in terms of an investor reaction.
Very true. Mag 7 as a whole, though, is still gaining today. Shonali, should that
That's when we had the big dip. When the tariff stuff first started coming out.
Of 2023. But as you pointed out, Netflix, it isn't there in the Mag 7, maybe for the best today. Netflix fortifying its image as a streaming leader as it reports a strong quarter. Coming up, we're going to break down the details for you. You're watching Bloomberg Open Interest.
This is interesting. No, it's going to be a little bit. We got news at 10. We got that Michigan sentiment at 10. This always moves it. I always see a move when they drop what the sentiment is. Price, yeah, I know. I know it's tough to get something reliable on Friday. All the big players are already on the weekend. That's interesting.
I'm Alex Rodriguez. And I'm Jason Kelly.
What do you think it is?
Back with more episodes of our show,
Henrik.
The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics.
And you think just Trump being Trump is doing it, making people nervous?
When you're competing,
you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important.
Well, now
insights.
now there's a cost. They can't just use our markets and get paid for doing it. Now they got to have a reasonable deal. And they just don't want to do it because they set their whole economy based off taking advantage of the U.S. So that's definitely the short-term pain. Eventually, they're going to have to come to the table. Because where are they going to sell their stuff? They're going to sell their stuff in China?
Not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Jumpstart your trading day on Bloomberg Open Interest.
Yeah, things aren't as good as they used to be, that's for sure.
To Wall Street, Main Street, the C-suite, and beyond.
Things aren't as good as they used to be.
Growing their market.
The great companies in the U.S. are the companies hitting the cutting edge. That's a different story.
Get the inside track on what's buzzing in markets
with the players who are shaping the
A balanced trade deal is good for the U.S.
What the industry is selling. Join us on Bloomberg Open Interest every trading day, only on Bloomberg.
We should be able to sell in other countries if they're selling in our country. So if Vietnam is making all this clothing and all this other stuff and bringing it here to sell, we should be able to make clothing and sell it in their country. Right now, it's not that way. Everybody's bringing their stuff here and we don't make anything anymore. So he's trying to reverse that. And it's painful because it's a complete shift in how the world works.
Analyst action that is in focus. First up, Chipotle, that gets an upgrade to a buy at BMO Capital. The analyst says it's well positioned for growth in the second half of the year.
We need to get out of these wars, so
next up, Abbott Laboratories
bring everybody back home.
An upgrade for them. It's from Jefferies. The analyst saying the recent pullback is too punitive, and the analyst likes the company's fundamentals, up less than 3%. Finally, Wall Street weighs in on Netflix after it beat expectations, raised its full-year
definitely shaking everything up.
This morning. Piper Sandler, Morgan Stanley, and Wells Fargo are among the banks raising their price target.
He says some crazy stuff, boy. And then he'll change like 30 minutes later. He did it the other day. It's something about, it's the Fed. Powell, everything out of the White House says we're gonna get rid of Powell, and then on the tarmac in front of the Air Force One, he says, "No, we're not going to try and fire Powell."
I mean, everything that we had hoped for, I think
and the market doesn't know what to do.
I think what we're really seeing.
And then you get news reports later that they're trying to figure out how to get rid of Powell. Powell should have lowered interest rates, though. Powell is fighting him.
Raise guidance both in terms of revenue.
The dollar probably wouldn't be on the decline as bad as if the interest rates were lower, because money would start to move faster.
Tending towards FX, currency headwinds rather than fundamentals, but still fundamentals extremely strong, Danny.
So what does this mean in terms of the right valuation for Netflix? To the extent that you see investors kind of getting jittery about how much it has run up, what would it be doing that would justify that valuation to be much higher in the next year?
I mean, it's doing everything right, Sonali, as of right now. Yes, some investors may argue that at nearly 50 times forward PE multiple, this is, a very rich valuation. But
he can't. He's putting USA into the ground. After that, all the rich can take over most everything for a bargain. Well, that's what the Democrats been doing for years.
But really, what we should be focusing on for Netflix is the second half. And
what he's trying to do is he's trying to open the factories back up in the United States so regular people can have a fallback job in the factory. That's what he's trying to do. We're trying to bring all this manufacturing back into the United States. And then if you want to sell something here, you're going to pay a tariff if you're not going to let us sell something in your country. factory.
That should play out through 2025, and
So he's kind of reversing everything. So that
business, and that definitely will help.
So that there's an actual future here. It doesn't.
Netflix in terms of operating
So
metrics
in
is,
another 6 months, I
revenue
guess
growth,
we're going to
right?
see
And
how
we
all
saw
the
an
tariff stuff
acceleration,
works out for the
of that
U.S.
revenue growth, and whether they're going to be able to deliver,
But
those
as far as
13,
I'm
15%
concerned,
revenue gains. And
I got to
think
be
they
honest with
absolutely
you.
will. And then, of course, the operating margin.
We don't need to
They
buy
took it up
cars
to
from
about
Europe.
30%. I think they can go.
We'll just
very,
make our
very much
own.
higher. I think it's a pretty conservative outlook, just kind of looking at, what they've
But
achieved
who
so
dare buy
far.
anything from
So they're
there?
it looks like they're keeping
From where?
some dry powder almost for the fourth quarter, just kind of based on their results for the first half as well as for the third
Buy
quarter
anything
guidance.
from us?
But again, it's a little bit of wait and watch. But I think valuation definitely will be supported just by the strength of their fundamentals. And then you look at free cash
Reopen
flow.
companies?
Next year, we're looking at
You mean
something
in the
like this year,
U.S.?
we're looking at about $8.5–9 billion in free cash flow. Next year, $13 billion, and they're deploying a lot of that towards buybacks. So I think again that really provides some valuation
Well,
support.
we'll buy our own shit instead of buying the stuff that's being imported. China would go bankrupt in another 6 months if we just stop buying all the shit that they make. We'll just make it here and buy it from ourselves. That's how it was in the 50s, 60s, and 70s. We started exporting all the factories in the 80s and 90s. So we'll just put all the factories here. We'll make all our own stuff, and we'll buy it. And the other countries, they can go find somebody else to buy their stuff. If they don't want to buy our stuff, that's okay. We can support ourselves. You know, that's how I see it anyway.
Focused on different parts of the market, right? So Netflix really more focusing on
China would still be a third world country if we didn't basically move all of our manufacturing into China.
Generated content. I think with the use of AI, we are going to see, AI for content creation
Inefficient.
kind of level the playing field a little bit.
You know
more.
what?
But the way that
Honestly, American-made stuff is better. You pay a little bit more. But if you're supporting the country, then that's fine. Things are just going to be a little more expensive for a while. But with the leaps in 3D printing and manufacturing techniques, I don't think it's going to be as bad as people are trying to make it out to be.
Talking about another part of the investment universe.
It can be efficient.
That has been attracting a lot
And
of
plus,
interest
he's making all these deals. There's literally hundreds and hundreds of factories, if not thousands, being built right now and set back up here.
For the sector. More on that next in your ETF Friday.
And we'll just buy our own stuff.
Open interest.
We don't need anyone to buy stuff from. We'll just buy our own stuff. And honestly, I'm not into the slave labor market. You know, I'll pay a little more if I know that some 15-year-old kid in a Chinese factory making my sneakers, you know. You want slaves? All right, Snooze says it's easy. Snooze says he wants a slave factory. For the poppy fields. Yeah, and they're happy. You just be like a plantation in the South in the 1800s in the United States. And yeah. You got a huge factory with all the housing and people and all the slaves behind it. You drive up to with one Maserati out front.
Income Fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
100%. Win-win-win. Everybody's happy. Do they get food and clothes? You get the Maserati and a trunk full of cocaine.
2 times a day, every trading day. Balance of power at 1 and 5.
The globalist business plan. That actually is the globalist business plan. That's actually China.
Stories of capitalism from business, markets, economics, tech, and climate. Each week,
that's fine. Buy your own stuff. Stop sending it here. And we'll just buy our own stuff.
It's a mission.
You don't have, you don't have to sell your stuff here. Go find somebody else to buy it. That's what Trump's saying. Is we'll just make our own stuff.
It's what you need to think about.
And the thing is, in the United States, if
whenever and wherever it happens.
if there's competition and it's set up so there's tax benefits, there'll be competition here to make better stuff. So if somebody's making a junk product,
This is Bloomberg.
somebody else will open a factory and make it better, and that's the spirit of competition. So
The week in green territory, it's up about a tenth of
the
1%.
the EU and all these places are mad is because it's been a lopsided trade deal for so long. You're literally making billions and billions of dollars from selling stuff to us, and we're not making anything. And now it's just all he really wants is, like, let's say California makes 1 million bottles of wine and France makes 1 million bottles of wine. As it is now, France sells 1 million bottles of wine to us, but we can't send ours back. No, it's not. Stop that. It was not. You were killing us. It wasn't equal. Come on, dude. It wasn't. And why do you care if it's not equal now? What difference does it make? The only people that are crying are the ones that are losing their deal. Your deal's so good you don't want to lose it.
On that point, Shanali, now crypto assets as a whole, they have surged past $4 trillion for the first time. It is what you mentioned.
None of the deals were equal.
Legislation yesterday. Bitcoin, though, it is falling. That's down about 0.5%.
It's not World War II anymore. We don't, it's not after World War II. All these stuff was set up to help Europe rebuild after World War II.
How big of a boon is this to the industry?
Oh, hey, Danny, good morning.
So basically, our economy rebuilt all of Europe after World War II. And then we basically rebuilt China. And now all we want to do is, if you're good on your own, then we can just kind of keep some of our money if it's okay.
So even for the altcoins, just because, they're now going to be sort of legitimized. This is only just going to open up the product pipeline.
Trump made those in his first period.
Anyone that's been following was obviously
made what? The trade deals?
Ethereum. That's where it stopped. This is now going to just open up the door for all these other filings. So, it's not really hard.
So you're saying he made some trade deals, and now he's going back and making other trade deals, and you guys don't like it?
Flows this week leading up to this passage, so it's definitely caught the eye of.
I don't know, man. I'm an American, dude. My family's been here. Like, my family moved from Ireland in like 1880s.
And I've got to say, I get off the show and I go listen to him on Twitter sometimes to hear about.
I've seen what happened when all the factories close up. Like where I'm from, it's all empty factory buildings that all went to China and Mexico. And now people are starting to go in and build those again and like try and there's money coming back in for those factories to start working again all over the place. So that's what I'm for.
Other issuers have filed for staking. Which always kind of baffled me because staking exists in other regions like in Europe.
There's large parts of this country where there's no hope for young people.
Open up the door for more staking. A couple of the issuers have already sort of, jumped that gun with some of the new filings. But I get big.
Now I see, regular paying jobs coming back to where at least you got something to.
Athanasios, we thank you so much
to make a decent living off.
Athanasios Serafagis of Bloomberg Intelligence. And tune in to ETF IQ on Mondays at 12 p.m.
If you can't figure anything else out.
A little bit of crypto and a lot on the broader indexes as well. Speaking of checking on stocks here, of course, we've been talking about it. Ending the week in the green, despite all that headline risk we started with, we are back above 6,300. It is that moment that we have been waiting for. And some of the stocks in the green include Chevron. We're going to be speaking to Chevron Chairman and CEO Mike Wirth next. Stick with us. This is Bloomberg.
So I'm working a lead going back and forth, trying to keep up with you. So do you have a market for all the stuff you're selling us? If it became twice as expensive to sell it in our country, do you have other places you can sell it? Okay. Well, then sell it there. You know, I think that's what he's saying, and then we'll just make our own stuff, and we'll buy it here and support our own people for once in the last 35, 40 years. I mean, that's all.
And live my very first independent life.
You just won't make as much on it because the Americans can pay.
By the memory of the farmhouse, the philosophy they believe, yin yang 5 elements, the concept of the life, of the happiness. They build this kind of roof like boat.
You know, access to our markets is like the golden goose.
Rice. Everyone should be happy if
for somebody making a product
something to eat,
on a large scale.
Someone to love.
So you're defined a lot by your past experiences.
Yeah, actually, I'm lucky man because not everyone.
But I understand it is kind of in your face type of attitude.
Poor and peace, poor. And
yeah,
rich.
it's fine. We don't agree, and it's fine.
My life, rich by experience.
There's an appreciation for what you have now.
And therefore, peace is most important.
We don't agree, but it's fine.
Today for Vietnamese, and I think for human being of the world.
I've lived through watching all those factories close down and all the jobs go to China and Mexico. And then all the products China and Mexico make, they ship back here and sell, and then they ship all over the world. And did you know Japan, not one single American car is sold in Japan?
It's a multi-trillion-dollar industry. We'll show you what's happening.
Oh wow,
ETFs
look at this.
Like no one else. ETF
Oh, that's at
IQ
Michigan
only
sentiment.
on
All right, we
Bloomberg.
disagree. We can exchange our points later. Let's watch the market. All right. We got massive VWAP chop right now.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate
See
high
what the
yield.
sentiment
Two
is.
big-time blue-chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Oh, so
welcome to Bloomberg Intelligence. I'm Lisa Mateo. Paul
it beat the forecast, it looks like. Or 5-year inflation 3.6. So it's lower. Lower.
Excited? The ladies rolling things here? Okay, here we go. Some big news, right, Emily?
Expectations are higher.
Coming up, Bloomberg, Sonali Basak, Danny Burke.
This is all good news. We've had nothing but good news all week.
So stay tuned in a few moments for that. We also have Drew Redding, Bloomberg Intelligence, U.S. home building analyst. We have housing starts.
All right, so we just got to let the chop settle in.
Geetha Ranganathan, Bloomberg Intelligence analyst,
Look
on
for our entries.
Netflix earnings because the shares are down. So we're going to find out. All right, but first we have to get a Bloomberg Business Flash. Mr. Charlie Pellet, take it away.
Hi, thank you very much. Welcome on board. We got Netflix down now by 4.1%. This Bloomberg Business Flash brought to you by Interactive Brokers. Trade over 10,000 U.S. stocks and ETFs, U.S. index equity options, equity index options, U.S. treasuries, and more on your timetable. Learn more at ibkr.com/around-the-clock. A solid start to the earnings season, fueling gains in stocks. Fed Governor Christopher Waller says worries about hiring in the private sector have driven.
What are you thinking, Hendrik, on the ES? What are you thinking, my friend?
Waller made the comment in a wide-ranging interview aired right here on
We got the fair value gaps above us. We got the historic high above us. This big thick red line is his historic high. And these fair value gaps, we're still punching above the VWAP. Maybe we run out of steam today and roll over.
If he says, Chris, I want you to do the job, I'll say yes. But he's not talking to me, so That's it.
We're below the VWAP on the NQ. We're in VWAP chop mode.
Another 13 at a record up 0.2.
Oh no, we just drifted below on the ES.
1/10. Nasdaq up 0.2.
All right, so I'm probably gonna wait for probably another 45 minutes to an hour before I start looking for my entry.
That is a Bloomberg Business Flash.
All right, thank you.
I'm
very
working
much,
those
Charlie. Okay, so we
250K
just talked about before
evals that I
Chevron,
have.
this arbitration battle with
I'm gonna
Exxon.
try and go 10 NQs and try and get 25 points at a time. If I do that 3 times, I'm qualified. I'm almost thinking shorting off the VWAP. Yeah, I'm thinking, man, look at the NQ.
Welcome now, our Bloomberg television and radio listeners.
But you don't know, you kind of got to confirm, you know what I'm saying? We got to have it confirm and start running lower. It could jump right back up on top of the VWAP in this range again.
We are now joined
We
by
kind of
Mike
got to get out of this range. This range right here to right here.
You must be so relieved. This has been a long path to getting here. Your stock has really
Right
felt
here
that time pressure
right
as
here.
well. How do you feel now that the deal is done and what it could mean for shareholders moving forward?
Well, we're pleased with the decision that came out of the arbitration panel this morning. We're also pleased with the decision that came out of the FTC yesterday regarding John Hess's eligibility to serve on Chevron's board. And this really helps create a premier international oil and gas company. We are one of the largest producers in the world. We've got the highest cash margin in our upstream business of anybody. We're one of the largest producers of both oil and gas in the United States, largest leaseholder in the deepwater Gulf of America, and have industry-leading free cash flow over not just the next couple of years, but out into the next decade now as we combine with Hess. So it's good for us. It's also good for our industry because this was a transaction that kind of, as you say, impacted, I think, our investors, the uncertainty, and it hung over the industry a bit because the question about what would it mean for potential future transactions is one that people were paying close attention to. And so I think having that resolved and affirming the industry practice that asset level rights of first refusal don't apply in a corporate level M&A transaction is one that's going to be very important for our industry.
I mean, Mike, one of the other reasons this industry couldn't keep its eyes off this case is because you had two giants, you and Exxon, really battling this out. But it doesn't end there. Sonali and I have been discussing it this morning. Now you have to work with Exxon. You have a JV in Guyana after this. How is that relationship going to be moving forward after this case?
Well, we work with people all around the world. Our industry is built on partnership because the scale of our
You know what? You can tell when somebody's kind of
partners to help
when something's kind of shady. I got somebody in chat wanting to
opportunities, and so partnering is very familiar to us.
wanting to know if QuickBooks puts their logo on a printed pay stub.
Good partner around the world. We work with Exxon and other places around the world and have for many years.
I'm not sure why that
In
matters.
Guyana in particular.
Only matters
Most of
if
the
you're
people
trying to
that will be involved in
run
this
a
are going
scheme.
to be legacy Hess employees who've got years and years of history working together with CNOOC and Exxon on this project. There are good working relationships at that level, and all three companies have worked together to create the
Yeah, I know. It's kind of shady. You talk to so many people, you can feel out the shady ones, man. It's like, what are you really doing? You know my friend Snooze at the cocaine factory? He running payroll.
When was the last time you talked to Darren Woods? And what can you tell us about the relationship that both of you are building in results of this JV?
Well, you know, we see each other at industry.
How you looking, Henrik? You looking to get in, or what are you thinking?
We speak from time to time, but this has been a sharp difference of opinion. We believe that a plain reading of this contract, which is a confidential document, was very clearly, as I described earlier, that a right of first refusal would exist if there were a transaction at the asset level, but not at the corporate level. The arbitration panel has affirmed that interpretation, and so we'll move forward from here. But look, it didn't have to take this long. I wish it would have gone differently. We tried early on to find a way to resolve this and thought we were working together in good faith, and then abruptly we're notified.
Oh, it's a private business owner.
Parties had decided they wanted to
Now, I haven't seen him today.
At that point, you know, we believed we had
Oh, Ladioff's on. Hey, Ladioff, you out there?
It's taken some time.
Well, you mentioned the other win you had very recently was the FTC allowing you to put Hess onto the board. Is this a much more easy?
You might be taking a nap.
Environment for you to be operating in right now?
He trades
Well,
around the
it's
clock.
certainly gonna change
Yeah, this guy, he's got a business. It's just like him, and I think he wants to print his own pay stub, so it's a legit proof of
wants to
income.
use energy as a competitive advantage for our economy, which it is. Our country is blessed with an abundance of energy.
So he wants to fake
resources
pay
and
himself,
it's not just oil
and then
gas,
go
it's
buy a
sun,
car
it's wind, it's coal, and
on credit.
go on. The agricultural resources that contribute to renewable fuels. And this is an administration that wants to use those for the benefit of the American economy, for the benefit of the American.
Hey, you out there, Ladioff? You up or down today? What's your
And I
percentage?
think that's a welcome change for our economy. It's certainly a welcome change for those of us that operate in this industry and are committed to the U.S. And so I think it's very, very positive.
You mentioned a little earlier
Yeah.
that it removes a lot of uncertainty when it comes to mergers
Yeah.
and acquisitions.
That's kind of what
How
he's-
do you think that this will change the competitive
And I know all the
positioning of
schemes.
the industry through the remainder of the year into next year as many of your rivals
Make yourself a
or
pay stub to
partners
prove for proof
reconsider
of
what their
income.
footprint should look like?
That's hard to predict. That's kind of a hypothetical. I can't really speak on.
He's asking me, but is it a real?
But I do think that the clarity
Well,
that
as long as you've got
that are written
like an
to
acceptable
govern
credit
these,
rating,
ventures that we go into.
it's actually not hard. As long as you got an acceptable credit rating and you can prove your income,
assets out of a corporate level transaction is an important signal for our
you can
industry.
buy whatever
Companies
you know
this
your
industry,
income
people
will
take risk and build
qualify
companies
for.
from nothing. They grow them. Oftentimes, the way
So,
that they get rewarded.
you know, if
for
you've
that
been
is by
somewhere
selling
6
that
months
company. And so it's the nature
and you're
of our
making,
industry
you
that
know, whatever,
transactions
50,
are
60, 70,000 a year, and you can prove
that
that
functions.
with
And
your
something
pay
that
stub, and then
change
they'll,
the historic practice, create some
they can
uncertainty.
call
So I think
a
when that
lot.
happens,
Well, I
we
used to be a
resolve
finance manager in a car dealership. I've done thousands of
more confidence
loans.
for people going
Yeah, pay stub. So that, and you'll call for proof of income, but once you're in the system remembers like where you work. So they'll just verify that you're still there.
improve your asset base.
And
Every day we produce
if you say, like, let's say I work at Intuit,
again, and so you have to
and I buy a car today, and in 5 years I still work at Intuit, I just fill out the credit application, and if it all matches up and my credit score is good, they'll give me whatever I want. It's really not hard to buy a car here.
for decades.
You just have to pay your bills.
But the industry uses technology and efficiency to continue to keep the cost of energy very affordable as an input.
You know, worst case, if you don't have good credit, they're gonna wanna like
I think all of us
have,
in this industry
you know, pay stubs. They're gonna call and verify your employment. They're gonna make sure they know where you live and all that kind of stuff. But if you got like a 700 credit score or higher, you basically walk in and get whatever you can afford.
Around this time, we were above 80. How does that change the calculus for how you want to address the industry? Remember, in the onset of the Trump administration, this was a market perception that drill, baby, drill would be the 3 words that define this year. But that's hard to see with this type of suppression of oil prices.
Well, we respond to market signals, and our company lays out a program. We invest for the long term based on a long-term view of prices. What prices do in any short period of time can influence the cash flow of the company and the short-term financial results, but they don't have a material impact on our longer-term plans because we develop assets over a period of years and often decades, and their lifespans are oftentimes many decades. So we take a long-term view on supply, demand, technology, competition, and price to set our capital spending plans. And they really don't, absent an event like...
He doesn't even want the accounting software. He just wants the payroll program.
We tend not to move our investment plans around over shorter-term movements in commodity prices.
Mike, we're weeks away from earnings season, and on the heels of a deal finally closing, Mike Wirth, Chairman and CEO of Chevron, really a new day for the oil industry here. We'll be keeping an eye on how it plays out.
Rates are still high here, though. Like when I was finance manager, you could get a 1.9% interest rate for 72 months on a new car at like 130% loan to value. It was stupid. Yeah. Yeah, that was a while ago, though, dude. It's like now it's 6-7%.
The easy part is
that really jacks your payment like 150, $200 a month, man.
Transaction to close. I don't really think it was much in dispute.
Yeah, I do too. I just bought a townhouse.
All have said, and even on
about a year and a half ago, our rates are really well. It was the rate. The rate was the rate when we bought it. It was just the rate. But it's like twice as much as the last house I bought.
So glad to see that that viewpoint has been vindicated.
So around 5, yeah. Yeah, I think it's 5 or 6 right now. I haven't even really looked lately, but it really should be 2 to 3. That's what Trump is getting all over Powell about, is he's holding up our economy because he hasn't reduced the rates to let the money move. I mean, the difference between a 5% and a 2% rate is like, that's a lot more buying power, you know?
And that is the Bakken. What do you do with
then you got inflation on top of that, from all the money they spent during the pandemic.
Likely to grow much because of its
things have gotten really expensive in the United States in the last 4 or 5 years. Prices have doubled on everything.
Fund the Guyana development. It's a large resource. It needs to eat up a lot of cash.
And this is a nasty short.
So do we continue down with that path? I think that is a key consideration.
All right, so we're just looking for an entry now.
Has a larger balance sheet, and so it may not need the broader volume from that Bakken asset, but there's also other.
Hey, Henry, let me know when you get in.
There's a midstream piece that is tied to that. What do you do with that? So lots of decisions that need to be made.
I think on the NQ, if we get a pullback to this fair value gap, I'm going to go short.
Delayed 20 months, so
what do you think, Snooze?
For 2 years, your long-range capital planning has been put on.
As long as my box is on.
For 2 years, but now it seems that this piece of the
volume's too high right now.
Improves the profile of the company significantly.
Hey, so one of the things that the Chevron CEO said today in our Bloomberg TV interview is that closing the Hess deal is also good for the oil industry at large. And I'm curious what you make of that statement and whether you agree that this is good for the oil industry.
Well, think about it. You have a much larger balance sheet, willing and able to deploy capital across a broader spectrum of assets. So, Hess was a smaller enterprise. In a way, it was somewhat capital constrained, not to the same level of on relative basis to Chevron. Chevron has more heft to put behind the asset, and more capital to put behind the asset. This isn't the end to the developments for Guyana. There's much more exploration, delineation, development that is likely to occur. It is a wonderful resource, probably one of the most prolific and potentially lucrative offshore development that we've seen in many years. So it is good for the oil industry insofar as it provides an additional mechanism for volume to come into the global energy value chain.
Now, Vince, in the last 30 seconds or so we have left, you mentioned the oil industry. So big oil in itself, isn't this where companies usually partner together, to help minimize risk, share costs, things like that?
Yeah, it is. And this is what the industry is built on. And that's why we always
This is
felt
crazy.
that this.
I guess we're gonna have a.
this
I guess we're gonna
arbitration,
give back
this
all the
case
ground
was,
today.
Somewhat
I gotta
dubious,
figure out where to get in.
because if you shut down this acquisition, you call into question the framework of many deals.
Oh, we just lost our
across
cloud
the
on
whole
the,
energy value chain.
or we lost the trade box on the
Bloomberg
ES.
Intelligence Senior Equity Research Analyst, Oil and Gas.
Volume's
Thanks so much
high.
for your
Holy shit!
insight
That
on
last
that.
candle had
Coming up,
12,000
we've got a lot coming up.
contracts in
We'll
it.
start with Julie Beal. She's Chief Market Strategist, Portfolio Manager, Kane Anderson and Rudnick. She's going to talk about that.
Hey Henrik, you still out there? You still my friend?
Earnings today. What does that mean? Then we'll talk with Drew Redding, Bloomberg Intelligence U.S. home building analyst. We did get some data in. Housing starts rebounded in June. Apartment
You can say anything you want here. I don't care, man.
So Drew's going to break that all down for us. So stick around. We've got a lot more coming up. I'm Lisa Mateo alongside Emily Grafeo. This is Bloomberg Intelligence.
I tell you what, though, Trump is fucking up. Okay. Okay, that's fair. I tell you what, though, like all the people that voted for Trump, he's really fucking up on this Epstein file stuff. Like the mixed signals he's given for that. People are not liking it. We wanted to see people in handcuffs for all the corruption that's been going on. Well, they're saying, you see, the Democrats and Brennan have had control of those files for about 4.5, 5 years now. And they're saying that they went in and deleted all the stuff about Democrats and put a bunch of fake stuff in there. That's not real. So it's been all deleted and redone. It's like not even the original stuff anymore. You know, it's the same thing with the Russia collusion and the last 5 times they tried to impeach him. It was all made up stuff and they've proven it. But nobody's in jail yet. Yeah, I know. They should put her right on the... They should put her on national TV. They should put her on 60 Minutes. Why is she still alive anyway? She's a Mossad agent, you know. It was all blackmail. It was all like intelligence agency blackmail stuff. They would trick you into having, you know, relations with somebody you shouldn't, record it, and then hold it against you so you do what they want. Yeah, I know. That's what everybody's saying, though, here, man. Yeah, CIA. CIA is the worst, dude. Like, the world would be a better place without the CIA. Yeah. The CIA are basically, yeah. Like, I don't want to start saying some stuff that gets me shut down forever. But that's how John F. Kennedy, President Kennedy, got killed, is he was going to break the CIA up into 1 million pieces. And he got himself a nice ride through Dallas. But these intelligence agencies are the ones really pulling all the strings, and they don't answer to anyone. That's, you know, there's a lot of people that have proof that it was the CIA that's been trying to kill Trump when they shot at him in Pennsylvania, because he's getting in the way of all their schemes. All right, we're getting a pullback here, guys. A joke about what? the Trump assassination attempt? Like the 10 assassination attempts? Oh, yeah. Dude, it was totally stupid, man. They knew he was up there for like an hour. See, yeah. They knew he was up there for an hour. They told everybody to stand down until he took the first shot. And I don't know how he missed, I got to be honest with you. He was only 150 yards out. I could have hit somebody with open sights from that distance.
Oracle Cloud Infrastructure for new U.S. customers.
Is just it was some kind of miracle that he missed. I mean, there were literally people pointing on the roof while he was climbing up trying to get security over there. And the FBI was actually in the building that the shooter was on top of. Yeah.
Swinging between gains and losses, up now by 1 point. Little change there. 62.99.
I'm telling you, there would have this country would have been a civil war. You don't understand. You don't understand because you're not here. But
10-year, 4.43%. The 2-year, 3.87%. The 30.
The world would be a different place. The world would be a very dangerous place right now if he would have got hit with that bullet.
68.55 a barrel. This on a day when Chevron won its arbitration battle with ExxonMobil and closed its $53 billion deal to buy Hess Corp.
The landscape would have changed
Mike
here.
Worth was on Bloomberg Radio moments ago talking about the deal.
Well, we're pleased with the decision that came out of the arbitration panel this
Yeah,
morning.
so yeah, all the slaves in China would still have their jobs now.
Yesterday, regarding John Hess's
You're right, Henrik.
eligibility to serve on Chevron.
All the little kids making Nike sneakers would still be employed.
A premier international oil and gas company.
Chevron
Yeah, I know.
CEO Mike Worth interviewed moments ago here on Bloomberg Radio. Among the companies out with earnings today, among the financials, American Express down 3.7%, Schwab up 3.5%, and checking Ally Financial down 3.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you very much, Charlie. This is Bloomberg Surveillance. I'm Lisa Mateo alongside Emily Grafeo. And we've had some upbeat earnings, some good guidance from some major companies. We've had more economic data. So what does all this mean for the markets? Here to tell us more about that is Julie Beal. She's Chief Market Strategist, Portfolio Manager at Kane Anderson Rudnick. Julie, thank you for joining us this morning. Want to start with earnings. So let's go there. Not bad. A lot of these, though, were tariff-sensitive companies. So what does that kind of tell you?
I think that right now what we're seeing is that companies are not 100% sure how tariffs are going to impact them because they don't 100% know what the tariffs are going to be. And so they're in a really difficult position where they're trying to plan their businesses to have the most amount of flexibility to adapt to whatever comes out, right? Corporate America does a wonderful job of being able to be clever and adapt and figure things out. What's toughest for them right now is that they just don't have clarity on what the rules are going to be.
Are you baiting me in?
I also think there's a recognition.
You're baiting me in, Henrik. I can feel it.
Look, let's not assume
You're baiting me in.
Let's try to assume that things will come to a more reasonable level and that we can.
Do you know how much corruption they found? How much money being stolen? You know the Treasury Department would just send money out as requested
We just don't know.
with no reference on what it was for and what was happening with it. I mean, that's how the Democrats were funding all of their campaigns, was through money that was being stolen. Everybody's pissed. All the people that are pissed right now are the people that had some kind of side deal or scam going that Elon Musk put a stop to. Those government employees, a lot of them were claiming unemployment while they were still working, and they had second jobs. All the remote employees, they weren't even working. There's a lot going on with that. Feel like, Henrik, are you trolling me? Are you my first troll? Are you an Elon? Are you an Elon fan, Henrik, or do you not like Elon?
Right, 90 and 90 is not a realistic assertion. We can have MOUs and agreements, but I don't think.
But who are saying all those things? Trump people?
That are long-lasting in nature, and so.
No, it's just fact. He publishes everything they found.
And deciding, look,
like you can go to the Doge government website and see all the money they've cut, and they're all redundant jobs that he cut. It's just so bloated. It's hard to explain. There's people that just do nothing all day, making $100,000 a year on the taxpayer dollar.
But for the most part, that's still strong.
That's why the dollar's going down. I don't know, dude.
Now, Julie, there's been a lot.
I can understand why people just don't believe anything.
Some are saying keep rates steady. Others saying we need to cut now. So
I would be okay if 90% of the government got fired tomorrow.
Well, I think
I'm a small government person.
Kind of interesting because I think the
if they're that smart and deserve to get paid that kind of money, then they should be fine.
and they've come down quite a bit from the most
They
recent
should.
meeting. So that's positive.
Well, you see, they signed that. Look, I'm that big beautiful bill stuff. I'm not really for a lot of
inflation
that.
is heading. You have enough here to say I want to hold off because we don't know what the
But our
tariffs are gonna
politics
be.
are so corrupt.
And,
It's
you know,
like you gotta put junk in there in order to get somebody to
not as
vote
big a
for it.
deal. You can say, look, but inflation expectations have already come down.
That was a
Some
huge
things
spending
are
bill. That's not going to
But
help
we know
inflation and help
that
the
Fed
strength of the
meeting, there were
dollar.
7 governors who voted to have no interest rate increases for the
We
rest
getting a
of the year. and
pullback?
There's only 2 more who want 1, right? So that's out of 19. And that tells you that there's still a certain amount of resistance.
But all the
to
Doge cuts, if you go to, I think it's gov.doge or something, or doge.gov, everything that they found, they put on all the contracts they canceled and all that stuff, that it's been put on there. Like the USAID stuff,
That's not a normal place for it to be. It felt normal
that was a,
because we were there
they,
for a really
they
long
didn't
time,
report
but
to
it
anyone.
isn't
That was basically a
actually normal. That's
clandestine
not
entity
the
that
natural
was
rate for
doing
interest rates.
regime change in
Staying
other
on the topic
countries.
of interest rate cuts.
So they
Fed
cut all the
policy
funding to
today,
that, so that would
the
stop.
stock
It was
rally
basically an arm of the
needs
CIA.
2 rate cuts in 2025 to kind of continue this upward momentum? Or can we
You know,
still see
everybody getting
stocks
kickbacks from that
continue
money. Those are
here
the people
stronger if we
complaining
don't
about it.
get rate cuts?
You know, I think it's more a function of earnings than anything else, right? But the rate cuts are going to be more impactful for smaller cap companies. Those are the ones who are really going to benefit from lower interest rates because most of them have financed their companies with variable rate debt. So that's the place where actually interest rate cuts would be more meaningful. I think it's less meaningful when you're talking about the S&P and large cap, right? Many of these companies are in large cash positions. So for them, it's
Are you sure all that they publicized are real?
understanding the sentiment.
Well,
And if we get more of a small cap rally, if we get more breadth on this rally, I think then people
it's as
feel
close to real as
confident
you
and
can
more
get. I
enthusiastic.
guess they could be
We really
posting
learned the
fake
lesson
stuff.
with having a very narrow market
But-
is that when you have a narrow market like we did last year, it's really vulnerable to down shocks like we
I
saw
guess
in
you
March
could
and
you
April.
could actually
So I think
investigate it
that's
through a
the thing
FOIA
people are hoping
request.
for is can we get more breadth so that we can
So
be
if
more
you
confident that
thought
this
there
rally
were
is
doubts,
sustainable?
you could pull those documents off the website and get a FOIA request and track it through the government.
Lead, or can we see a broadening?
I think tech continues to lead.
Did you
in the
trust
sense that
Biden?
That's where the earnings are, right? And if you think of 90% of a stock's
Were
performance
you a
overall
Biden fan?
being driven by earnings, that's where it is. But it's not all created equal. and
You're a
I think the
Democrat.
thing
You're a
that we
liberal,
need to
aren't you, Henrik?
recognize is that
You're a
AI
liberal,
as
I
a
can tell.
technology is a pretty flattening
It's okay.
technology.
I need
So the
liberal
place
friends.
AI
I don't
is
have
really
any.
most focused on is where do you have data assets that protect you a little bit?
Do you think
That's
Biden
the
did a
kind of
better
way I
job
think
for
it's
the
more
United
important,
States?
even beyond infrastructure like we're seeing with the Mag 7.
Julie, thanks so much. That was Julie Beal, Chief Market Strategist and Portfolio Manager at Kane Anderson Rudnick. Let's pivot
Oh, you
to
like Bernie
housing, though,
Sanders?
because we did see
Bernie
new
Sanders is a
residential construction
socialist.
increasing 4.6%.
You should see what he did to Burlington, Vermont. I used to work in Burlington at the Nissan dealership.
An almost 10% slide in May, according to
He
figures
used
that
to
we
be the
got
mayor of
this
Burlington, and
morning. We're going to talk about all this with Drew Redding. He's Bloomberg Intelligence U.S.
he
home building
turned it
analyst.
into a nice little,
He
from a
joins us
nice
on
little
Zoom
hippie
from
town to
Princeton. So,
like
Drew, we saw
drug addicts
housing
living on the
starts
street.
rebound in June. We saw strength in that multi-family building, but weakness in the larger
Never had a real
single-family
job in his
market.
life,
How are
but
we supposed to kind of understand
people like him
that
though.
bifurcation?
I gotta be honest with you. He should have, like when Hillary ran, Bernie Sanders, they stole it from Bernie Sanders. He should have been running against Trump the first time, not Hillary. You know what I'm saying? The Democrats stole that from him. Bernie had a huge following here, especially from young people.
Low single digits, single family is down 4%. And what that tells us is that single family.
You know who Ron Paul is?
Continue to scale back.
Have you heard of Ron Paul?
In the coming months, and quite frankly, it's what they need.
He's a libertarian.
And the reason for that
I'm
is
a Ron
because
Paul
there's
guy.
such an elevated level of supply of new homes out there in the market. You know, the last data that was released shows we're at the highest level since 2007. The composition of completed homes, which is really the risk to the builders because those are the ones that tend to get more heavily discounted. They're at the highest level since 2009. So what you need to see the builders continue to do is start to work through that inventory.
All right, guys, are we getting a reversal or what are we doing? In my
Over the
opinion,
past several years, you kind of touched upon this, but U.S.
you think Bernie Sanders is honest, dude?
And today's numbers aside,
Come on,
what's been
Henrik.
changed since then? Drew, can you take us kind of through that timeline?
Yeah, that's a great
Henrik.
point. The lack of supply.
He's never had a real job in his life, and he's got like $10 million houses all over the United States. How do you think he got that
points of
money?
contention for the U.S. home building industry. It's been one of the major drivers for the builders.
What do you make as a senator? A couple $100,000 a year?
People into the new home market. So that's been a major tailwind. But as you mentioned, that has shifted to a headwind now.
All right, dude. Come on.
Over 30% last month. Now, if you look at the national level, we're still about 10% below pre-pandemic.
All right, we
levels.
disagree on that,
But I
man.
think when you look at the national numbers, it's really skewing what's happening
It's
out
all
there
right.
in the market. We now have 10 states
But come on, dude.
where resale supply is higher than it was in 2019. And among those are some of the most important markets for the builders. So think of areas like
He's
Florida,
actually a nice
Texas,
guy. People like him.
some markets
Honestly,
in
people
the
like him.
Southwest, like Colorado and Arizona.
It's just I don't
And when you
believe
dig
the same things
even
he
further
believes.
in, some of the
Which
most
is fine.
important
That's
for
why
the-
we have
for the builders,
elections.
You're seeing inventory levels significantly.
I'll tell you what, people in
above where we
Vermont
were in
love him.
2019. So what this means is that the competitive dynamic has really shifted for the group.
But if you drove through Vermont and then you drove through North Carolina, you'd see the difference between a Democrat and a Republican-run state. I can tell you that.
See is builders lowering prices outright, which is something that they tend to try to avoid. But we're
I live
seeing
in
it
North
more and more.
Carolina.
Speaking of prices, I'm wondering just in the last minute or so.
This guy wants me to call him. Snooze. He wants me to call him so he can confirm he can run his scam.
Trump has touched on to try.
Think
and
I should
persuade
call him or
the
give him the
Fed
service
to lower
number?
rates, but how is housing affordability right now?
Sure, affordability is still bumping along some of the worst levels on record. You called out rates. That certainly gets a lot of the attention, the publicity, but it's really home prices. Home prices are up more than 50% since 2019. At the national level in the resale market, we're still rising in that low single-digit pace.
Oh, he's just in my chat box. He keeps asking me for now. He's trying to get me to call him after I've answered his questions. I gave him the number to call into the hotline. One of the phone guys can get his call. I'm not calling that guy.
That trend is also
He's not a real client. He's gonna block him.
They're lowering prices as well. So,
I'll let somebody. What I'll do is I'll let somebody who's barely hanging on to their job write that deal and have it come back on them. I'm not doing it. I'm not writing that deal. I don't need the little bit of commission that bad. All he's gonna do is try and run paychecks and go out and fraudulently buy something. He doesn't even want an accounting software. He just wants to run paychecks.
Also coming up, some big Netflix news, right? You've been hearing about it.
And he doesn't have any employees.
She's Bloomberg Intelligence.
I mean, what the hell?
U.S. media. She's going to recap all those earnings because they were pretty impressive. But the thing is, Netflix shares, they're down nearly 5%. So she's going to break.
I should see what he's into.
All that. And this is on a day when we've got.
Maybe I can get a job as his accountant.
S&P 500 down about up about 2 points down.
I get a scale.
127. This is Bloomberg Intelligence.
I get a scale at I'll run the production line. Yeah, get his reference. I'll get his client list. I guess, yeah. Snooze. I hope Snooze not on it. Snooze is one of his wholesalers. It's been slow, man. I've gotten hardly any leads this whole week. It's been the slowest week all year. I'm just getting nonsense like that all the time. What are you guys thinking? Are you calling the continuation short, or do we return to the VWAP? News is done. No more news today. You're short now? You're short ES, dude? ES? Where'd you get in? About 36? Right here? 30, 35? Stochastics are bottomed out too, so watch that. they could ramp right back up. So oh, you're already green. You're looking good. Henrik's on a short. Run, baby, run. Let's go. What do we got below for resistance? Man, it's a free fall. It's a free fall all the way to 63.12. How many contracts you go, Henrik? Yeah, I know. I know, but it's been so strong, it comes out of nowhere the last 2 days. You know what I'm saying? It's like I'm gun shy. What's your exit, you think? $62.10. Yeah, that's what I was saying. Look, hey, cool. Look, looking on my chart, I got 62.12 marked as a historic line of resistance. Fuck, you're making me want to go in now. Everything you saw confirmed what I have. Or 63.10. Yeah, that's what I knew. I knew what you meant. Shit, dude. I was almost gonna go in because for 3 contracts, but because I got the big account, I can burn. 20 points is a lot on the ES. Yeah. I'm gonna do it. I'll go in one with you. Dude, I don't like going short at the bottom of the candle like this. Is stochastic, sir? Yeah, I gotta be on the forecast. The forecast says wait for the pullback, so I'm gonna follow the forecast. You're right, Snooze. The forecast says, yeah, NQ is pulling back now. I think NQ is going to pull back into this zone, and then that's the real drop.
24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business.
Yeah, I do. I want to go short. I want to just put 2 on. You know what I'm going to do? I'm going to put 2. I'm only going to put 2 on the NQ, and I'm going to let it run and see what happens. Oh, wait. All right, never mind. We're getting our pullback. Be careful, Henrik, be careful, because the NQ is starting to pull back. It'll pull the ES up with it.
16 also retreating from a record, down by 0.1%. 10-year 4.43% with a 2-year 3.86%. Gold up $17 the ounce, $33.55 right now, up 0.5%. West Texas Intermediate crude back above 68 a barrel, 68.35, up 1.2%. And Bitcoin down 1.5% at 117,633 on Bitcoin. Bond yields fell as Fed Governor Chris Waller on Bloomberg Radio reiterated his case for a July rate cut, while data showed an improvement in consumer expectations for inflation. Julie Beal is portfolio manager at Kayne Anderson Rudnick, and right here on Bloomberg Intelligence, she told us moments ago, no question, tariffs still creating lots of uncertainty.
What I struggle with is thinking about the risk.
I'm gonna do an entry right here
enacted, right?
if it comes back
and
again.
What's difficult is that the deals that have been announced are not real deals, they're MOUs. Most tariff and trade deals take 18 months to put together, right? 90 and 90 is not a realistic
No, that's stupid. What am I doing?
assertion. We can have MOUs and agreements, but I don't think that it's realistic to think that we're going to have really clear and strong trade deals that are
know what?
long-lasting
What am
in
I doing?
nature.
Julie Beal of Kane Anderson Rudnick, interviewed right here on Bloomberg Intelligence. Barcelona is set to reduce the
Sitting
number
here
of
and talking
port
myself into a
terminals
trade.
for cruise
Hey, be
ships in the
careful,
city's latest
Henrik.
attempt to limit the number of
You might wanna-
tourist visits. Right now, we got Carnival down 0.7%.
NQ is starting to pull hard.
0.5%. Norwegian Cruise Line Holdings up by 0.2%. Recapping stocks.
ES is not. ES is going the opposite direction. Look at that. That's weird.
I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, thank you, Charlie Pellet. This is Bloomberg Intelligence. I'm Lisa Mateo alongside Emily Grafeo. Netflix came out with their earnings. Are you a big Netflix watcher? Emily, what do you like?
You know, I dabble in Netflix.
Okay.
I do. I have the like the cheapest version.
Here
of
it is. We got the rotation up.
Ads.
Rotation is
I
happening.
get the ads, which I probably should just pay up because I think it's like a $2 a month difference. But like I'm a little chintzy.
Your
on
trade
that.
green,
But I do watch the
Henrik?
Dallas Cowboy Cheerleaders Netflix show.
Wow,
I think
my
it's
daughter
really
loves that.
it's really well done. So I don't watch a ton of Netflix, but I do. I think I bought the Netflix subscription to specifically watch that. Yeah,
Well,
yeah.
that's what a lot of people. I mean, I don't know. I haven't gotten into the Squid Games. That's huge
Yeah,
for them.
right.
Stranger Things, a little.
All right.
bit
Well,
dabbled in.
be careful, man.
The thing is,
Don't let it run back too hard against you. It'll run all the way to the 20 EMA, which is up around 37.
nearly 5%. What is going
If it
on
follows the
here to explain it
NQ.
all for us is Geetha Ranganathan. She's Bloomberg Intelligence analyst on U.S. media. Geetha, thanks. Always a pleasure having you here because you break it down like nobody else does. So talk to us why those Netflix shares are lower this morning.
Yeah, so what I would say, Lisa and Emily, is results were definitely solid. I mean, we had a solid second quarter print, whether it was second quarter results, whether it was, third quarter guidance, everything came in above expectations. They even raised guidance for the full year, both for revenue growth as well as for operating margin. But I think what we're really seeing, and kind of the muted reaction in the shares today is really because expectations going into the quarter were extremely elevated. And while I say that the quarter was solid, it probably was not exceptional. And I think that is what investors were really
Hey, dude, be
hoping
careful.
for, and you really needed
You're pulling back
for,
now.
the stock price to go even higher. So at this point, valuations.
What do you
really,
think the
really
entry is
high
to go
for
short?
Netflix, trading
Snooze.
About 45 to 50 times forward
Yep,
earnings.
you did.
So obviously, you needed some huge
You did.
catalysts. Which they,
Well, I
all
mean, the way the
fundamentals are really,
forecast
really
reads,
strong.
you wait for the
But if you
pullback
have
to the
that
20
one
or the
big
50 EMA.
well, Netflix didn't
So we'll see how
necessarily
far
have
it goes.
this latest earnings report.
What did we learn in the earnings just about?
I'll be right back. I go to the
at
bathroom
least
real quick.
Netflix is thinking about for the next leg of growth. Are they planning more content? Is it more about focusing on live events?
Yeah, it's a little bit of everything, actually. So just if you look for the near term in terms of the next leg of growth, so we're just looking at the next 6 months or so, they actually have a massive monster slate, and they characterize this as one of their best 6-month periods ever. You mentioned Stranger Things, you talked about Squid Game, you have Wednesday, you have a whole bunch of other live events, including the NFL. You have some boxing matches. So they really have it all coming up. Not just the 6-month period. The upcoming 6-month period is, of course, going to be extraordinarily strong. But then even into 2026, I mean, management was talking about how they have really this excellent standout content lineup. So content is obviously going to be a very, very big thing for them. But as we kind of look out, every year has its own special, catalyst. So in 2024, for instance, it was subscriber growth. It was all about subscriber growth. And you had, this password crackdown initiative. You had the new advertising tier that pulled in over 40 million new subscribers just in that 1 year. Then for this year, 2025, it's really all about price increases, right? So they already raised prices. We're talking about 16 to 20% price increases across most markets. And they're going to continue
You think
to
the
raise
20 was it, or do you think we're going all the way up to the 50 to challenge that fair value gap?
content slate. But then really, as we kind of look
I'm gonna
forward,
wait. You know what? I'm gonna wait for this rotation all the way up before I go short.
for Netflix will
So
be
the forecast,
advertisers.
how the
So we've kind
forecast
of
reads
seen
on the
them,
NQ right now
dabble a little bit in
is
advertising. They've been a little bit late
you're
to the
waiting for
game,
the
I would say, on
pullback. The
advertising.
pullback is either to
This
the
is a
20,
pure
which it
subscription
confirmed,
service,
and we went
but
and
they've
we
gotten,
bounced off
I
the
think,
20 or the
most of the
50.
pieces
But
ready
typically, you really want
for
the
that business to take off
stochastics
in
in
a
an
big way.
overbought
They said
situation
that, you know, the
and then
upfront
follow
sales
it back
so
down.
far have
Right
been
now, it's kind of,
pretty encouraging.
I think
And
we're
you're
going to get
absolutely
some
right in
chop
terms of
here.
the
I think
live
we're going to
piece
chop here,
of the puzzle there, because
chop up
they really need to have a very good
before the
live
actual
event
move
strategy in
down. But
order
I
to
could be wrong.
attract all
You
of
know, I
those
could be
top
wrong.
global brands and top advertisers. And I think they're doing exactly
Oh,
that.
you're
So
looking
next
good
year we're
again,
going to see
Henrik.
advertising. I mean, it's so far
I don't know if you got
doing
out of
still
that or
pretty
not,
well.
but you're still looking
They've
good.
said that they're on track to double their advertising revenue for 2025, but I think it's going to take off in a really, really big way next year. And then by 2020, you know, in another few years' time, I mean, expect this to be about 10 to 15% of their total revenue. So it is going to become a big portion of their growth story going forward.
Yeah, I love the live events, like the boxing match, Amanda Serrano. I was all over that. It was a good one. So you mentioned these prices. So how much can Netflix continue to raise their prices for subscribers? I mean, before they start to tune out, before Emily Grafeo shuts it off.
I actually think they have very good pricing power. And a lot of that, of course, is going to be based off of the content. And they're obviously continuously investing in the content, you know, in a disciplined way, but they're definitely broadening it, they're deepening it. And the content definitely has huge appeal. I mean, we've seen this, you know, time and time again when they put out all of their engagement reports. You have every Netflix subscriber watching, you know, Netflix content for an average of about at least 2 hours a day. So that's definitely pretty strong. You know, so they're going to continue to keep adding to that content in terms of, you know, live events, in terms of other things. And, you know, I think that is definitely going to be a big growth catalyst for them.
Just very quickly in the last 30 seconds here, Geetha, talk about their competition right now, because there are a ton of streaming services, but obviously, I mean, Netflix is up about 90% over the last year. Did this earnings result show us that they're still the clear leader in streaming?
Yeah, they are the undisputed leader. I mean, there's absolutely no doubt about this. They won the streaming wars. The only one other name that kind of keeps coming up in terms of, you know, viewing time would be YouTube. But I think both of those platforms are very different. So Netflix really kind of specializes in premium content and scripted content and prestige dramas. YouTube is really more for kind of casual user-generated content. But again, you know, the way that Netflix management has kind of framed this whole question about competition is that, you know, they still have, if you kind of just look at the whole viewing time, Netflix and YouTube combined only have about a 20% share. So they're really 80% is still up for grabs. And the way that, you know, Netflix is kind of characterizing that is there's still plenty of upside in terms of them kind of capturing more share. But you're absolutely right. They are way ahead of their competitors in terms of viewing share right now.
All right. Thank you very much, Geetha. Always glad to have your insight. That's Geetha Ranganathan, Bloomberg Intelligence Analyst on the U.S. media, keeping us all on top of Netflix earnings. Coming up, we have Paige Smith, Bloomberg Consumer Finance reporter. Going to be talking about American Express. This is Bloomberg Intelligence.
All right. You missed your entry? Where were you trying to get in? I'm waiting for the full pullback. I'm gonna wait for the full rotation up. I think we still got another couple chances to get in before the violent pullback, and I think we can go that fair value gap, I'm looking at 23,100. I think we can go all the way to 23,100. I only need 75 points, so. What you got, Snooze? Oh shit, yeah, right here. You were looking for a bounce off that trend line, right? Yeah, I think it's a bear flag too. I totally think I might just put 2 in and add to it if it goes up. I think I'm gonna do that. If it touches, I'm gonna sit on the 20. Hold on. Shit, I forgot to. So you were looking right here. Your entry's probably right in here, ish. Yep. Nice. Are you holding and gonna add, Henrik? I gotta figure out where I want to start building my position here. And one time I'm being caught. Oh, look at that. We got a forecast cloud change. All right, I'm going to hold on. 6 ticks in red. All right, so we got a forecast change on the NQ. That means there's more buying volume than selling, so I'm going to hold on.
You're listening to Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, welcome back to Bloomberg Intelligence Radio. I'm Emily Grafeo with Lisa Mateo. Paul Sweeney is out. We had a slew of
Hey, Lottie,
news
off you out
today,
there? I see
and
you're
the
watching.
read on the consumer coming out of American Express. Shares were falling, but the credit card company's expenses were higher than
Oh,
expected.
you got to go somewhere?
TD Cowen called the results neutral overall, noted that the earnings upside was driven by a lower than expected tax rate. We're going to have Paige Smith, Bloomberg Consumer Finance reporter, break all of this down. Maybe we could start with how Amex is standing out from competitors right now, and what did the earnings overall show us? Because it does really feel like this is a crowded space here.
Yeah, I'm thinking I'm kind of with you. I really want to see a full rotation up before I get in.
Thanks for having me. I think
Unless I just tip, I could take 2 contracts and be okay because I got a $6,500 drawdown on this account.
On the analyst call, just the idea that, of course, the premium space, folks who really love rewards on their credit cards, travel, hospitality, airport lounges, all of those nice things. It's a very crowded space, and it's getting more crowded, actually. Citi just announced earlier this week, for example, that they were actually re-entering the space.
This is where a guy
after
can
sort of
get
taking
chopped
a bit of
up.
a hiatus there. So it's certainly an area to watch, but Amex really asserted itself during this batch of earnings to basically say, listen, we are sort of the original premium card offer company here, and we're going to continue being the premium card offering for consumers in the U.S.
Now, they had record card member spending. So what does that say about the state of the consumer? They're continuing to swipe away.
Yes, that was another question that Steve fielded a couple of times on the earnings call. It essentially does say that folks in the premium space are continuing to swipe, tap, and spend in every preferred way. And yes, it's sort of all's well for the Amex consumer.
You got good news?
At this moment in time, certainly.
Did we learn anything about any specific updates to the Platinum card? Because
checking
people
it.
get so obsessed with the
People
Yeah.
love the updates.
Well, I think
and,
it was baked in from yesterday, dude. I got honestly.
No, we do not have any more.
We've been having good news all week, and it's just been grinding. I think everything's baked in.
And we know the
There's no more news left today.
But
are they going to raise the price?
I think it's safe to say that they're going to raise the price. That's me putting my spin on things. But if they didn't raise the price, it would be a pretty great deal. I'll put it that way. And I don't think the economics would really make sense for the card if they did not raise the price.
But I'm thinking, so if more people are taking advantage of all these perks, right? Because I know I do. Like if I'm tracking my.
It looks like Trump is going to replace Powell.
I mean that, what? The consumer is kind of cautious at the same time because we want to go.
People are going to start jumping ship on Powell and try and get on with whoever's coming next. You're going to see it.
I think that there are a lot of
You're going to see a big move against Powell. It's already happening. U.S.
who really just track it.
U.S. Deputy Treasury Secretary. One should question my rates. See, everybody's going to start.
Consumers really like these.
It's going to be a dog pile.
Track them very closely, and they pay for value. So it's. I wouldn't say it's maybe a warning sign. I would say it's more of a sign of like a.
Yeah, I'm thinking. I really do think the short is coming today.
Hot right now on Wall Street.
But I'm gonna follow the forecast and wait for the full rotation. We got a forecast cloud green. So let's see how far it pulls us up. The ES is fighting it hard though. Look at that. The ES is fighting it.
Even Schwab mentioned earlier. Schwab reported earnings this morning as well, and you know, when it comes to Amex, they
ES may hold this historic resistance line.
Watching the technology to see how they can either issue their own stablecoin or partner on a stablecoin offering of some kind. It's still, they sort of hedged and said it's still early days relatively. But one thing was very clear, which is Steve Squeri came right out and said, is this a threat to existing payment rails?
Once I get to,
no, it is not.
If we get to the 50,
the same thing that we've been hearing kind of across.
I might do full 10 contracts and try and get 75 points.
Amex, kind of the same.
Let's see how it. See, it's widening. You see how the forecast cloud is widening? That just means there's more selling happening. It's not closing back up to a short. It's adding. You know, it's the breadth.
Space at the moment, and they highlighted that Gen Z and millennial spenders were paying. Their delinquency rates, or kind of being like 30+ days past their bills, were actually lower than industry trends for older consumers. So you would think, you know, younger people are just getting used to paying off credit cards and sort of learning about how to handle their debt. And there was kind of some question about Amex targeting these younger consumers with this like premium credit card that comes with fees. But they've basically countered and said, hey,
if it breaks down the bottom of this cloud, then we might be in trouble.
The delinquency rates are quite low compared with the industry.
You're out. I'm getting ready to talk myself into a trade.
Kind of an interesting metric I thought that they highlighted this morning.
Some good news.
I feel like I'm about to miss out. You're good at shutting the computer off.
She's Bloomberg Consumer.
All right, dude. You have a good weekend. I'll see you on Monday.
And credit card debt and all of that. This morning, for our listeners in the U.S., a reminder, you can listen to us via satellite radio. It's on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM's channel 121. That's presented by Oracle. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence is starting up in just a few moments. And this is on a day when S&P right now is down about 4 points. The Dow down 194 points, and the NASDAQ down about 13 points. Even the Bloomberg Dollar Spot Index, that's lower. It's off about 0.2%. You are listening to Bloomberg Surveillance. I'm Lisa Mateo alongside Emily Griffin.
This is Bloomberg Intelligence with Paul Sweeney.
The real outperformance has been the U.S. corporate high yield. These are two.
You're looking good, Henry.
Blue chip companies. One person's chaos is another person's animal spirits.
Breaking market headlines and corporate news from across the globe.
Our view is that the economy is slowing down.
There is the possibility of a death spiral.
Both quantum computing and AI are going to power the future.
People are just buying everything with tech.
Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio, YouTube, and Bloomberg Originals.
Good morning. I'm Lisa Mateo alongside Emily Goffeo. This is Bloomberg Intelligence. Paul Sweeney has the day off. It is that summer Friday thing, so he's joined down at the Jersey Shore. We've got a lot for you coming up here on this next hour of Bloomberg Surveillance. We're talking with Joanne Shoes, who's University of Michigan Surveys on Consumers Director. We had the UMich data out, so we're going to bring you the latest data, the latest information on that. Also, earlier today, we had Federal Reserve Governor Christopher Waller. He was speaking with Lisa Abramowitz, Jonathan Ferro, Michael McKee. So we'll have a recap of that for you as well. But first, to get things started, let's kick it off correctly with our very own Charlie Pellet.
All right, thank you very much. And here's what's going on. We have got the Dow, the S&P, NASDAQ all slumping right now, all in the red, giving up earlier gains, and yes, retreating from records. Here's where we stand, right to the numbers. S&P down 7 now, 62.90. Have been trading above 6,300. We've got the S&P down 0.1% right now. Dow Industrials down 195, decline there of 0.4%. Nasdaq Composite Index down 29, a decline of 0.1%. 10-year at 4.43% with a 2-year 3.87%. Gold down, gold up $14 the ounce. The precious metal up 0.4%. 33.53 the ounce. West Texas Intermediate crude gain there up 1.4%, 68.50. Crypto week in Washington. Bitcoin down 1.1%, 118,180 right now on a Bitcoin. Fed Governor Christopher Waller says worries about hiring in the private sector have driven his call for the central bank to cut rates this month. In an interview aired on Bloomberg Radio this morning, Waller was asked if waiting until September for a rate cut would be too late.
Well, that's kind of the debate. What does it mean to wait 6 weeks? Is it that critical? And the answer is probably not. It could be, but it's also the reverse. Why wait till September if it's just 6 weeks?
And in that interview, Waller was also asked if he would take the job as Fed chair.
Look, in 2019, the president contacted me and said, would you serve? And I said, yes. If the president contacted me and said, I want you to serve, I would do it.
Federal Reserve Governor Christopher Waller interviewed this morning on Bloomberg Radio. Chevron has won its arbitration battle with ExxonMobil, clearing the way for it to buy Hess Corp more than 20 months after the $53 billion deal was announced. Hess shares no longer trading. Chevron lower by 1%. Recapping, S&P down 5, drop there of 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. I'm Lisa Mateo alongside Emily Grafeo. You are listening to Bloomberg Intelligence. So we had some consumer sentiment data out. It rose to a 5-month high early June. Expectation about the economy, inflation. It looks like it's continuing to improve, but we want to dig more into this. So let's bring in Joanne Chu. She's University of Michigan Surveys of Consumers Director. Joanne, pleasure to have you here. So you're seeing the data come in. What does it tell you? I mean, are expectations about the economy, inflation, are they getting better?
So certainly expectations about inflation are improving. We've had several months of consecutive declines in both short-run and inflation expectations and long-run inflation expectations. But we are hardly out of the woods yet. These expectations still came in considerably worse than both 6 months ago as well as a year ago. And although consumers are not worried quite as much about the worst case scenario that they had been anticipating in April and May, they still expect inflation to reaccelerate in the years ahead.
So Joanne, consumers expect prices to rise at an annual rate of 4.4% over the next year. That's much higher than the year-over-year CPI reading that we got. Why is there such a divergence here between what consumers actually think and what the data is showing us about inflation?
The CPI is backward looking, is telling us what happened to prices over the past 12 months, whereas inflation expectations are saying what's going to happen in the next 12 months. It's very clear from the survey that the number one factor that consumers are thinking about are the potential impact of tariffs. And I think there's a recognition that it might take a little bit of time for tariff policy to pass through to consumer prices, but consumers broadly expect that to happen. In April, when the reciprocal tariffs were announced and then paused, consumers were really expecting something quite catastrophic to happen. And at that time, we saw inflation expectations even higher than they are now. But I think consumers are less worried about that worst case scenario, that maybe the reciprocal tariffs, that eventually tariff policy might settle at something lower than the reciprocal tariffs that were announced in April. But again, they are still worried. They have recognized that inflation, slowed down in 2023 to 2024, but looking forward, they are expecting tariffs to eventually pass through to their prices.
All right, Joanne Chu, University of Michigan Surveys, a consumer director. Thanks so much for joining us. We appreciate your time. All right, let's see what stocks are on the move this morning. I'm Lisa Mateo, Emily Grafeo. We're joined by Bloomberg's. B'Elanna Heydrich, Bloomberg cross-asset reporter. Thank you so much for joining us this
Thanks
morning.
for having me.
So where did you want to start?
Let's start with Netflix, ticker NFLX.
Sure.
And shares are lower about 5% today, even though last night the company reported second quarter results that exceeded investor expectations in just about every major metric, with the company saying revenue grew to $11.1 billion and earnings jumped to $7.19 a share, and it also raised its forecast for full year sales and profit margins. And the company mentioned that there have been a couple of really big hits,
All right, I'm back.
including Ginny and Georgia.
I just
and
made an appointment
the
for
final
later
season of
today.
Squid Game.
A real
I watched
customer.
the first season of Squid Game. I could not stomach the second season of Squid Game, so I'm not one of
That's what I
those
hear.
fans. But apparently, these are quite popular.
Do you watch a lot of Netflix, or?
Of course.
Really?
Don't
I feel
we
like you're
all?
not a TV watcher.
Oh, I watch TV. Yeah.
Okay.
Yeah.
Okay.
I'm into Apple, the Apple streaming app.
Oh, Apple TV.
Recently, yeah, because I hope no one from Apple is listening, but I took my mother-in-law's login.
All right. What other stocks are you looking at?
We're also looking at Lululemon, LULU. Shares of Lululemon are also lower today. Following a note from an analyst at Jefferies that said the company is facing slowing sales, fewer store visitors, waning demand for its iconic black leggings. I bought a bunch of Lululemon stuff pretty recently. I spent more money than I should have, so this was a surprise to me. But shares are lower following this note, which is really making its rounds.
Yeah, that stock has been getting crushed year to date.
Down some 40% through the Wednesday close. That's right. Yeah.
Yeah. Okay. And your last stock?
And the last one is 3M. Ticker, of course, is MMM, and those shares are slightly lower today as well. But the company did raise its profit forecast and it beat Wall Street's estimates for the second quarter. And its CEO, he has this effort undergoing to reinvigorate the company, and that seems to be gaining some momentum. So the company said adjusted earnings will be $7.75 to $8 a share this year, and that includes some of the expected impacts from tariffs, and that was up from a prior range that topped out at $7.90. And analysts had been expecting $7.70, so much better than expected results.
All right, B'Elanna Heydrich, thank you so much for joining us, Bloomberg Cross Asset Reporter. For more conversations like this, you can subscribe to our new Stock Movers reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere else you listen. Okay, so earlier this morning, Fed Governor Waller, he joined Bloomberg in a wide-ranging conversation on the labor market, the Fed, and also on a lot more. His stance on cutting rates in the next Fed meeting. So in this portion of the conversation, he was asked by Bloomberg's Michael McKee if he would dissent during the July meeting if the majority decides not to cut rates. So take a listen.
Well, I never want to commit to an action before the meeting. Otherwise, if everybody committed before, you don't even need to have the meeting, to have a discussion. So the goal is to always go to the meeting, sit down, listen to all sides. People will try to convince me of their view. I'll try to convince them of my views. And in the end of the day, you make a decision on what you think is the right outcome and the right data, how the data is coming in. And right now, I laid out my case last night. I don't think I could be any more clear, I hope, as to what my position is and why I think we need to do this. It's just how I read the data and how I think about going forward, how you respond to anything that involves tariffs.
There's a lot of politics in this decision coming up, more than usual. And I'm wondering, Governor Bowman has also suggested she would prefer a rate cut in July. If two of you vote for a rate cut, if two of you were to dissent, would you worry about the market reaction to that?
You know, one of the things that has always bothered me since I took this job is the criticism that we are nothing but groupthink. All the meetings are the same. Nobody dissents. Nobody does anything. And I think this is healthy. I think this is a turning point in the way we want to think about policy. Some people don't want to cut, some do want to cut, but coming out and making the case either side, that's good, healthy debate. Otherwise, if we're always going to do the same, the joke is, why don't you just have one person set policy and send the other 18 FOMC members home? So this is healthy. I think this is what you want to see in a democracy. You want to see policymakers have serious, open discussion about where policy should go. It doesn't mean anything about politics or anything else. It's make the economic argument. and then see if you can convince others to go along with you. And that's all I'm trying to do.
We totally agree with you, for the record. We were sick of the groupthink, and it's good to have dissent.
Yeah.
Mike essentially is asking if you will dissent at the end of this month. Is there value in dissenting on the FOMC?
Well, I mean, it's often the case that you dissent if you make it very clear you think at this moment in time this is an important thing to do. If you were to go in and do kind of a jihadist, I'm going to dissent at every single meeting no matter what happens, then you don't even have to show up. Everybody knows what you're going to do. So it is important to make sure that if you dissent, you do it carefully and you have the right reasons, and it's not going to turn into a serial dissenting potential case. I mean, that's how I take my job seriously and responsibly. So I only would think about doing this. I dissented on the balance sheet slowdown earlier this year because I felt like that was not needed. And that's kind of the situation we're in now.
Chris, if you do cut, the markets will go one way. If you don't, they'll go another, perhaps. How critical is it to get to a rate cut fairly quickly? You've mentioned the danger to the labor market, but if you do wait till September, is that going to be too late?
Well, that's kind of the debate. What does it mean to wait 6 weeks? Is it that critical? And the answer is probably not. It could be, but it's also the reverse. Why wait till September if it's just 6 weeks? That's exactly the thing. It doesn't kind of matter. Just start thinking about, do I want to wait and risk something happening? This is what we saw last summer, by the way. We left July, we left rates, and then boom, we got a very weak, bad labor market report. The unemployment rate jumped 0.2. Payrolls went way down from where they were, and people were screaming at us last August, you guys should have cut in July. So 1 month it always is 1 month. Just remember that, it's just 1 month. But we live in a world in which we have to respond to real-time data to kind of sense of where the economy is going. And I've always said if you worry about long and variable lags, which everybody always talks about, the whole point of that is to get ahead of it, not wait for it to happen, and then take a policy action that takes quarters or months down the road to actually have any impact.
All right, that was Federal Reserve Governor Christopher Waller speaking with Bloomberg's Lisa Abramowitz, Jonathan Ferro, Michael McKee. Now to bring in more to kind of break down more of this interview, but also more of what's going on with the Fed is Stuart Paul, U.S. economist with Bloomberg Economics. Stuart, I want to start with you about kind of the tone that Waller sent. Would you call it dovish?
I do think he struck a more dovish tone. Okay. He was really focusing primarily on the cooling labor market. Now, everybody looked at the June jobs report, breathed a little bit of a sigh of relief when the unemployment rate ticked down and we registered 147,000 jobs added during the month. Waller completely discounted that report. He said, look, all the hiring was concentrated in the public sector. Private sector hiring was really slow. The availability of labor supply is diminishing, and we should be cautious about the labor market at this moment. In fact, not only do we talk about cracks in the labor market, he compared the current economic situation to standing on a frozen pond and feeling cracks in the surface of the ice below his feet. He's definitely striking a dovish tone, and he's preparing markets to brace themselves for when he dissents from the consensus in July and instead votes for a rate cut, but the consensus on the committee will be to hold rates steady.
It's kind of hard to kind of parse through, you know, how seriously we should be taking his message. Is it, like, how much does it really tell us about the strength of the economy versus someone trying to be the Fed chair, trying to say, you know, what Trump wants to hear. Obviously, the Fed claims that they're not politicized, but it does feel like everything these days is becoming
It does feel
political.
that way. Yeah, it does feel that way, and there could be a little bit of politicking going on. Waller is somebody who's comfortable dissenting, so I don't want to make this just strictly a set of circumstances. He's trying to put himself out from the bunch to gain the president's favor. He has dissented before, as we just heard in the audio drop. He dissented when he voted in favor of maintaining the pace of balance sheet runoff rather than slowing the pace of balance sheet runoff as they did earlier this year. So he's comfortable standing out from the pack. He has been very right about the labor market so far. He was outside of the pack saying that, look, firing would not take off. Instead, the cooling of the labor market would instead be a diminishing excess demand for labor, falling job openings. And that's exactly what we've seen. So he has a lot of credibility, and I don't think that there's any downside for him in maintaining his position as somebody who's a little bit more dovish than the rest of the pack.
Yeah, one of the things I found interesting during this interview is they, kept asking him, would you take the position of Fed chair? And he kept saying, if I was asked, I would take it. And then he said, well, I haven't been asked. So what was your whole take on that about that position of Fed chair?
This is the real campaign season that we should care about. Forget the midterms coming up next year. It's very clear that folks are campaigning right now. Kevin Warsh, it seems like, is on every single news outlet. This has been Waller's opportunity to get his name out there, to start putting himself forward as a viable candidate. Right now, we think that Kevin Hassett, who's currently working in the White House, might be the top contender. He's worked with Trump for years. He was in the first Trump White House. His expertise is a little bit more focused on taxes than on monetary policy. And so that might be a point against him. He might have a little bit of a harder confirmation process. I think that Waller is doing a good job of getting his name out there and perhaps even just getting himself a bit more on Trump's radar, reminding him, I had your confidence the first term when you put me on the board of governors. Keep that confidence in me to take the top job when it comes up in May.
This is going to be a continuing story. Stuart Paul, thank you so much for joining us. He's the U.S. economist with Bloomberg Economics. Coming up, we've got a lot. We've got munis in focus. Daniel Moran, Bloomberg Municipal Finance, talking about the muni market. So we'll talk about that too, because there's been a lot of rain, flooding. What does that mean for the municipal bond market? Stay tuned. We've got more in Bloomberg Intelligence.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. I'm Charlie Pellet. We have got the Dow, the S&P, NASDAQ all in the red. Bond yields fell as Fed Governor Christopher Waller reiterated his case for a July rate cut. Those remarks coming on Bloomberg Radio this morning. S&P right now lower by 4 points, a drop there of just under 0.1%. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitment, see if your company qualifies at oracle.com/Bloomberg. The Dow down 165, now down 0.4%. We've got NASDAQ lower by 12, drop there of 0.1%. And by the way, a retreat from records for the S&P 500 index. 10-year at 4.41%, the 2-year 3.85%, and the 30-year 4.99%. Gold right now up $15 the ounce. That's a gain of 0.5%.
Okay, we're pushing sideways here.
West Texas
Not sure which way we're going to go.
7.41 a barrel, down 0.2%.
Did you get out of your trade, Henrik, on that little drop there down to like
27,673 on Bitcoin. Consumer sentiment measured by the University of Michigan rose to a 5-month high in early July as expectations about the
forecast cloud going green
continued to
on the ES also now.
Is director of the survey. She was interviewed right here on Bloomberg Intelligence moments ago.
I think this is going to flag out and go lower, but I don't know
these
where the
expectations still came in considerably worse than both 6 months ago as well as a year ago. And although consumers are not worried quite as much about the worst case scenario that they had been anticipating in April and May, they still expect inflation to reaccelerate in the years ahead.
Joanne Shu of the University of Michigan, interviewed right here on Bloomberg Intelligence. After earnings, Schwab shares, they're higher right now by 1.9%. After earnings, American Express lower now by 3.1%. After earnings, Ally Financial down 2.7%. Recapping, little change for the U.S. equity market. Right now, the S&P down less than 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Now on Bloomberg Intelligence, Munis in Focus.
All right, Focus and Munis brought to you by BAM Mutual. Put America's strength to work in your portfolio with BAM insured municipal bonds. Protect your investments with an added layer of security and guaranteed income. Invest with strength. Build a stronger tomorrow with BAM Mutual. All right, so many different things. High interest rates, inflation, the news flow, right? It can impact the markets, earnings, but also, yes, the municipal bond market. So here with more on that is Danielle Moran. She's Bloomberg Municipal Finance Team Leader. Thanks for joining us, Danielle, right here in the studio. How is this current economic climate affecting muni issuance, investor appetite?
Yeah, I mean, muni issuance has had a banner year this year. We are up about 21% over last year, which was a record year. So we're seeing a lot of issuance come out of entities like states, cities, local governments. We have airport bonds, we have college bonds. If you're an investor and you're looking for muni debt, there is a lot to buy these days. In terms of investor demand, we are also seeing inflows into municipal bond funds. So that supply is being well absorbed. That being said, the return side of the market is a bit lackluster. We're running about 1.2% down year to date, but that has provided some really nice yield for investors being interested in the securities.
There's a lot of talk about when are we going to get the next rate cut from the Fed. We had Fed Governor Waller saying that he would vote for a cut in the next meeting. We do have Treasury yields down. I'm just wondering how that kind of rate outlook impacts munis at large if we were to get a cut at some point this year.
Definitely. I mean, the muni market tends to follow the treasury market. So we joke on the team a little bit. It's a bit of a laggard. So today munis are unchanged. It's a slow Friday. People are maybe on vacation. But typically the muni market follows the treasury market, just in a little bit of a less dramatic fashion. So if the treasury market is selling off, muni market will also probably be selling off just less. And then we'll see the reverse if there's a rate cut.
I talk a lot about news flow and how different things in the news affect the muni market too. So we've been hearing a lot of stories about flooding, you know, from New Jersey to Texas. I mean, are climate-related risks being factored in more heavily into muni credit ratings or issuance plans at all?
That's a great question. The rating side is a bit nuanced because each disaster affects the locality and the credit differently. So when you have something that happens, if it's happening in an area that has a very diversified revenue stream, usually the ratings will be okay. If it impacts, if a hurricane comes out and wipes out a single site hospital, and that's the only hospital in the system, then you might have a more material impact on the credit. But the issuance side is really interesting because historically, FEMA has come in and provided a lot of support for the rebuild. I think that is a bit up in the air on whether or not that's going to continue to happen. So investors are taking that as a bit of a credit concern. But we've also seen more issuance for climate resiliency measures. So after the floods in Houston during Hurricane Harvey several years ago, Harris County, the county that Houston's in, came out. They issued a ton of debt to try and prepare for the next one.
What's going on with airports? One of your reporters wrote a couple days ago, airport municipal bond sales hit a record in the first half, the total volume of airport muni issuance. Why is that?
So for a few different reasons. One is that people are flying. You go to the airports, they're crowded. So when airports are going through their development plans, they're adding more gates, they're upgrading their facilities, they're making it an enjoyable experience once you get through a TSA and you go get a croissant at a restaurant. It's nice now, and some of the airports are going through these capital plans and they're making the airports bigger to account for that passenger travel, so that costs a lot more money. Then also construction materials, the cost of construction has gone up with inflation, and so the project costs have also gone up, and more cost means more bonds.
Now, with all that said, you said airports. So what sectors, are we talking maybe healthcare, transportation, education, like there's so many, which are facing the most credit stress in the muni market?
I think that's a very interesting question. Right now, a lot of people are looking at healthcare, often because of the One Big Beautiful Bill that passed Congress and was signed into law by President Trump. You're seeing some impact, or you could see some impact on hospital and healthcare systems because of the cuts to Medicaid. Although those won't happen for several years, investors are starting to think about what that could mean for hospital systems around the U.S. if they're not getting the reimbursements they once were.
All right, and are you noticing a shift in the type of investors that are taking part in the muni bond market recently? Like the type, whether it's like retail, institutional?
Yeah, munis is primarily a retail-driven asset class, but they're investing in different ways. So we're seeing an increase in ETFs, something that's really mobile, people getting in.
Oh, you're talking Emily's language now.
My eyebrows are going up.
That has been a trend in munis. SMAs have been a really big trend in
Who's
munis
afraid
in
of
the last
taking the
couple of
long?
years. Those typically like short duration. So we're
This
seeing
is
a
a
lot
long
of
starting to
demand
form
in
up.
10 years and under. But typically munis
See,
are
we're over
very
the
safe,
20.
so direct retail likes them. You get a lot
We're
of
over the
people going
20
further out the
EMA.
curve
We got a
because
green
there's more value there
forecast.
right now too.
Once the
Danielle Moran,
EMA's
municipal
cross,
finance team leader at Bloomberg. Thank you so much. It's always good to get that muni in focus.
that's
on
the
a
signal, but
Friday. We're going to pivot now to maybe a
are you brave
little
enough to
less
front run it
stable
before it
and a
crosses, or are we
safe
going to hit
haven
the 50 and
asset.
roll
Some
back
people might
over?
say it's a safe haven asset.
It's
Crypto,
tough going
because
into the
crypto
VWAP.
market value has topped $4
I'm going to
trillion
hold. I'm not going to try and
as the
front run it. I'm going to
stablecoin bill
wait and
passed
see if
in
we bounce
Washington.
off
We're
the
gonna talk about
50,
this
and
with
then that's the
Nathan Dean,
rollover.
Bloomberg Intelligence senior policy
Thank you.
analyst.
Looks the same way.
Nathan, what is your take of the crypto week
See if
that
we
we
bounce
had
off
in
the 50 and
Washington?
roll
How
over.
much of this week was really a win for the industry?
So it was a tremendous win in which they were able to get one of their bills across into the president's desk, and this is the Genius Act. This is the stablecoin bill. Now, this bill only deals with stablecoins and doesn't deal with the broader crypto market structure for things like Bitcoin and Ethereum. So from the crypto perspective, they got a taste of what they want. What they really want is what's called the Clarity Act. This was one of the other bills that the House of Representatives passed this week. Now, this goes to the Senate, and we are just putting out an update where we think that it's going to stagnate, and you're not going to see really much
Oh, we got an
movement
order
on the
block.
Clarity Act until next
Hold on.
year, which is somewhat, disappointing, I think, for the crypto sector, because until the Clarity Act passes, companies like Coinbase and Robinhood, they can't move forth and have a regulatory framework. So the Genius Act was great for companies like Circle, but for the rest of the industry, there's still more time to cook.
Well, Nathan, on that legislation news, what has it done for crypto-related stocks like Coinbase or something like that?
So there was obviously positive momentum with this, and there was a lot of, I would say, sentiment and expectation. Obviously, when one of the political hiccups happened earlier this week, we saw Circle decline 8% and subsequently get that back. So, I would just say that for a lot of the crypto stocks at the moment, it's sentiment. Because there's this idea that President Trump is going to be, or at least is going to make America the crypto capital of the world, as he likes to say. But again, we just want to temper that with this idea that the Clarity Act needs additional support from Senate Democrats, including some Senate Democrats that may be a little bit hesitant to support something that benefits the president directly through his involvement in the crypto space. So, there's a lot of sentiment growing, and there's a lot of discussion from the SEC and CFTC perspective. SEC Chairman Paul Atkins was on TV this morning just talking about what he's going to do. But this Clarity Act, this is the bill that the industry needs in order to be able to move forth and remove a lot of the uncertainty that comes with the crypto space.
We're touching the
What are
50
really the
on
key
both at the same
tenets
time.
of that Clarity Act, and will they be able to, I guess, stay in place if we get more Senate Democrats on board? Or is the bill going to change in a way that maybe it wouldn't be as good for the industry in order to, actually get passed?
So the bill is almost certain to change. I mean, look, it's what happens in Washington. The Senate jams the House, and the Senate just says to the House, you're going to do what we say. That's mostly what happens. But there's two tenets here that are mostly important, and that is what is a security versus what is a commodity. Now, Bitcoin is a commodity. It's deemed as the courts as a commodity. And the reason why the crypto space wants to go into the commodity space is that because the CFTC, rather than the SEC, would oversee that space. And in our view, they have less onerous regulation. The other thing is the CFTC currently does not have authority over spot markets. So there's really nobody that oversees the crypto space from a regulatory perspective outside of those that are securities, which is just a small subset. So when you're a firm like Coinbase or Robinhood and you say, I want to go forth and I want to have all these offerings related to crypto, there's really no regulations here that they can play back to. And so they're operating in almost in a gray area. And that is why there's always this risk that a future SEC chairman, similar to what we saw with Gary Gensler, could come back and say, here's a lot of enforcement actions for your trouble. So it's a lot of clarity that they want, but also that ability to feel safe and know that we can actually grow and be protected.
All right, so Nathan, we've seen Bitcoin go above 120,000, but some experts are saying the path to 150,000 looks a little more and more likely. Do you agree?
Well, I leave the commodity pricing to some of my other my friends.
Doesn't have the potential, yes.
Yeah, but what I will say here is that a lot of it was sentiment, and we're not just seeing this in the crypto space. We're seeing this with just generally ideas of the Trump administration. Just go to deregulation in the bank stocks. There's a lot of sentiment here about what is the Trump administration going to do. But now that we've gotten past the one big beautiful bill, there's a lot of things that are going to start happening in the second half of this year. For example, this Clarity Act, if it passes, then there are going to be additional rules. And that sentiment will then actually be turned into details, and we'll be able to estimate what that does for the companies and those currencies. So I will just say is that sentiment does turn into action, and we're beginning to see the action take place in the second half of this year.
Nathan Dean, Bloomberg Intelligence Senior Policy Analyst. Thank you so much for joining us. Have a great Friday. Coming up, Catherine Doherty, Bloomberg finance reporter, on the big take. Jane Street's secrets spill into open and face rivals scrutiny. We'll have that in just a few moments. Taking a look at markets, though, S&P 500 pretty much unchanged. It's been trading like that all day. NASDAQ 100 also unchanged, but just a little bit in the red here. Treasury yields lower across the curve. A lot of movement in that front end, the 2-year at 3.8%.
Order submitted. Order filled. Order submitted.
All right, I'm trying to enter my short position. We'll see how we go here.
Order submitted. Target filled. Stop. Order canceled.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television,
Order
and
submitted.
the Bloomberg Business app. This is a Bloomberg Business Flash.
Order submitted.
It's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks
Order
wavering
submitted.
near records as traders parse a handful of earnings. Right now, the S&P 500 index, we'll call that unchanged on the day. NASDAQ is advancing up another 4 points, up by less than 0.1%. Little change. That is the key takeaway here. The Dow down 164, down 0.4%. The 10-year, 4.41%, with the 2-year, 3.85%. Bond yields fell as Fed Governor Christopher Waller reiterated his case for a July rate cut. Gold up $15 the ounce, up 0.5%. West Texas Intermediate crude, little change, down 3 cents now, 67.51 a barrel on WTI. Bitcoin down 1.4%, 117,840 now on Bitcoin. So the Dow, the S&P, NASDAQ trading mixed. Laura Cooper is global investment strategist at Nuveen. On Daybreak this morning, she told us she does see the stock market advance continuing.
markets are rallying largely for a trio of reasons. We can think about investor optimism of a strong Q2 earnings season. As well, given what we've seen in recent data, the U.S. economy is just continuing to show the surprising resilience. And then if we look at kind of the S&P 500 in particular, tech leadership continues to drive the way. So there's no sign of any imminent catalyst that could deter this ongoing rally.
Laura Cooper of Nuveen, interviewed this morning on Bloomberg Daybreak. Sarepta Therapeutics says another patient has died from acute liver failure after receiving one of its gene therapies, putting additional pressure on the biotech company after the recent deaths of 2 teenage boys. Shares of Netflix slumping now after earnings last night. Netflix down 4.6%. Recapping, the Dow lower, S&P now little changed. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right. Thank you, Charlie Pellet. I'm Lisa Mateo alongside Emily Grafeo. You were listening to Bloomberg Intelligence. Paul Sweeney does have the day off. Okay, so 25-year-old trading powerhouse Jane Street in the glare of a global spotlight. At least that's according to Catherine Doherty. She's Bloomberg finance reporter. Her latest big take story. This one, a lot to dive into, but I want to start by
got that nice little drop back. So I'm going to try and build a bigger position and take a big swing at qualifying
Jane
this.
Street has become one of the largest trading firms in the
fills.
U.S. and really across the globe. They started out, their founders are from Susquehanna. That's another trading firm that they compete with today. But over the years, they have really developed their technology and their people to generate billions of
it pretty
dollars
good,
in revenue.
and I got out. I took some profit, so I got a little bit of buffer.
Surpassed some of the biggest U.S. banks. They're
All right, I got 4.
larger
Let's
in
see if I get
scale,
6.
at least the money that they're making,
And see if
than
I get
Bank
the
of
fall,
America
get
and
the drop.
Citigroup. So we're talking a lot of money, and they are really behind
This is an
the
eval,
scenes.
just
So
so anyone
I like to
watching.
think
This
about
is
them
not like
as they
a
are
cash account. This is not
responsible for the plumbing of the market
a
and
paid
making
account.
sure
This
that
is
all of the trading is
Oh.
actually just moving through
Gotta
the
move that.
system. They're handling orders from customers, not directly. Some of it is indirectly. If you have a retail broker, they're the ones that are receiving the order from their clients. That order gets sent to a firm like Jane Street, and Jane Street handles the actual execution to make sure that they're matching the buyer and the seller. They might take the order and then eventually they sell it off, but the middleman player, that's Jane Street. They're the reason that trading can continue. Them and their peers play a very important role in the market
So
structure.
I'm basically
overall.
trying to build a position
Some
between here and the VWAP.
regulatory right now in India when it comes to Jane Street, which we're going to get to in a second. But you write in this big take that you wrote along with Bernard Goiter that they're famously secretive.
Order submitted.
Why are they so secretive on Wall Street?
Well, number one, they don't really have to say a lot. This is a private company. What they do doesn't
rundown.
require public interface at all. They're providing a service, and they don't have to answer to shareholders. So many times they would like to operate in the dark in many ways. It doesn't necessarily mean what's going on behind the scenes and what's happening in the dark.
So I'm predicting we're going to bounce off the VWAP and we're going to head back down.
But what they do is so, and who works for Jane Street is a very particular type of person. They have quants, they have mathematicians, and this is not unique to Jane Street. Other peers like Citadel Securities and Hudson River Trading, they also attract those types of people that go to these firms. But those are not the type of people that are in the business to speak out, and they're just doing their job because they're providing a service, and that service doesn't necessarily need words. It's a lot of really intricate. Again, it's the analysis of just how the markets are moving, and they're trying to just be faster and better than their peers. It's all about competition, and they say all of the market makers like a Jane Street and a Citadel Securities would say that competition is a good thing, because if you are trying to be faster, that's going to be a good thing for their customers, because orders are going to be priced tighter. You're not going to lose as much money, and really the reason that the market has evolved in the age of electronic trading in the way that it has.
Yeah,
is
I think
because
we're
of
going to
these
touch the VWAP, so I'm going to get the rest of my fill, and then I'm hoping we roll over.
I would not say I'm a pro
Yeah.
at all. Actually, I mean, the reason I enjoy the reason I enjoy
I think we're
reporting
gonna-
on firms like this is I'm learning so
If not, if we
much.
roll over
And the
sooner,
people
that's
that
fine. I
work
got enough
in
on.
the markets, covering market structure here at Bloomberg, I am fascinated by just how niche and how nerdy it goes. So, I mean, I would say what surprised me in this reporting, what surprised everyone on Wall Street was when the numbers were starting to come out of how much money firms like Jane Street were making. It was to surpass the big U.S. banks in terms of trading revenue. That was incredibly surprising and something that even competitors to Jane would look and say, how are they doing
Order
what they
filled.
do on
Oh,
the scale that
we got
they
the big
do?
pop.
And the
Let's see if
answer
we
to
get
that
the
in the
next one.
reporting and a lot of what this story is about is the amount of risk that this firm is taking. Now, the reason that they can take so much risk, that's another element to it. It's not as if they're just throwing caution to the wind. They're doing this and they know exactly
mean
how
like
much risk they're able to take. The
Have a
reason they can
long
stomach
and then
the
on
risk is
another
because of the
chart have a
capital
short.
that they're working with. That capital, the money that they are putting.
Yeah, no, I haven't done that. Laudioff does
for lack of a
that.
better word, playing with.
I got to really sit down and
it's
get my
so
mind
large,
wrapped around
and
that.
it's all theirs. So if you are a hedge fund, as comparison, that money
Because I could
you
see the
expect from
case for
shareholders. So if
taking
you're
a quick
big
short,
risks and it
taking a
doesn't
quick
work out,
long here while I'm
well,
filling my
it's not
short.
just,
You know what I'm saying?
sucks for us that it's really bad for your clients and your customers. Jane Street, that's their capital. So
I've got
they
plenty
will
of
take
room to
bigger-
let it
bigger risk
run.
because they think there's going to be a bigger reward on the other side. And if it doesn't work out, it's not as if they have to go explain that or their profit and loss is all their own money. So it's much different than the approaches that the banks and hedge funds take on potentially the other side.
We have about a minute left, and this is definitely a story that I know we're going to be hearing more reporting on from you. But regulators are watching Jane Street, specifically in India. Just give us the high level what the Securities and Exchange Board of India, SEBI, is looking at.
So they're looking at Jane Street's trading behavior.
All right, so I'm
specifically
in.
The options market. The regulator came out over July 4th weekend.
Yeah,
with
you know what? I got to get my
105-page
mind
order
wrapped around
outlining
that.
What they are alleging is market manipulation. And to not go too far,
I've never
into
thought of
the
it
weeds,
like
they're
that, but
pointing
it
out,
seems like a good
few
hedge if you
things.
start
The
getting
size of the
hammered
trades
in
that
one
this firm is
direction,
putting
but you
on,
want to hold the
and
trade.
because of
It
the
buys
size,
you more
the
time, you
impact
know.
to the overall market, and they're claiming that
So now I'm
Jane
hoping
Street's
for the
behavior
rollover,
is ultimately
that we bounce
harmful
off the
to
VWAP.
the end investor. So this is playing out. The firm has
Yeah, well, I'd
denied
be
that it
looking
is
good.
doing
I'd be about
anything
even on
that
the
is
trade.
nefarious or would be
Or I'd
considered
be,
market
you know,
manipulation.
I'd
So
have
we'll
more
see
room
what
to
happens
work
next.
to
All right,
the long or
Catherine
the
Doty, thank you
short.
for joining us right here in the studio this morning. She is Bloomberg finance reporter. You got to check out.
But this
that
is an
article
eval that I got
on
another
Terminal.
4 I can use. So,
We got a lot more coming up here on
so if this
Bloomberg
doesn't work out,
Intelligence.
it's
We're gonna be
okay.
talking with Brooke Sutherland. She's Bloomberg Boston Bureau Chief. She's author of the Industrial Strength newsletter. We're talking tariffs and all the impact that's having on the markets and on the economy. Speaking of which, let's get right to the markets. The
I'm
S&P
feeling pretty good
500,
about it,
that's
to be
little
honest.
change right now. It's up about 3 points. The Dow down about 152 points. And
I
the
just
Nasdaq
can't go
up about
6,500.
26.
6,500 is where it pops out. As long as we don't go into the draw for 65, then I'm good. There's a lot of resistance up here. All right, let's roll over. ES is doing the same. Are you still in your trade, or did you get out hazard? You're out. I wouldn't exactly call myself an expert. Oh, ads. Okay.
This is Bloomberg Intelligence with Paul Sweeney on Bloomberg Radio.
All right, Bloomberg Intelligence Radio here. I'm Emily Grafeo in for Paul Sweeney. He's at the beach today. We also have Lisa Mateo with us. Market's pretty much unchanged, but we're going to talk about industrials right now. We're joined by Brooke Sutherland. She's Bloomberg Boston Bureau Chief and author of the Industrial Strength newsletter. It comes out 10 a.m. on Friday. Go check that out. But Brooke, let's talk about what you're writing about today, the tariff deja vu, prolonging manufacturing slump. What is the current state right now of manufacturing activity in the wake of Donald Trump's trade war?
Sure, and you know, one of the things that I think is important
okay.
to remember is that we were actually in a period of manufacturing weakness. You know, one of the longest on record, if you're looking at ISM manufacturing data.
63.41.
There's a lot of optimism heading into
Okay,
this
so
year
if we break VWAP, then you think we're on the upward march.
In those parts of the industrial economy that tend to move.
I place this trade based on the VWAP rejecting.
That really hasn't materialized, and part of that has just been the uncertainty, the rising costs that have come with tariffs. And so what we're hearing
If we break the
from
VWAP,
industrial
then
companies as we get into earnings
we're probably going to the
talking
historic
about
highs again.
Things are still very sluggish, but they're
But
not.
if we reject the VWAP, it's going to
So
be
we're at this
a long
sort of
road down.
sluggish but stabilized level, and that's very reminiscent of what we heard from a number of companies.
Hoping all the big players took off early for the weekend.
Which also, you know, dragged the manufacturing sector into a period of real weakness as companies grappled with those rising costs and the uncertainty from his tariffs that back then primarily targeted Chinese imports.
Yeah, I would say you led right into my next question, Brooke. You read my mind. So I'm kind of wondering if you can compare the two, like the on again, off again tariff policy, and then his last trade war. How do you compare the two?
Sure, and you know, the last one really focused primarily on the industrial economy. They were much more targeted tariffs on a specific, you know, range of Chinese imports, and you know, the administration at the time really took pains to protect the consumer-facing side of the economy, and so many of those companies really didn't feel the pain of the tariffs to the extent that we saw on the industrial side. And what that means is that the industrial manufacturers sort of had to start making changes sooner, and many of them have been adapting in the wake of that last trade war. They've really reduced their reliance on China. They've gotten better at figuring out how to raise prices in a way that doesn't ruffle feathers with their customers, to pass on those rising costs from tariffs. And so they've been here before, and I think that does give them a bit of an advantage as they figure out how we move forward from here. Now, on the flip side, what we're seeing now from Trump is much more sweeping. It's not just China, it's pretty much everywhere on the globe, and everything under the sun is almost affected. And that's forcing a lot of companies that weren't hit quite as hard by the first trade war to really recalibrate and figure out their strategies. And then that also, of course, raises the risk that this trade war weighs on the consumer harder than the last one. And, you know, a lot of industrial companies will try to argue that the manufacturing economy can sort of, you know, split apart and stand alone and be really strong, even if we see the consumer side slump. And, you know, history has shown that's incredibly difficult to actually play out.
Yeah, when you talk to manufacturers, these industrial companies, how much do they kind of factor in a consumer that is weaker, that's feeling weaker, into their business decisions?
Not as much as you might think, because many of these companies don't sell to consumers. And so what we've seen over the past couple of years is the industrial sector, the really big manufacturers, have actually moved away from their more consumer-facing businesses. You know, GE, for example, used to sell light bulbs, and they don't do that anymore. Now they just sell jet engines. And so, you know, certainly these CEOs are cognizant of what's happening in the broader economy, but they're really focused on, you know, the more manufacturing side, which is what matters for their business. And, you know, I think why you see some of this caution in the earnings comments is because they are, you know, aware of what other companies on the consumer side of things are saying, particularly about pressure on the lower income side of the spectrum, but that's not really manifesting yet in the manufacturing world.
So, Brooke, how does all this play into earnings? I mean, we had some pretty good results from tariff-sensitive companies.
We did. I mean, some of that is just math. You know, when you look at what the guidance that companies gave in April, tariff rates were a lot higher than they are now, particularly as it relates to China. And so you've seen companies raising their guidance just because the tariffs didn't end up being as high as what they expected. We've also seen the weakening of the U.S. dollar, which is a big benefit, particularly for global manufacturers that sell overseas. And so just those two dynamics alone have really had a big impact in terms of the profit outlooks and the earnings that we're seeing coming in from industrials.
Brooke, before we let you go, just in the last couple seconds here, Trump has talked about bringing manufacturing back into the U.S., domestic manufacturing. So far in the earnings that we've seen, in the reporting that you're doing, is that shaping up to actually be a reality?
Oh, no. See what happens.
It's difficult to say that that's a real reality, and a lot of CEOs would be very skeptical about the extent to which there will be reshoring in the U.S. Certain kinds of manufacturing certainly will come back to America, you know, areas where they're really more of a national priority, like semiconductors, and even to some extent pharmaceuticals, you know, as we saw during COVID, how important it is to have domestic access to those medicines that are most important to us. But sort of the general manufacturing, I think there's a lot of skepticism over how much might actually come back to the U.S. And even looking at the tariffs that are in place now, what a lot of companies are thinking about is, okay, it doesn't make sense to be in China anymore, but it still might be more economical to be in Vietnam or Indonesia or Cambodia or Mexico rather than the U.S., where labor costs are very high. And there's also a big labor shortage that's really weighing on the manufacturing sector.
All right, Brooke Sutherland, always appreciate your time. She's our Bloomberg Bureau, Boston Bureau Chief. Be sure to check out her newsletter, Industrial Strength. A lot of good insight there. All right, for our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Well, stay with us. You have your top stories, global business headlines. They're all coming up right here on Bloomberg Intelligence.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Cammie McCormick. President Trump has responded to calls for more transparency in the Jeffrey Epstein case, but Natalie Brand reports there won't be any immediate results.
He's asked Attorney General Pam Bondi to produce any and all pertinent grand jury testimony subject to court approval, which the AG, Bondi, indicated she will seek to do today. Now, that is expected to take time. I spoke a short time ago to a former federal prosecutor who said we could be looking at months, if not over a year.
Trump is also threatening to sue the Wall Street Journal and its owner, Rupert Murdoch. Scott McFarlane has that.
The Wall Street Journal is reporting that there was a card or a letter sent by Trump to Epstein for Epstein's 50th birthday, which had what the Wall Street Journal characterized as bawdy language and references to it, and a drawing of some sort that could have been a naked woman.
The president this afternoon is expected to sign cryptocurrency bills just passed by the House. CBS's Kelly O'Grady.
Just more broadly, the fact that Congress is in a bipartisan way saying cryptocurrency, we actually want to figure this out and make it credible for Americans, that's a big deal.
An Idaho judge lifted a gag order in the quadruple murder case of Brian Kohberger. He pleaded guilty to avoid the death penalty for the stabbing deaths of 4 University of Idaho students at their rental home near campus. Steve Gonzalez's daughter, Kaylee, was one of the victims. He wanted the case to go to trial so he could learn what happened.
By hiding the truth, we're protecting our killers. We have to show the ugliness of what this person did. We're writing our victims' impact statements, and we don't even know what the impact is because they've hid the impact from all of us.
CBS has canceled The Late Show with Stephen Colbert. He will not be replaced. The network called it a financial decision against a challenging backdrop in late night. Matt Belloni is with the digital media company Puck.
The economics simply does not make sense anymore because people are not watching linear television late at night. They are watching the clips from these shows on digital platforms, but the monetization of that content is not the same.
The show will continue through May of next year when the franchise will be retired. Oscar-winning lyricist Alan Bergman has died. He teamed with his wife for hits like It Might Be You and the classic The Way We Were.
The way we were.
The Bergmans provided words and sometimes music for hundreds of songs from Frank Sinatra to Michael Jackson. He was 99. This is CBS News.
Almost back to even. Got some green. See how far we go.
It's your last chance to claim memorabilia from a popular British drama series. Deborah Rodriguez reports.
Downton Abbey fans will be able to bid on props and costumes at a farewell auction in London next month. Among the items going up for sale at Bonhams, the famous bell wall that called servants to duty, a wedding dress Lady Mary Crawley wore in the first episode, and the clapperboard from the movie set of Downton: A New Era. Some of the items will be available for viewing at Bonhams before bidding begins August 18th. The sale is a lead-up to the third and final film based on the TV show, Downton, the finale. Deborah Rodriguez, CBS News.
A film of Ozzy Osbourne and Black
All right,
Sabbath's
so we got to go through another whole cycle and consolidate underneath the VWAP and head lower.
Ozzy's Final Bow. It's a 100-minute documentary. I'm Cammie McCormick, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
The Jeffrey Epstein story is not going away for President Trump. Welcome to Balance of Power. I'm Kaylee Lines alongside Tyler Kendall in Washington. Thanks for being with us on Balance of Power here as we continue to follow a story of President Trump under increasing pressure from within his own party, within his own base, for more transparency around the case of the late convicted sex offender Jeffrey Epstein. President Trump now authorizing the Justice Department to seek the release of grand jury testimony from the prosecution of Epstein, as we have new reporting from the Wall Street Journal that suggests Trump sent a suggestive letter to Epstein for his 50th birthday. But Tyler, of course, President Trump is pushing back on that report.
Right, pushing back, but still big questions
It will.
about this authorization would actually glean what details we would get, because it's unclear if a federal court would even grant the
ES is actually
request to make the public
the signal is in front.
That's really what's at the center of this public.
Yes, this is a hard short on the ES. This is a really good short. This is a front run, like we talked about this morning.
Obviously, massive political questions as well, because this is exposing divisions.
You know, if you're in at the 20 or the 50, this is a front run short. You got the EMA heading straight down, just cross. This is when they cross. That's a huge signal.
Put the Vice President J.D. Vance in perhaps a tricky position, since he had previously been pretty outspoken on this issue and was chosen in part for his populist right roots that really are raising concerns about how the administration's been handling this.
Yeah, so this story obviously is dominating Washington. Not sure it's moving markets, though, so let's get a check on what is moving markets today with an eye on Wall Street and turn to Charlie Pellet up in New York. Hey, Charlie.
Hi, thank you very much. Wall Street Pharaoh focused very much on the beach. We got a whole lot of nothing going on right now. With the Dow, the S&P right now both in the red. Little change, though. That is the key takeaway at midday on the S&P right now, down by 0.5 point. NASDAQ up 15, gain there of 0.1%. Bond yields fell alongside the dollar as Fed Governor Chris Waller reiterated the case on Bloomberg for a July rate cut. Stocks fluctuating as traders parse a handful of earnings. Again, the S&P lower, little change, down by 1 point. We've got the 10-year 4.41%, the 2-year 3.85% right now. Gold is trading higher by $16 the ounce, $33.54, up 0.5%. West Texas Intermediate crude, little change there, up 6 cents a barrel, $67.60, up by under 0.1%. Lori Heinel is Global Chief Investment Strategist at State Street Investments, and on Bloomberg Open Interest this morning, she talked about the market backdrop.
Certainly, a lot of the risks have really passed. I mean, that crisis moment in trade has passed. That's given a little buoyancy to consumer confidence. Labor markets are still pretty strong. Earnings growth is coming in pretty good. And it seems as though between the balance of how tariffs are evolving and how companies and consumers are navigating that, we're kind of getting behind what we saw in the March-April period.
Lori Heinel interviewed on Bloomberg Open Interest. Netflix lower after earnings, down now by 4.5%. So again, recapping, little change for the U.S. equity market at midday. S&P 500 index, I'm calling that flat. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now.
10. I have 10 on.
Podcasts. I'm Charlie Pellet. Back we go to Washington. Balance of Power continues right now. Once again,
I
your
got
hosts,
10 working.
Kaylee Lines and Tyler.
I gotta
Randall.
make 15,000 in order to qualify the
Thank you so much. A
250K
sleepier day
account.
than
So I'm
usual
going.
on Wall Street on this
I'm going heavy
Friday,
contracts.
but not necessarily a sleepy day when it comes to politics.
But
here
I got room to
in
let it
Washington.
run.
Certainly, when it comes to a story that has been dominating the headlines over the course of the last week and change, President Trump under increasing pressure from his base around the case of disgraced and convicted sex offender Jeffrey Epstein, who of course died in prison years ago. A sequence of events happened yesterday. First, of course, a Wall Street Journal report was published alleging that President Trump, before he was president, sent a suggestive letter to Jeffrey Epstein for his 50th birthday. The president calls that letter fake and is threatening to sue the Wall Street Journal over that story. But after that story was published, Tyler, he has now authorized the Justice Department to ask for courts to release the grand jury testimony from the prosecution of Epstein, seemingly acquiescing a bit to some of this mounting pressure.
Right, and it's probably worth pointing out that the Justice Department and the FBI last week said that Epstein did not keep a client list and that no more files related to the case would be made public. And that's where we want to start today's segment, bringing in some of our Bloomberg News reporters and editors. Wendy Benjaminson, Bloomberg senior editor, who's live with us here in our D.C. studio, and Ava Benny Morrison, Bloomberg News legal reporter. Ava, I want to start with you because there have been various efforts in the past to get Epstein-related documents unsealed. Is this time going to be any different? What are we actually expecting to get out of this authorization that the president has appeared to grant?
It's certainly not going to be easy. There will be a number of legal maneuvers that the Justice Department or Bondi's office have to jump through. What happens in the grand jury room is traditionally sacrosanct. It's not as easy as asking a judge to unseal troves and troves of testimony that was given during those secret proceedings. We're talking about potential victims, witnesses, making claims that may have been unsubstantiated. So even if the Justice Department makes a move
here we
to
go.
have some of these materials unsealed, I
We
expect
want
it's
blood
going
in
to
the
be a
streets.
very lengthy process.
In these streets.
Well, so if the process takes a long time and might not have the end result that some of the president's supporters who are pushing for more transparency around Epstein would want to get, Wendy, is this just giving the president cover essentially to say, well, at least I tried?
It is, and it is a fig leaf, and it's about the size of a fig leaf, because the other files, the ones that Pam Bondi said, we now believe this not to be true, the client list that was on her desk, that now she says, no, it was just the files that were on my desk. In those files, not only is grand jury testimony, but it's witness interviews. It's Ghislaine Maxwell, his partner's phone records, and she wore a wire at a time. So there are those transcripts. So there's, for the people who really, really want this to come out, this is just the tip of the iceberg, and probably will only, when it's released, only create appetite for more.
Right, so Ava, to actually build off that, when Pam Bondi did release some of these files earlier this year, it was considered to be a letdown for many conservatives that were seeking more information here. Can you just put into context just how much information these opponents that want to get more, how much are they looking for? Like, what's ultimately some of the end goals here from the people that want to see additional files released?
There's certainly been feverish interest in anything to do with Jeffrey Epstein, and a feeling, particularly among Trump's conservative base, that there is information the public doesn't know about, and they do deserve to know about it. But over the years, through various criminal cases, as Wendy had mentioned, involving Ghislaine Maxwell, Jeffrey Epstein himself, and civil litigation involving the victims of Jeffrey Epstein, we have seen dribs and drabs of information come out that have given us a bit of a insight into the breadth of Jeffrey Epstein's network, who he spoke to, who he associated with, and even people who have been accused of participating in some of his crimes. So I think, you know, the recent calls, what people are really after here is the so-called client list. And as you mentioned, the statements coming out of the Justice Department and Bondi's office that this client list doesn't exist, and it seems to be a little bit of a red herring. And certainly from the people that I've spoken to who have been involved in these cases for many, many years, there is no client list. So I don't know exactly what they're hoping to get out of this grand jury testimony. I would also note that there will probably be a number of objections from people who participated in these proceedings and went in thinking that their testimony was going to be kept secret.
That's a good point. Wendy, I want to return to the point you were making about what could be done to appetite if they're given a taste of something more. They may just want even more information, and this is a story that could keep feeding into itself. President Trump, as we know, is a master of cultivating the narrative he wants to talk about, making sure we're not talking about things he doesn't want to talk about. That is not true this time, and I wonder what you think that tells us.
Well, you're absolutely right, Kaylee. He can always adjust the flow of news to suit his agenda. The problem in this case, though, is that there are things that are helping him now shape that narrative. So it may not be the horror that it seems to be for him right now, or that he would lose his base. Because right now he has rallied a lot of MAGA supporters against the Wall Street Journal for the story they had last night, saying it was fake news, as you pointed out. And then also, it's the Democrats trying to seize upon this. And if I were a Democratic consultant, I would say, don't help. There is a long-standing political...
I think we're running all the way back down to the day lows.
Let him. Like, don't.
I think we're running all the way down here, if not even further.
oh, it's the Democrats who want it. I don't want to be aligned with the Democrats.
And that's what President Trump is saying. If Democrats have such a big problem, why didn't they release the files during the Biden administration?
Exactly. So they're feeding into helping him sort of take the narrative back. But it won't be solved by the grand jury testimony, but it may solve itself in the end.
Well, I'm wondering how you also think Congress is now potentially playing a role in this as they're trying to get lawmakers on the record to vote for the full files to be released, and you have that.
Well, there's nothing stopping it. I've got nothing to stop it from going lower. There's no trend lines. There's nothing. There's nothing to stop it on my chart.
I don't know, however, if you can get 260.
And I'm being greedy. I'm being a little greedy.
To agree to it, and Mike Johnson and J.D. Vance.
But there's nothing here to stop it. I mean, I've got nothing.
But we'll see.
I mean, if you look down below, there's nothing all the way down to here.
Actually control the conduct of the Department of Justice from here, and what information actually will ultimately be released. How do we think about the power
this fair value gap is all I got.
I think it really comes down to what is allowable under
you know what I'm saying?
law, and it will be the ultimate decision of a federal judge whether he or she decides to.
Do you have resistance stopping it?
Certainly a rare occurrence. You don't often see the Justice Department.
I mean, there's no reason for it to stop.
What is meant to be secret grand jury testimony. So I think that.
Now, if this was if this was a paid account, I'd be pulling contracts off. Don't, you know, I'd be peeling off contracts.
What is allowable under federal law and the decision of a federal judge.
Well, Ava, just to put a bow on this in our final minute, I know that you have noted that.
Well, I'm just trying my trade idea to see how far it works out.
In a Florida state case, can you just give us a little bit more background here on what successfully has come forward already when it comes to this case?
I mean, you've got the cross, you've got the perfect setup right here. This could run 100 points. You know, it'll oscillate, but this is the perfect setup. See, this was the long. This is the short.
And there were some records that were
remember we went over it this morning.
And involving grand jury testimony of people that worked in Epstein.
The forecast cloud is getting bigger, which means there's more selling coming in. There's nothing to hold it up unless news comes out. You've got a natural rotation, so we may rotate. You know, we may rotate up and flirt with the control EMA, or maybe even touch the 20 EMA, and then roll down. There's nothing to, you know.
To the fate of Jerome Powell, a conversation with Christopher Waller ahead.
I think all the good news is baked in. No, I've never messed with Forex. No. I put all my time into the ES and NQ. I'm too invested. You know what? I may try like the forecast over the Forex and different instruments, but I want to get to the point where I get a prop firm account funded, get payouts, and possibly get a live funded account, and then have the strategy reprogrammed, and then if people want to subscribe, I can show that I've had success, make videos on how to use it, how to read it. So somebody who knows nothing about trading but wants to get started, they'll have absolutely everything they need to get started, exactly what's on the screen. In a few hours of studying and setting things up, you can start practice trading, you know. That's where I want to get before I start adding new instruments. You know, have a Discord and everything, so you can basically download this, watch all the videos on how to read it, and follow along in the stream, and teach yourself how to trade by having everything you need. And then if you want to add to it or whatever, you know, that's the dream. Oh, look at that. I got a Zoom in 9 minutes. I got a team meeting. Okay, dude. I'll be here Monday if you don't get back by the end of the day. Yeah, it's tanking now. NQ doing the same. They follow each other. Oh, this is crazy.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We've got red on the screen right now with the Dow, the S&P, NASDAQ all declining on this Friday midday. Right now, the S&P lower by 3, drop there of just about 0.1%.
What's going on? Volume's getting a little funky.
Down by 0.5%, while NASDAQ, we'll call that flat on the day. Bottom line here, we got the S&P 500 index hovering close to record 62.93, where the index stands right now. The 10-year at 4.41%, with the 2-year 3.86%.
Trump pushes for 15 to 20% tariffs on EU at a minimum.
West Texas Intermediate crude flat on the day, 67.51 a barrel. And Bitcoin, as we wrap up crypto week, Bitcoin down 1.5%, 117,000.
That just came across the wire.
On Bitcoin. Bottom line here, stocks fluctuating as traders parse
Jane Street.
earnings. American Express's build business and its
doesn't
cars
understand.
and other products outperformed expectations.
Jane Street? What's Jane Street?
American Express shares, they are down though by 2.7%. Also out with earnings this morning, Charles Schwab advancing 2.1%, and shares of Ally Financial after earnings down by 2%.
Quant trading firm. Oh, okay.
Subscribe to Bloomberg News now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Tyler Kendall and Kaylee Limes.
Yeah.
All right, Charlie Pellet tracking financial markets.
I don't know if I trust that or not. You know what I mean? Because it's mostly human beings on the switch.
Narratives, one, of course, being fundamentals in the earnings story. Others being political considerations, including, of course, the political pressure that is mounting on the chair of the Federal Reserve, Jerome Powell, and whether or not his future is uncertain. And what it means
you'd have to have a pretty big account to let something like that run. But I guess they probably have limitless money.
The Fed having a rate decision coming up later on this month. At least one voice is suggesting that at that decision, they should decide to cut rates. Fed Governor Christopher Waller making the case for a July cut.
Tell Jane Street that they can sell. They won't now.
One side, of course, of the Fed's dual mandate. He first made that claim in a speech last night.
They can start buying up
our
my
colleagues
stock
on Bloomberg Surveillance to reiterate his points earlier this morning, even suggesting he'd go as far as to dissent at this month's
You would hope. But too many instances coming out, and 1 second later, a shit ton of shorts.
Otherwise, if everybody committed before, you don't even need to have the meeting to have a discussion. So the goal is to always go to the meeting, sit down, listen to all sides. People will try to convince me of their view. I'll try to convince them of my views. And in the end of the day, you make a decision on what you think is the right outcome and the right data.
There's the tariff
how
news.
the data is coming in. And right
That's
now, I laid
what's
out my
probably
case last
playing
night.
with
I
it
don't
right
think I
now.
could be any more clear, I hope, as to what my position is and why I think we need to do this. It's just how I read the data and how I think about going forward, how you respond to anything that involves tariffs.
There's a lot of politics in this decision coming up, more than usual. And I'm wondering, Governor Bowman has also suggested she would prefer a rate cut in July. If two of you vote for a rate cut, if two of you were to dissent, would you worry about the market reaction to that?
You know, one of the things that has always bothered me since I took this job is the criticism that we are nothing but groupthink. All the meetings are the same. Nobody dissents. Nobody does anything. And I think this is healthy. I think this is a turning point in the way we want to think about policy. Some people don't want to cut, some do want to cut.
my strategy out.
Coming out and making the case either side, that's good, healthy debate. Otherwise, if we're always going to do the same, the joke is, why don't you just have one person set policy and send the other 18 FOMC members home? So this is healthy. I think this is what you want to see in a democracy. You want to see policymakers have serious, open discussion about where policy should go. It doesn't mean anything about politics or anything else. It's make the
Just
economic
blew the
argument
forecast out.
and see if you can convince others to go along with you. And that's all I'm trying to do.
We totally agree with you, for the record. We were sick of the groupthink, and it's good to have dissent.
Yeah.
Mike essentially is asking if you will dissent at the end of this month. Is there value in dissenting on the FOMC?
Well, I mean, it's often the case that you
Come on, come get me.
dissent if you make it very clear you think at this moment in time this is important
A little bit more.
to do. If you were to go in and do kind of a
Gotta get ready to
jihadist, I'm
close
gonna
it.
dissent at every single meeting, no matter what happens, then
Come on,
you
keep
don't even
going.
have to show up. Everybody knows what you're going to do. So it is important to make sure that if you dissent, you do it carefully and you have the right reasons, and it's not going to turn into a serial dissenting potential case. I mean, that's how I take my job seriously and responsibly. So I only would think about doing this. I dissented on the balance sheet slowdown earlier this year because I felt like that was not needed. And that's kind of the situation we're in now.
Chris, if you do cut, the markets will
man.
go one way. If you don't, they'll go
I'm gonna
another.
get snapped
perhaps.
out on this run back.
How critical is it to get to a rate cut fairly quickly? You've mentioned the danger to the labor market, but if you do wait till September, is that going to be too late?
Well, that's kind of the debate. What does it mean to wait 6 weeks? Is it that critical? And the answer is probably not. It could be, but it's also the reverse. Why wait till September if it's just 6 weeks?
Get
That's
beat down
exactly
one
the
more time.
thing. It doesn't kind of matter. Just start thinking about, do I want to wait and risk something happening? This is what we saw last summer, by the way. We left July, we left rates, and then boom, we got a very weak, bad labor market report. The unemployment rate jumped 0.2. Payrolls went way down from where they were, and people were screaming at us last August, you guys should have cut in July. So 1 month it always is 1 month. Just remember that, it's just 1 month. But we live in a world in which we have to respond to real-time data to kind of sense of where the economy is going. And I've always said, if you worry about long and variable lags, which everybody always talks about, the whole point of that is to get ahead of it, not wait for it to happen, and then take a policy action that takes quarters or months down the road to actually have any impact.
The new worry is tariffs. We've just had a 6-minute conversation with you about monetary policy. You've built a case for lower interest rates, and no one's talked about trade or inflation. 2 assumptions in your speech yesterday.
Because it's at
and
the
I think they're
high.
important assumptions.
Oh man,
A
I'm
large share
totally
of
going
tariff
to lose the whole
increases won't be
thing.
passed
I'm
through
going to
to
get snapped
consumers.
out.
Any increase would fade over the next year or so. What data underpins that conclusion?
Well, one, it's just economic theory. So you put on a tariff, as long as it's a one-time tariff and that's it, that's a one-time price effect. I mean, this is economic theory. You could not get in any serious economic model persistent inflation from that. You would have to cook up some other amplification mechanisms, and that's what people talk about. Wages will start going up and everything will get out of control. You're not seeing that at all. This is just not. Those kind of amplification mechanisms or wage price spirals aren't happening. Tariffs are a tax, and in public finance, you learn that you may levy a tax on a firm, but who bears the incidence or the burden of that tax? It can be a group of people or one person.
Oh shit! Now I got a Zoom meeting in 1 minute.
This is what I've heard from a lot of firms. If there's a 10% tax.
All right, I got to go get on my Zoom meeting. I'm hoping I don't get blown out here. It's a trailing draw, so wherever my high is, if it comes back 6,500, I get popped out. So I'm going to get out if I get back to the lows.
Passed on. And as I mentioned last night, I've heard this for months now. Like the rule is 10%.
If it goes up much higher, I'm going to lose it.
Suppliers will eat a third.
All right, I got to go off, Mike. I'll talk to you in an hour.
So if you eat a third of it and it's 10%, like I've been arguing, this is like 3/10 of three tenths on the inflation rate for a few months, and that's it. And it'll persist if you do 12-month over 12-month. That base effect will not go away for a while, and then it'll just drop off a cliff. So that's why I've been arguing you want to look at like 3 months and 6 months to see if these tariff effects pop up and then go away.
That was Federal Reserve Governor Christopher Waller. The headline there, he hinting that he would dissent if his colleagues voted to hold interest rates steady at the July FOMC meeting later this month. He was joining our colleagues on Bloomberg Surveillance this morning, including our Michael McKee, Bloomberg International Economics and Policy correspondent, who joins us now from Idaho. Mike, obviously, as you mentioned in one of your questions, there's now this political aspect hanging over the FOMC's next decision. You also sat down with Mary Daly yesterday, too, president of the Federal Reserve Bank of San Francisco. What's the consensus that you're hearing from Fed officials as the White House's rhetoric really ramps up?
The Fed is not going to cut rates at the end of July meeting on July 30th. Most members have made that plain that they're not voting for it. And we go into the blackout period tonight, so we won't hear anything more from them. And it's unlikely we'll get any kind of data or anything that will change their minds between now and the end of the month. The political question becomes, of course, what does Governor Waller do, because he's considered a candidate for to replace Chairman Jay Powell. If he wants to be Fed chair, there is pressure on him to dissent because the president values loyalty above all else. And so if he doesn't dissent, one might think that President Trump would reject him. The other issue is if he does dissent, and perhaps Michelle Bowman, who has also expressed a preference for July, also dissents. We haven't had two dissents like that from governors in several decades. So that could be an issue in terms of Fed credibility, start people on Wall Street talking about big divisions at the Fed. So it's going to be a very difficult and narrow path for Waller to walk on the 30th, and we'll have to see how far he'll go.
Well, and I thought it was interesting that Waller himself pointed to the fact that it's the entirety of the Federal Open Market Committee. And if they all are supposed to always have to agree with each other unanimously, it might as well just be one person making the decisions, which arguably might be how one could read the administration's focus on Chairman Powell, like he alone can control the direction of interest rates. But it does speak to the idea that even if you remove Powell from the equation, even if someone like Waller becomes chair, there's not necessarily going to be a consensus to keep easing, even if Waller would want to push in that direction.
Oh, that's absolutely correct. And it's been kind of surprising to people on Wall Street and economists around the country that the president doesn't seem to understand that he thinks he can jawbone Jay Powell into doing something on his own. And that's one of the issues for whoever becomes the next Fed chair. The president may be expecting somebody to walk in the door and start cutting interest rates, but the 12 voting members of the Open Market Committee are going to have something to say about that. And so it's unlikely that the president will necessarily get what he wants, as Chris Waller pointed out. What Waller does want, I think, and what he could encourage as chair is perhaps more dissents. The idea that members make their feelings known and the public gets a better view of what the internal debates are. We get something in the minutes, but they are whoever is speaking is not identified, and they refer to them as groups of several or some, things like that. So that might be something that Waller is talking about doing down the road, is encouraging more dissents and more people to take firm positions, even if they disagree with the chair.
All right, Michael McKee, Bloomberg International Economics and Policy correspondent, still reporting for us from Idaho. Thank you so much, and a great conversation with Fed Governor Christopher Waller earlier today. I do want to make mention of some headlines that have just crossed the Bloomberg terminal coming from the Financial Times. The FT reporting that President Trump is pushing for a 15 to 20% minimum tariff on all EU goods. And we're seeing stocks kind of right around session lows off the back of that, though we're only down about 0.2% on the S&P 500 right now. Keeping in mind, of course, that President Trump less than a week ago sent a letter to the European Union saying if they don't reach a trade deal by August 1st, a 30% tariff would be implemented. The FT reporting that the administration is looking at a reciprocal tariff rate that exceeds 10%, even if a deal is reached. We'll continue to keep you updated on that story, and we have much more to come here on Balance of Power on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all in the red right now. In fact, worst level of the session for the S&P, down 8. S&P 500 index currently trading at 62.89. A drop there of 0.1%. The Dow down 232 points on the Dow, drop of 0.5%. NASDAQ falling from a record, down 21, drop there of 0.1%. So bottom line, yes, a down day, but the S&P still holding close to a record again. It is now lower by 0.1%. Bond yields fell alongside the dollar as Fed Governor Christopher Waller reiterated his case for a July rate cut. 10-year 4.41%, the 2-year 3.86%, and the 30-year 4.98%. Gold up $16 the ounce. The precious metal higher by 0.5%. A retreat for crude down 0.2%, 67.40 a barrel. And Bitcoin right now down 1.3% at 117,928. Fed Governor Christopher Waller on Bloomberg Radio says worries about hiring in the private sector have driven his call for the central bank to cut rates this month.
Well, that's kind of the debate. What does it mean to wait 6 weeks? Is it that critical? And the answer is probably not. It could be, but it's also the reverse. Why wait till September if it's just 6 weeks?
And in that interview, Waller was also asked if he would take the job as Fed chair.
Look, in 2019, the president contacted me and said, would you serve? And I said, yes. If the president contacted me and said, I want you to serve, I would do it.
Fed Governor Chris Waller interviewed on Bloomberg Radio. Again, recapping stocks lower, S&P down 5, drop there of 0.1%. After earnings, Netflix down 5.1%. Balance of power continues right now. Back we go to Washington. Once again, your hosts, Tyler Kendall and Kaylee Lyles.
All right, Charlie Pellet keeping track of markets for us from New York, checking on all the asset classes, crypto included. Thank you so much. On crypto, interesting to see Bitcoin actually down a little more than 1% today. As Charlie mentioned, we're hovering around the $118,000 level, even as crypto in Washington is taking a massive step forward today. Of course, after the passage yesterday of the Genius Act in the House of Representatives, having already passed the Senate, it now is going to be on President Trump's desk for a signing ceremony later this afternoon. It's actually slated for roughly 2 hours from now, 2:30 p.m. Eastern time. Going to be a very big moment for the crypto industry, yes, Tyler, but it's also another big moment for President Trump, another legislative victory that he can put down on his accomplishments list. He wanted this of Congress.
Right, he wanted this of Congress. It is actually one of 2 legislative victories that we saw this week come out from the U.S. Congress. The other is what's known as the rescissions package. This is that lawmakers are now clawing back about $9 billion worth of previously appropriated funds. It's going to impact public broadcasting dollars. The bill also ends a swath of foreign aid projects and closes the U.S. Institute of Peace. And these legislative victories for the White House is where we want to start with our political panel. Today, we're going to bring them in. Rick Davis, partner at Stone Court Capital and a Bloomberg Politics contributor, and Christina Greer, associate chair for the Department of Political Science at Fordham. Rick, I want to start with you and talk about this crypto bill, the Genius Act, which has been passed into law. President Trump is holding this big signing ceremony today at the White House. But I'd love to get your take on how members of both parties are really capitalizing on crypto becoming this political force.
Yeah, look, I mean, the crypto industry spent $100 million in the last election cycle, getting their friends elected to Congress and the White House. That is a powerful force moving through the political movement today. And there are a lot of members who want to get on that bandwagon, and not just because they see this much money being applied to the political system, but they probably hear a lot when they come home from their constituents about crypto. And there's no question, when you look at the survey data, people want some kind of a regulatory framework around crypto so that they can feel like they belong to the financial system. So I think this is sort of declaring obvious. Maybe it's been a long time in coming, but the fact that President Trump can sign this into law, he's making a lot of people happy and not really making too many enemies.
Well, as we consider the bipartisan nature of this as well, Christina, there were 78 Democrats who voted for the Clarity Act, a separate market structure piece of legislation that still has to get through the Senate. There were well more than that voted for the Genius Act. This was an area of bipartisanship we saw on display yesterday. The rescissions package that Tyler mentioned, however, was decidedly not so. That is once again, party line, just as budget reconciliation was earlier this month. What does that signal about the chances of any further bipartisan compromises moving forward, especially on appropriations as we approach the end of the fiscal year?
Yeah, I think we need to take it on a case-by-case basis. I mean, as Rick said, crypto is very attractive to both Democrats and Republicans and their constituents. And because it's still relatively new to a lot of voters, there is a desperate need for regulation. And I think that, members of Congress are trying to bring back to their constituents that they're actually on the right side of history and trying to make sure that some of these levers of power are in check. We did see also, though, with Donald Trump during his first iteration as president, he was wholly disinterested in the legislative process. He much prefers executive orders. This time around, he actually does want some big legislative wins. And this latest, financial package that goes straight down partisan lines for the most part really does show the fissures within the two-party structures. This, clawing back of $9 billion for PBS and public radio in communities that Republicans serve. And so it'll be really interesting to see when this goes into effect, if it does finally go into effect, how Republicans are going to go back to their constituents and justify some of these changes that have been made. Internationally, a lot of voters don't always think about international politics. They really do think about their own pocketbook issues. But I think we are seeing in some of the public opinion data that both Democrats and Republicans do see a need for this soft diplomacy, as we call it, making sure that individuals from other nations have access to resources that ultimately we pay for. And those are seemingly off the table more and more with this particular administration. And Republicans are voting in line with their party, even if they are talking behind closed doors that they're not exactly happy with what's going on.
Well, Rick, to build off of this, we did see some Republicans come out and say that they did have concerns with this rescissions package. And I think it's fair to say that this $9 billion is considered to actually be a drop in the bucket, if you can believe it. It's not a huge package, but we did hear from the OMB director, Russ Vought, who said there's going to be more rescission packages coming. How is this going to come down for Republicans when it comes to supporting the administration's goals here? Is this going to be a significant issue, or is this a different sort of path when you see other Republicans fall in line against perhaps what has been billed as bigger legislative achievements like the One Big Beautiful Bill?
Yeah, Tyler, I think this is going to be a topic we talk about a lot on balance of power throughout the course of this year, because Russ Vought says he's got, basically $150 billion that DOJ has identified that he wants to put into various rescission packages. And this package was designed to be the easiest one they could get through to show that they could actually pass a rescissions package. And it barely made it through the United States Senate. By 2 U.S. senators would have tanked the bill. So there's more hard work for this administration to do if they expect to get more rescissions done. And that being said, we are entering the appropriation cycle. And so you have appropriators who have appropriated that money that just got rescinded. And they are trying to do a bipartisan appropriations process, which you have to have because you need 60 votes to pass that appropriations. And the only way they can get it was the cooperation of Democrats who now see their policies that they have gotten through other budget years gored by this administration, and an expectation that more will be coming their way. So how do you get an appropriations bill through that you need to have bipartisan support for if you're in the process of rescinding the projects that many Democrats consider sacrosanct? I think it's going to be an incredibly challenging year, the year before a midterm election.
Yeah, which means it's probably going to be a pretty stressful month of September as we look ahead to the appropriations process. But of course, it was also a pretty stressful month of June as Republicans were racing to get the reconciliation bill through, as Rick was pointing out, by literally squeaker margins by the president's July 4th deadline. They, of course, were able to do so. The question, Christina, is how the American electorate actually is receiving that effort. I want to point to some new polling from the Associated Press and the NRC Center for Public Affairs Research. It finds that about 2/3 of U.S. adults they surveyed expect that new law will help the rich. 6 in 10 think it will do more to hurt than help low-income people, and about half think it will do more harm than good for middle-class people and people like them. Is that evidence that the Democrats are winning this messaging war so far?
I don't know if they're winning. Let's be clear. The Democrats aren't great on offense or defense. So we'll see if they can pull this through all the way through the midterms. But, the way the Republicans have built in certain protections for themselves is some of these draconian policies won't take effect until after the midterms. So they'll say, Democrats are ringing an alarm, but you haven't felt anything as of yet. What is incumbent upon the Democrats to do in diverse electorates is to articulate what will come down the pike. Even if people haven't felt it just yet going into the midterms, they will most definitely feel it afterwards. And so having, we know that voters go to the polls based on economic and pocketbook issues, really explaining to them what these cuts in Medicaid will look like, really explaining to them what these cuts in various jobs in the government sector will look like for them and their communities. And that is an economic issue that people can wrap their minds around when it comes to them personally. When we talk about this amorphous thing called the economy, it's very hard for people to fully see where they fit in, and you can always say it's about others. But when you can walk someone through, and so many provisions in that big, beautiful bill that were passed are contradictory to a lot of the Republican purported values, right? They say they want smaller government, but there's trillions upon trillions added to the national debt, and there's so many things that will be taken away from the American public. So if Democrats can't take this ball and run it across the finish line, I think that says more about the Democratic Party than the policies themselves. But there's so many things that are baked in where a lot of Americans won't fully feel it until after the midterms. And so it's a projection conversation that Democrats will have with some voters in particular areas of the country.
Well, Rick, I'd love to get your thoughts on why this bill might not be resonating in the polling that we've seen so far, because we got Michigan consumer sentiment, the gauge today for July, and it came in above estimates. And I know that you track this gauge pretty closely. What should we make of how consumers are reacting to the White House's policy? Because this was a pretty good week in terms of economic data.
Yeah, I really love the Michigan Consumer Sentiment Index as a political finger in the wind, and it makes me so happy that on a Friday I get to talk about it. So thank you.
Doing it just for you, Rick Davis.
You're the best. The markets were the readings were flat from June, but I want to remind everybody since December of 24, this is still 16% below where it was then, and it's because people are concerned about inflation. And we hardly ever talk about inflation. We talk about interest rates, we talk about trade, we talk about reconciliation, tax cuts, budget cuts, rescissions, but we hardly ever talk about inflation. Yet it's the one thing consumers care most about. In fact, they specifically asked consumers in this Michigan Consumer Sentiment Index for July, tell us what you think about the budget cuts or the cutback in the federal government spending. And they said, that doesn't affect us very much. What affects us is inflation. And because of the concerns that these consumers have about the sort of on-again, off-again tariff policy, they say they are still fearful that inflation will go up in the future. And that tells you a lot about how people feel about the economy in America today.
Well, and it comes, Christina, as President Trump is actively pushing the Fed to lower interest rates, something that actually could, in theory, or at least the Fed fears, translate into higher inflation, allowing inflation to get out of control. Is the president reading the needs of the American people economically incorrectly? He thinks they want lower mortgage rates, but really it's less about that and more about what they're seeing in prices everywhere else.
Yeah, I mean, we know that, if you look at the financial history of this particular president, I'm not fully confident that he understands money, to be very honest, if we look at his various bankruptcies. And so he hasn't been one who's been thinking about poor people or middle-class people for the vast majority of his life. So this, to me, is not surprising that, he would have some sort of fiscal policies that adversely affect millions upon millions of Americans. There's so many people, we saw it when he and Joe Biden initially were campaigning, who really wanted to talk about how they felt when they went to the grocery store or the gas pump. So many people cannot buy homes, absolutely, but in their everyday lives, as you said, are really thinking about how to survive, and especially as it seems as though jobs are decreasing in so many different sectors across the country. So this will actually hurt the American people, and it'll be curious to see how his party frames it, since, like schools of fish, they have to sort of follow the president based on his various economic whims. And I don't know how, as we get closer and closer to November of 2026, how they'll be able to justify when people go to the polls, they will be asked the question, are you feeling better off now than, say, 2 years ago? And I don't know if many Americans will be able to say that they are.
All right, Christina Greer and Rick Davis, our political panel today. Thank you so much. They'll be back for more in the second hour of Balance of Power, which starts just a few minutes from now. So stick with us. I'm Kaylee Lyons alongside Tyler Kendall. This is Bloomberg.
Order filled. Target filled.
Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lyons.
President Trump makes a move in the case of Jeffrey Epstein. Welcome to Balance of Power on Bloomberg TV and radio. I'm Kaylee Lyons alongside Tyler Kendall in Washington, where the conversation has been dominated by controversy surrounding the release of information related to, of course, the convicted, now late, sex offender Epstein. President Trump now asking the Department of Justice, or authorizing them to ask a court to release some files related to Epstein. The question, of course, is will that be enough to assuage his supporters who want more transparency around this. And of course, Tyler, it comes after a Wall Street Journal report hit yesterday alleging that President Trump once sent a suggestive birthday letter to Epstein. The president says that letter was fake and is threatening to sue the Journal over that story.
Right, and we should say the paper declined to comment on the president's litigation threat. Another big question here is whether or not the federal court would actually grant the administration's request to make public grand jury deliberations, because this is usually a pretty secretive process.
Yeah, and of course, all of this is not what President Trump wants to spend today talking about. He's been pushing back heavily against the idea that this keeps coming up. He's hoping to shift focus perhaps just about an hour and a half from now as he's getting ready to sign into law the Genius Act, piece of legislation that will regulate stablecoins in the U.S. There's going to be a big ceremony with all the pomp and circumstance at the White House at 2:30 p.m. And we're actually going to speak with a congressman from the Financial Services Committee who cares very much about this effort when it comes to crypto regulation. Congressman Bill Huizenga is going to be joining us shortly.
Right, this is considered to be a pretty big legislative achievement for the White House, but we also have to keep in mind it was crypto week in Congress, and they didn't accomplish everything that they ultimately wanted to. Some still big questions moving forward here about one of the other big bills, the Clarity Act, and how that's going to fare when it comes to making its way through the Senate next.
Yeah, you still got to get through the upper chamber. So we'll keep track of all of those
Target
stories for you
Bill.
this hour, just as Charlie Pellet is keeping track of financial markets on this Friday. So let's check in with him now from New York. Hey, Charlie.
Hi, thank you very much. Indeed, keeping track of a lot of red right now, just about the lows of the day on the S&P 500 index. Stocks have been fluctuating as traders parse a handful of earnings. Bond yields fell alongside the dollar as Fed Governor Chris Waller on Bloomberg Television and radio reiterated his case for a July rate cut. So here's where we stand. We begin with the equity markets. S&P down 10 now at 62.87, drop there of 0.2%. The Dow lower by 246. Right now, Dow Industrials down 0.5%, and we have got Nasdaq down 30 for the Nasdaq Composite Index, a drop right now of just about 0.1%. Our Mag 7 index on a down day for the rest of the market is gaining 0.3%. 10-year 4.41%, the 2-year 3.85%, the 30-year 4.98%. Gold is up $14 the ounce, $33.53, up 0.4%. A retreat for crude oil down 0.2%, $67.39 a barrel. And Bitcoin, as we wrap up crypto week in Washington, down 1.5%. Right now, we've got Bitcoin 117,628. Netflix lower after earnings. Netflix shares they're tumbling now by 5.1%. And balance of power continues right now. Back we go to Washington. Once again, your hosts, Tyler Kendall and Kaylee Lyons.
All right, Charlie Pellet checking on the markets for us. Thank you so much. On this Friday here in Washington, we're still talking about the very story that President Trump was initially hoping we wouldn't be talking about this entire week, and yet that's how it's played out as members of his own base of support push for greater transparency around material related to the case of the late convicted sex offender Jeffrey Epstein. Of course, President Trump is now asking the Attorney General Pam Bondi to move forward and asking a court to authorize the release of some grand jury information. But it comes after a report in the Wall Street Journal last night alleging that President Trump, before he was president, once sent a suggestive birthday letter to Epstein for his 50th birthday. The president has called that story false, malicious, and defamatory. And as we've mentioned, Tyler is threatening to sue the Wall Street Journal, its parent company, and in fact, Rupert Murdoch over it.
Right, exactly. And the paper did decline to reply to the litigation threat, but we really have started to see some of his supporters perhaps get behind this idea of fake news and attacking the media over this report. But there are still a lot of people out there that want to see some more information released and get some of these questions answered, which is where we start now with Bloomberg senior White House reporter Josh Wingrove, who's joining us here in our D.C. studio. Josh, can you just put into context for us, because it doesn't seem like this issue is going away for President Trump. How big of a political liability at the moment does the White House view this?
Well, the broader Epstein thing, I think, is still sort of a wildfire that is risking, consuming a lot of parts of the MAGA base. But the story maybe is a double-edged sword, right? Because right now the White House is trying to seize it as a rallying cry. Look, fake news. The president is being pursued again by the media and trying to sort of steer attention that way. But so far it hasn't worked. I mean, Trump has tried a lot of things to steer attention away from this. It just hasn't been successful. And you have allies like Charlie Kirk and others who are saying that this case is sort of like part and parcel with all his base's concerns about the deep state and these, hidden theories and whatever, including, we should probably call them conspiracies at some end of the flank. But that is why they're so upset. They thought that they would get clarity from Trump on this. It's not coming out. So it's less that they are worried that he himself might be involved in it, which of course is the sort of question raised by this journal story, just how close was Donald Trump with Jeffrey Epstein. But more the broad question is they felt that essentially that they were sold the bill of goods and they, want those goods, and they're not getting them so far. So we'll see. Right now, it's unclear. Remember, of course, there's been questions about Pam Bondi's future.
Right.
Trump has really stood by her. I find it personally difficult to see how he would do anything but that, because it just doesn't make sense that she'd be acting solo here. I mean, she's in lockstep with the president on this. So we don't know where it will go, but this has divided the mega base in a way that we have not seen at all anything close to this in the second term.
Yeah.
But it's also, early to say how it'll play out.
Yeah, well, and when it comes to Pam Bondi, she's saying she'll do as the president has asked and authorized the DOJ to seek release of this grand jury testimony. But seeking it and actually getting it released are two very different things, Josh. So is this enough to lower the pressure for now?
Well, and if it's not released, or if only partially released, that could fuel beliefs that this is part of some grand cover-up. And, Trump loved to stoke this. I mean, he has drawn a lot of political energy from questions about who knew what about Epstein and who was involved with him and was there a client list. This was a tailwind for Trump, and now, of course, it's potentially backfiring on him with people wondering why they're not getting the documents that they have. Democrats, have a tough road to walk here. There are so many other things happening this week. I mean, I don't know. Happy Friday, I think. Is it Friday? What day is it?
Thank God, yes, it is.
Right. And Democrats would like, in some ways, this is like a potent thing that is ripping apart proverbially the mega coalition. On the other hand, Democrats would love to draw attention to some of the other things Trump is doing, including, the bill passage earlier this month, of his big, beautiful bill and some of the tax cuts therein. And remember, it was only like this week that Trump is, really ratcheting up his war with Jay Powell. So a lot of moving parts here right now.
Well, to build on that, let's talk about some of those actual legislative victories that the White House did see this week. The $9 billion rescissions package, also this crypto legislation, the Genius Act. President Trump has a big bill signing today, in a short time, actually, at the White House. What do we know about how the White House is trying to capitalize on those headlines instead? Yeah,
they're very excited about that rescissions package as well, because, of course, it looked a little bumpy there. They had to tweak some of the stuff around PEPFAR. And Trump is due to dine with Republican senators tonight. So the sort of in-person politicking has always been a preference of his. They want to be talking about these. The White House believes that it's on a winning streak right now, and that they have a message to share not only to their base to say, hey, we're delivering on the stuff we told you we would, but also to the broader electorate. And we'll see if it shows up in these poll numbers. But yeah, they're on a winning streak right now. They want to talk about these things. And once these bills sort of get through and, they clear the decks on a couple of other things, I think then one question to watch for is, will we get any more Tom Tillises? Will we get anyone that is like, has been a team player until now, but maybe now starts to come forward with stuff that they're not jazzed about, as Senator Tillis has. Of course, he's not seeking re-election, so the threat of a primary challenge is going away. So we'll see. But right now, Trump loves to complain that Republicans aren't marching in lockstep. They've been getting stuff done in the last month or so, so they have been in pretty lockstep recently.
Against what some would have described as long odds. They have been able to do so.
Narrow
Josh
majorities
Lindgrove,
in the House, for sure.
Bloomberg senior White House reporter. Thank you so much. And as we consider that crypto bill, especially in the moment it marks for an industry that has been lobbying hard here in Washington for years now for something like this to materialize, Tyler, it's also worth pointing out that they have a lot of money powering them too. And they are a force as we look ahead to the midterms in 2026. They're likely to be spending money like we saw in 2024.
Exactly, and we've already seen figures from Fairshake, for example, one of the super PACs and its affiliated PACs that has an enormous amount of cash on hand already, because even though it feels like we already just got through an election here in Washington, we're already preparing for 2026. And when you do look at how slim the majorities are in both chambers, this is a political faction, a pile of money that lawmakers on both sides of the aisle are going to try to capitalize on.
Well, yeah, that's absolutely true. And perhaps that's why lawmakers are putting more focus on actually getting this legislation across, despite what at least some Democrats have suggested are ethics concerns around the way in which legislation like this could actually serve to benefit President Trump and his wider family. Those ethics questions, I'm sure, will have to wait for another day. I wouldn't imagine President Trump is going to address them at the signing ceremony later on today. But we want to talk more about this legislation with a member now of the House Financial Services Committee, who is here with us in our Washington, D.C. studio on this Friday, Republican Congressman Bill Huizenga, representing Michigan's 4th District. Welcome back to Bloomberg TV and Radio, Congressman. Nice to see you in person.
Good to be with you, yeah.
As well. It's been a big week in your chamber. It's going to be a big day.
Yeah, this week has been a hell of a month, I tell you.
Yeah, maybe it should have been reframed as crypto marathon rather than crypto week.
It was something else. But, you know, look, a lot of us have been involved in this for a very long time. And I understand that this might be hitting some of our colleagues a little fresher than certainly what those of us who have been diving into this for a number of years have been having to wrestle with. But you know, this is an important, I think, an important statement for us with the Genius Act. Was it my first choice? No, the House was my first choice, a House version of that. But very satisfied with where we ended up on Genius. And you know, my family's involved in construction back in Michigan. And we build houses, and the first thing you do is you pour the walls and the footings. You know, that's the foundation, literally, and then you go from there. And I think that's what we're going to be working on next.
Well, to build off of this, we're talking about the Genius Act.
Unintended on the build off of it.
Well, you're talking about the Genius Act and perhaps some of the changes that you didn't want to see made. But let's talk also about the Clarity Act, because now that heads to the Senate. What's your message to colleagues in that chamber when it comes to keeping that legislation perhaps as it is?
Yeah, well, we think it's a good product. We certainly wouldn't have put it forward if we didn't. And again, a lot of time and effort has been put into this. And I get it. There's a lot of folks that are getting educated at a level that they maybe necessarily hadn't been at previously. And I'm not saying that about Senate banking or anything like that. I'm talking about general colleagues that have to then go out and vote for these things. But we think it's a very good, solid product that Chairman Hill and Stile and a number of us and others, Barr, that have been working on this, Warren Davidson. These are folks that have been really doing the heavy lifting over a number of years. And then obviously over on the Senate side, we have colleagues that have done that as well. And so hopefully we're going to be able to come together. I hope that they lightly edit the House version of that. But yeah, it is essential, though, that we not stop. And it's key that we keep moving forward with this because we have to add the infrastructure, the plumbing on all of this.
Well, and of course, the Clarity Act is supposed to divvy up authority between the SEC and the CFTC. Yeah. And the new SEC chair, Paul Atkins, actually joined our colleagues on Bloomberg Surveillance earlier today talking about how he's viewing this specifically. This is what he said.
We are out to, obviously change direction at the SEC, and I think we've already done that. We're moving away from regulation through enforcement and uncertainty in the markets, especially with respect to cryptocurrencies and digital assets in general. And we're looking to set firm, clear rules of the road for people who are operating in that environment.
I wonder about the sense of urgency here, knowing that the SEC now is far less adversarial, shall we say, to this industry. Is there as much urgency in trying to make sure that the CFTC gets more authority over these assets?
Well, look, you got to go back and look at what had happened previously under Gary Gensler, right? And of course, when he was head of the CFTC, everything was a commodity, and when he became head of the SEC, everything magically became a security. And the simple truth is that these things are not either fish or fowl. I always say it's a platypus. It's got characteristics of both in many ways. And it's up to Paul Atkins, as well as the legislation that we're passing, to compel them to come up with what those rules of the road are. And what we saw in the last administration was basically Chair Gensler just making it up as he was going along. And that's not acceptable because it doesn't give predictability. It doesn't give surety of a direction. And I've got great confidence in Paul Atkins and in what he's going to be doing on that. But again, we can't just sit back and say, okay, we declare victory. We don't have to do anything more. This is really just that first step.
I want to drill down a little bit on the bill that we're seeing signed into law today. When it comes to the Genius Act, stable coins, we have this great story out on the terminal today from actually our colleagues at Bloomberg Government that says that everyone's going to rush to register But the thing is, when it comes to the OCC, the comptroller of the currency, where everyone's going to be going, they're facing actually a shrinking workforce. There are DOGE cuts that have hit the agency. Do you think that there is bandwidth among our regulators to meet what is expected to be this surge in demand?
Yeah, in general, I do. I think that the regulators have to make sure they are prioritizing what their actions are as well. That would be the argument many of us have had over the last 4 years. We've wandered far afield from where those regulators should be. And they were into whether it was ESG and into all kinds of other things that were not necessarily about materiality. They weren't necessarily about safety and soundness and consumer protection. And so, again, I think if they focus in, we're going to be fine on them being able to do that. Is there going to be this bump coming in? Of course. I mean, there's a lot of pent-up demand, and frankly, not many people bought the idea of just come in and register over the last 4 years, and all will be fine. I mean, that they didn't buy that, so there's a lot of people that were holding back, waiting for this moment so that we could get that clarity. And this is good for the U.S. dollar. It's good for our preeminence in the world. It adds to the safety and soundness of not just our currency and our money, but for those that are doing the investing. It makes it, not frictionless, but less friction in transactions. So I think this is going to be good for the economy as well.
Well, when we consider the safety and soundness and the credibility of the U.S. economy, monetary policy and its credibility also plays a role there. And I ask you this as the vice chair of the House Financial Services Committee. It's one thing for President Trump to suggest he'd like to see lower interest rates. It's another for administration officials to actively be pushing for the chair of the Federal Reserve to resign, suggesting he should be investigated for fraud. Do you see risk here of doing what could be permanent damage to the Fed's independence and therefore credibility by extension?
I believe in an independent Fed that is important now. As Chair Hill yesterday, when he was asked about this in a press conference, started
None of
going.
You can avoid it, can you?
But he started going through the litany of what was going on with LBJ and with Richard Nixon and Ronald Reagan and others. Jimmy Carter. I mean, there's been plenty of pressure that has been applied to the Fed and Fed chairs and Fed officials over the decades. And because they are independent doesn't mean that they are somehow absent of any criticism or absent of any critique. And, I think as we've seen a few folks sort of breathlessly say, the Fed chair is going to get fired, the president's going to do this. He himself addressed that, walked that back to add clarity to make sure that wasn't happening. And look, his term is going to be up soon. That's going to be the opportunity in my mind where the president's going to be able to really assert himself. Now, does it mean that he needs to do a better job? Yes.
All right, we'll leave it there. Congressman, thank you so much for joining us. The Vice Chair of the House Financial Services Committee, Congressman representing Michigan's 4th District, Bill Huizenga, here with us in studio on Balance of Power, live from Washington, D.C. I'm Kaylee Lyons alongside Tyler Kendall, and we'll have more straight ahead here on this Friday edition, so stick with us on Bloomberg TV and radio.
It's 121 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ continuing to remain in the red. Stocks had been fluctuating as traders sift through a handful of earnings reports, but right now in the red. S&P holding close to session lows, down 8 right now. That is a drop of just about 0.1%. So the S&P at 62.88, retreating from a record. The Dow down 239, down 0.5%, and NASDAQ lower now by 10 points for NASDAQ. The composite index down 0.1%. NASDAQ 100 index down 0.2%. However, our Mag 7 index is advancing by 0.5%. The 10-year 4.41%. Bond yields falling alongside the dollar as Fed Governor Chris Waller reiterates his case for a July rate cut. That coming in an interview with Bloomberg. The 2-year 3.86% and the 30-year 4.98% on the 30-year. Spot gold up $13 the ounce. The precious metal up now by about 0.4%. West Texas Intermediate crude oil down 0.1%, 67.49 a barrel. And Bitcoin right now trading lower. Bitcoin is down 1.4%. Bitcoin at 117,880 on Bitcoin. Again, recapping, stocks lower, S&P down 0.1%. Balance of power continues right now. The Friday edition. Back we go to Washington. Once again, your hosts, Kaylee Lines and Tyler Kendall.
All right, the Friday edition indeed. Happy Friday to you, Charlie Pellet. Thanks as always for checking on financial markets for us from New York. I'm Kaylee Lines alongside Tyler Kendall here in Washington, where there's really only one story that everyone is talking about on this Friday, and it's perhaps not the story President Trump would prefer we be discussing, but it, of course, is the push within his base for the release of more information related to the late convicted sex offender Jeffrey Epstein, with questions not just about the case itself and whether or not there is a client list that officials within the Trump administration had previously suggested did exist, but also into the president's relationship with Epstein, as the Wall Street Journal published a report alleging that President Trump sent a suggestive letter to Epstein for his 50th birthday, a report that the president denies is called defamatory and has threatened to sue the Wall Street Journal over. But he's also pointing a finger today, Tyler, at Democrats, or I guess, yeah, this is today, earlier this morning on Truth Social, saying if there was a smoking gun on Epstein, why didn't the Dems, who controlled the files for 4 years and had Garland and Comey in charge, use it? He ends it, all caps, because they had nothing.
Right, this is part of the White House's defense here, since this story really does seem to have that sticking power. We're now seeing a movement in Congress even to force a formal vote on releasing these files, as it really does appear to have this grip on really both sides of the party here, and that's perhaps becoming a political liability for the president. And that's where we want to start today by bringing in our political panel. It includes Rick Davis, partner at Stone Court Capital and a Bloomberg Politics contributor, and Christina Greer, associate chair at the Department of Political Science at Fordham. Rick, I want to start with you, because where do we go from here? We have President Trump granting this authorization, but it's unclear if a federal court would even grant the administration's request. Could that potentially throw a wrench in the administration's plan, since they appear to be wanting to give those that are seeking more information something to chew on?
Yeah, I almost think that that's what the White House wants, right? Is so that they can wake up and then start attacking the judiciary again, saying, oh, well, I wanted you to have this information, but the courts won't let you have it. Of course, I don't think it was a coincidence that they went after the most sensitive information you can have, which is grand jury testimony, which is supposed to remain secret. Forget the files you already have at the FBI and in the Justice Department that could be released tomorrow. So look, Biden didn't release this stuff for some reason, and Trump doesn't want to release this stuff for some reason. My guess is there may be not much to it all, and that the only reason the president has actually bowed to this effort is by his own claim, is because the publicity was bad for him. And so all he's done is kept the publicity going into this weekend. So we'll have a nice, thorough Sunday show, spectacular, with more Jeffrey Epstein, you know, and who knows? Now everybody's got an investigative journalist looking for more Epstein material, like the Wall Street Journal came up with. I mean, it is a classic summer scandal.
Indeed. And we are in mid-July. As we consider, though, Christina, the sentiment around this. Obviously, there are loud voices that have always been loud voices within the MAGA base who have made a very big deal about this, thinking of the likes of Laura Loomer. But there's another question of the broader Republican electorate. We've gotten a few polls this week, one from Quinnipiac that shows there is some division among Republicans on this issue. 40% say they approve of the way the administration is handling the Epstein files. 36% disapprove, 24% did not give an opinion. There were similar divisions in a Reuters Ipsos poll. 35% approve of the handling, 29% disapprove. Is the fracturing of the Republican, or more specifically the president's base, a real tangible thing here?
Well, it appears that this is the first time we've seen real fissures within the base. I mean, this is also a base that's been fed a consistent diet of conspiracy theories that the president has sort of promoted and then walked away from. We can start with the birther conspiracy theory, and then when Obama acquiesces and shows his birth certificate where he is indeed American, the president says, well, that must be a hoax and it must be fake, right? The Pizzagate scandal with the Clintons and Hillary Clinton and the basement and pedophilia. He's also fed them a consistent diet of, Democrats are somehow attached to pedophiles. The difference is Jeffrey Epstein, this isn't a conspiracy theory. He was convicted for being inappropriate with minors. And so now that he has fed this base for many, many years, certain narratives, he wants to walk away, and they're not willing to walk away. And so I think what's been interesting about this particular story for a lot of journalists on both sides of the aisle is that we have not seen the base sort of disavow something that the president has said. They have moved and shifted and twisted themselves into pretzels on a dime as the president changes his whims. In this particular instance, we have a significant portion of his base who are saying, actually, I don't agree with you. I want to get to the bottom of this, whatever it is. And so it seems as though the president can't shake it. We know, obviously, the administration would like to shake it, considering they're releasing health information, which they never do about the president, as a distraction, and it hasn't distracted his base. And so we will see whether or not it's the courts, whether or not it's Congress, whether or not he can sort of keep pushing this off on Biden and Obama and the Democrats. But at some point in time, his base, a significant portion, wants some information, and he'll have to give them something.
Well, this really has become a top issue here in Washington, but also nationwide. In fact, over here in Bloomberg, we had New York City Mayor Eric Adams on the Odd Lots podcast earlier. We want to play you both a little bit of what he said about what he's looking for, what Attorney General Pam Bondi might soon be releasing or not.
I would love to see what's in those Epstein files. I think we all do. I'm eager to look at UFOs. There's so many history. I'm still trying to figure out who killed Kennedy. I look forward to seeing there's so many deep secrets in America that I think we all want to know. And it's imperative that as much as we can find out as possible.
Rick, perhaps, can you shed some of your insight here? Does this have anything to do with perhaps the sticking power that we're seeing this story really have a grip on members in both parties as they try to seek more answers? Does Eric Adams' argument there have some credibility?
Not really. I mean, I too would like to see the UFOs. Whenever I'm in New York, I feel like walking around the street, I see one UFO after another, but that's, more a comment on the residents of New York. The reality is that this was really sort of a Trump-instigated problem, right? And sure, there's a lot here that is disturbing to people. Court cases were tried, people were convicted. Jeffrey Epstein killed himself. And the only people who continued to talk about this wasn't necessarily the Democratic Party. It was the Republicans who said, oh my God, they're keeping these files secret for a reason. There are all kinds of people. They implied Bill Clinton and others had exposure to this. And it was one of the classic MAGA kind of influenced, messages. And we went through a lot of those over the last, 10 years. And virtually every single one of them has sort of fallen on deaf ears. And this one has gotten some new traction because the president himself has indicated a willingness to show people something that they hadn't seen before on it. It wasn't really that big an issue until, Pam Bondi said, I'm going to release these records, and then didn't release anything that wasn't already in the public domain. So they are tripping over themselves on this issue. And the reality is, I think when you look at sort of good crisis management, you tell everybody, everyone be quiet. We're going to speak with one single voice. It will be someone who is not the president of the United States, and will draw attention to only that person and only the messages that they give, and tell everyone else to be quiet. I mean, we still don't know Dan Bongino's future as deputy of the FBI, which to me is the most important thing here, because he's supposed to be running the day-to-day operations of the FBI and has somehow been embroiled in this scandal to the point where he didn't show up for work for a couple of days. Now, that is unacceptable to most taxpayers.
Well, we're also maybe wondering about Bongino's future. We're also wondering about Eric Adams, who we just heard from's future, whether or not he can end up being reelected mayor of New York City. I would point out, Christina, that on Odd Lots with Joe Weisenthal and Tracy Alloway, they talked about a lot more than just Epstein. That full conversation can be found on Spotify, Apple, wherever you get your podcast. But they, no surprise, talked about the mayoral race. And specifically, Adams had some choice criticism for Zohran Mamdani, who, of course, is the Democratic nominee, specifically his attitude when it comes to billionaires. You're up at Fordham. You know New York politics well, knowing Mamdani is set to meet with the House Democratic leader Hakeem Jeffries in New York today. What does he need to do to actually win this thing in the general, knowing it's not just Adams that he's up against, but Andrew Cuomo as well, with this weird independent factor we don't usually see?
Right. So first things first, Rick, you know, as a native New Yorker, I would say that we are very welcoming to aliens and non-aliens and tourists from other places. So we'll just put that out there. But Zohran Mamdani, you know, going into the general election, we have to remember it's not ranked choice voting the way we saw in the Democratic primary. He's going up against not just current mayor Eric Adams, three-term governor Andrew Cuomo, the Republican nominee, and also another prominent lawyer, independent nominee Jim Walden. So there are 5 people currently in the race, to say nothing of all the like small names that are always on a ballot. This 33-year-old state legislator, you know, has to sort of capture the attention. I talk about this every week on my podcast, FAQ, which is the real estate community, the business community, the labor community, and the Hasidic community. Those are the 4 communities that can make or break a mayor's chances of getting across the finish line. And it is first past the post. It is not a 50% majority that is needed. It is whoever gets the most votes becomes the 111th mayor of New York City. And so Mamdani, who's relatively unknown to the business community, he's relatively unknown to the labor community, which is incredibly diverse. He's definitely unknown to the real estate community and also to the Hasidic community. And there are lots of, you know, conversations that he's had about Israel and domestic versus international policy that he's attempting to clarify and sort of provide more nuance. So this is, you know, a summer where he's a fantastic campaigner, but we know that campaigning is not governance. And so part of what he's trying to do is to convince a large portion of New Yorkers that he actually can govern. We've had abysmal turnout over the past few elections where we are electing mayors with, you know, barely 25%. I think we will see a high turnout election just because we have Republicans who may go with the Republican nominee, Curtis Sliwa, or they may be more inclined to go with someone like Eric Adams or even an Andrew Cuomo because they think that those individuals can negotiate with Donald Trump in a better fashion.
All right, Christina Greer and Rick Davis, our political panel on this Friday edition of Balance of Power from the New York mayoral race to Epstein. Thank you so much for joining us. I'm Kaylee Lyons alongside Tyler Kendall, and we'll have more coming up here on Bloomberg TV and radio.
Order filled.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are looking at a down day for the Dow, the S&P. NASDAQ back in the green, barely up less than 0.1%. Little change, but nonetheless higher by 5 points right now. S&P 500 index lower, little change right now, off session lows, but still down 2 points. S&P 500 index down under 0.1%. Dow Industrials down 190, a decline of 0.4%. Stocks have been fluctuating as traders parse a handful of earnings. Bond yields falling alongside the dollar as Fed Governor Christopher Waller here on Bloomberg Television and Radio reiterates his case for a July rate cut. Your 10-year currently yielding 4.41% with a 2-year 3.85% and the 30-year 4.99%. Spot gold up $12 the ounce, little changed, up by about 0.4%. And West Texas Intermediate crude oil down 0.3%, 67.36 per barrel of WTI. Crypto week and Bitcoin down 1.4%, now at 117,821 on Bitcoin. Sarepta Therapeutics shares are now plunging by 38.2%. Sarepta says another patient has died from acute liver failure after receiving one of its gene therapies, putting additional pressure on the biotech after the recent deaths of 2 teenage boys. Again, Sarepta Therapeutics plunging now by 38%. Balance of Power continues now, and back we go to Washington. Once again, your hosts, Tyler Kendall and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Checking on the markets as we close out the trading week here on this Friday, a week, of course, that has been dominated by many of the headlines we've discussed so far here on Balance of Power, from what's happened legislatively in Congress to what's going on with the Jeffrey Epstein case and how that's engulfing the Trump administration, but also, of course, the ongoing saga of President Trump and his relationship to the chair of the Federal Reserve, Jerome Powell, and whether or not Chairman Powell is going to be safe in his job for much longer. Of course, the president suggests he does not intend at this time to fire Chairman Powell, but that is not stopping him from pressuring Powell to lower interest rates. Seems we see this every day now on Truth Social, including a post this morning. Too late, his nickname for Chairman Powell, and the Fed are choking out the housing market with their high rate, making it difficult for people, especially the young, to buy a house. He goes on to say, Tyler, that the U.S. is rocking. There is very low inflation, and we deserve to be, he says, at 1%. Of course, that is far below where the Fed funds rate currently is.
Right, and we actually had asked Joe Livornia, counselor to Secretary Bessent yesterday about this. Perhaps we'll have to see where they actually end up thinking that the Fed funds rate should shake out. But it is apparent that the administration feels bolstered by what has been positive economic data, retail sales yesterday, University of Michigan consumer sentiment today, all, of course, factors when we are talking about this pressure campaign from the White House. And actually, our colleagues earlier today on Bloomberg Television sat down with the Federal Reserve Governor Christopher Waller. You heard Charlie mention it earlier on surveillance. He is, of course, seen as a potential replacement for Jerome Powell, and he hinted himself that he would dissent if his colleagues end up holding rates steady in their July meeting. We want to bring you part of that conversation now, including starting out with some of his thoughts on the Trump administration's tariff policies.
Tariffs are a tax, and in public finance, you learn that you may levy a tax on a firm, but who bears the incidence or the burden of that tax? It can be a group of people or one person, not necessarily the firm. So this is what I've heard from a lot of firms. If there's a 10% tax, they'll force their suppliers to eat some of that cost. Workers may eat some of that cost in terms of less hiring and things like that. The firm will take it out of their profit margins. And then lastly, some of it will get passed on. And as I mentioned last night, I've heard this for months now. Like the rule is 10%, it's roughly, rule of thumb is a third, a third, a third. Suppliers will eat a third, firms will eat a third, consumers going to eat a third of that tariff. So if you eat a third of it and it's 10%, like I've been arguing, this is like 3/10 of three tenths on the inflation rate for a few months, and that's it. And it'll persist if you do 12 month over 12 month. That base effect will not go away for a while, and then it'll just drop off a cliff. So that's why I've been arguing you want to look at like 3 months and 6 months to see if these tariff effects pop up and then go away. And so that's more critical than looking at 12 months.
Yes, but the way the president is putting these tariffs on might not match up with theory, Chris. The Smoot-Hawley tax was passed and came into effect on a certain date. The president is not yet put on most of these tariffs. They're in theory still coming, and we still haven't seen the Section 232 tariffs for the most part, the national defense tariffs that he wants to put on semiconductors and pharmaceuticals, et cetera. So if the process is stretched out, consumers could be hit by an ongoing series of tariff increases, and given what they've just been through, isn't there a danger that inflation psychology starts to seep in?
Well, that's exactly the point. All my example has been is if you put the 10% uniform tariff on and keep it roughly in that range, then what I've described is what will happen. If there's constantly a sequence of higher and higher and higher tariffs, then you are going to get this rolling potential impact on prices. That's true. If it's still just a question of delaying it, that doesn't change my argument. Whether you see the spike in July or it happens in June or August or September, when it happens is irrelevant for the economics. That's a non-starter of an argument. Firms could also just spread it out in smaller increments over several months. The total effect still ends up being the same. They just get there in a later fashion, and it'll be smaller amounts. So the bigger thing is if we just continually get another wave of tariffs, another wave of tariffs, another waves of tariffs, that's when things become more problematic, thinking about what's going to happen with inflation.
Fed Governor Christopher Waller in conversation with our colleagues on Bloomberg Surveillance, including Bloomberg's very own Mike McKee earlier today, talking about tariffs and the unknown factor that it plays, an unknown policy that exists around them, which of course is one of the reasons that the Federal Reserve is maintaining, at least for now, that it feels comfortable where it is, keeping rates on hold until it has more clarity around that specific element and how it will influence the economy. But of course, President Trump does not want the Fed to be on hold, as we mentioned once again today, pushing the Fed to lower interest rates. He believes the Fed should be down at 1%. That would be substantial cuts from where we are now. And we want to get into this and other issues as we turn now to Natasha Surin. She's professor at Yale Budget Lab, former Deputy Assistant Secretary for Economic Policy, and former counselor to the Treasury Secretary, Janet Yellen, at the Treasury Department. Natasha, welcome back to Bloomberg TV and radio. When we consider the president, who in that Truth Social post, as he pushed for a 1% Fed funds rate, talked about how that rate would save the U.S. $1 trillion a year in terms of the interest payments that we have to make. Is that really how it will work in reality? If that is the narrative he is pushing, the Fed cuts rates, it makes our financial situation fiscally as a nation much easier?
So the challenge that we kind of have to grapple with is that the Federal Reserve and the Federal Reserve's independence is really crucial to the role that it's able to play in the economy as a stabilizer. So when the Federal Reserve makes decisions, it has two things in mind. It has what does the employment picture look like and what does inflation look like? And it's reacting to those two particular, really substantive data questions. If you're in a universe where instead a Federal Reserve that's become politicized is reacting to what President Trump thinks that the interest rates should be, well, in that situation, you kind of break the relationship between what the Federal Reserve actually gets to set, which is the federal funds rate, the rate at which banks lend to one another, and things like mortgage rates or car loan rates or small business loan rates that are like actually relevant to consumers in this economy. So perversely, by sort of trying to push so aggressively for an interest rate that is way outside of the realm of what any economic observers think makes sense in an environment where employment is basically at 4-ish% and inflation is still not back to target and in fact ticking upward because of this tariff policy, you really don't have any case to make for those type of rate choices outside of just politicization of the Federal Reserve, which comes with real risks.
I'm also hoping, Natasha, that you can give us a little bit more context here, too, because we have to keep in mind that the Fed chair is only one vote on the Federal Open Market Committee. And we did speak to Bill Pulte, the head of the Federal Housing Finance Agency, who told us earlier this week on Balance Power that they are seeking for Powell to step down as chair, but also his position on the board. Can you just give us a little bit, could this complicate the administration's ultimate goal here when you do have other members who are voting, and what we are hearing from those other members when it does come to the future of rate cuts?
And, you know, it's like really important for your viewers, I think, and listeners to understand, like, there is no sort of button that the Fed chair pushes to change the interest rate. The way that it works, as you're describing, is the Federal Reserve chair is one of 12 members on the Federal Open Markets Committee that makes decisions. They meet 8 times a year. They make decisions on the trajectory of the interest rate. And importantly, these are decisions that are made by a group of people. And so the Fed chair, even if the president was effective at getting a Fed chair in who was going to push for his desired rate cuts that he's sort of trying to effectuate from the top in ways that break Federal Reserve independence, well, the rest of the board is going to be in a situation, and the rest of the committee is going to be in a situation where they're actually trying to push against exactly that impulse because they want to preserve the independence of the Federal Reserve, not both because they are sort of institutionally very concerned about it, but also because only then can we be in a situation where we are actually trusted and credible as being reactive to inflation and being reactive to the employment picture. And what's important for your viewers, listeners also to understand is, like, we in some sense have run this experiment before. Like, President Nixon put a ton of pressure on the Federal Reserve to cut rates in ways that would be short-term politically expedient. They did. And as a result of that, you saw inflation tick up from 3% to 13% over the course of 2 years in ways that required a massive course correction and led to a significant downturn. So, like, I don't think anyone should be rooting for that in this country. And it certainly goes against what the Trump administration is hoping to see from an economic perspective.
Yeah, the historical context is important to keep in mind here, Natasha, and I appreciate you pointing that out. As you talk about the idea of trust and credibility for the Federal Reserve, I also wonder about the trust and credibility of the president as we consider his very frequently changing deadlines when it comes to tariff and trade policy, because this is what the Fed is having to contend with, why it makes their decision-making perhaps so hard. How do you at Budget Lab even try to game out the tariffs and the likely revenue we are going to be getting from them when the deadlines keep moving and the numbers keep changing? Is it even really possible to model?
I mean, we are doing our best. My colleagues and I at the Budget Lab are sort of tracing every single twist and turn with respect to tariff policy in this country. And, you know, to our count, we've seen the effective tariff rate change like almost 60 times over the course of the last several months as a result of the president's different political policies that have been pursued in this trade war. The thing that I think is like really important to grapple with, and you heard actually Governor Waller say a version of this, you've heard Chair Powell say a version of this as well. The president's been like super specific. He would like to see interest rates lower. Sort of Chair Powell and the rest of the Fed have been pretty specific as well that in a world in which this sort of uncertainty associated with trade policy didn't exist, the Federal Reserve would have already cut. And so you're in a world where it is hard in some sense to even game out what exactly the tariffs are meant to be for. Are they tools for revenue raising? Are they sort of important in order to balance our strategic alignment with vis-a-vis an adversary like China? Are they really about bringing manufacturing back into the United States? And the result of that is no one, you, I, and certainly not the business community, has any sense where these tariffs are actually fundamentally going to land. And that creates a difficulty that we can disagree about what the right effective tariff rate should be in the economy, but certainly this sort of start-stop that makes it impossible really to plan with any sense of where policy is ultimately going to land makes it really challenging to think, as an estimator, certainly very challenging to think about what the likely revenue consequences are going to be. But certainly as a business trying to make investment decisions makes it incredibly complicated to think about that as well.
Natasha, just in our final minute, I want to build off of this because we did see Michigan consumer sentiment for July today come in above estimates. What are we learning when there is uncertainty, though, about the consumer's tolerance here, since confidence at one point was plunging amid tariff concerns, but today's data did show it at a 5-month high?
You know, I think it's really hard to make too much out of any one particular data point. We also got data this week about inflation that showed that in certain particular industries, if you look at things like consumer electronics, or if you look at things like household furnishings, which is a category that includes furniture, industries or sub-industries where the tariffs are likely to have substantial bite, you're starting to see an uptick in prices. I don't want to make too much of any one particular data point other than to tell you that the result of our estimates at Yale Budget Lab, which are trying to stay current with respect to where the president says tariffs are going to be come August 1st, this next deadline, is that consumers are going to see a $2,800 on average decrease in their in their household income as a result of higher prices. And for the bottom of the distribution, that's on top of something that you all have been talking a great deal about, which is these important cuts to social programs like Medicaid that have been recently effectuated. So I think there's a lot here that's pretty important.
Natasha, we have to leave it there. Natasha Surin of Yale Budget Lab here with us on Balance of Power. Thank you for joining us. We'll be back for more at 5 p.m. right here on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And very good afternoon, everyone. Live on Bloomberg TV, Radio, YouTube, and Bloomberg Originals. It is Bloomberg Business Week Daily. I'm Tim Stenivek. That is Shonali Basak. She's a Bloomberg News Global Finance correspondent. She is in for Carol Masser this afternoon. Shonali, it's good to have you here. Welcome.
Good to be next to you today.
You have been busy. You've been on air all day, whether it's real yield, whether it's open interest. The market reaction in terms of equities a little muted, but bond yields are lower. The dollar's lower. A lot of commentary around Chris Waller.
It's a totally interesting way to round out the week, isn't it? Because you had the S&P 500 hitting that $6,300 level, but it's been fluctuating around that. There's some softness. That weak reaction to Netflix's earnings is an interesting setup before we head into the Magnificent Seven next week. And yes, I agree with you. That bond yield in the shorter end of the curve being lower is especially interesting after not only the Waller comments, but a week of strong economic data.
This is all our focus over the next hour right here on Bloomberg Business Week Daily on everything regarding that Christopher Waller interview and the Fed. Michael McKee is going to be joining us in just a few minutes. Also, talking about what's happening with the White House and with the Federal Reserve. We're going to focus on the White House. Jordan Fabian of our Bloomberg News team down in Washington, D.C. is going to be with us in just a few minutes as well. Also, on the company side of things, the CFO of Huntington Bancshares is back with us on earnings and just days after announcing an acquisition that's going to bring it to the Texas market. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check of the day's trade and top business stories. Here he is, Charlie Pellet.
Before I get to the markets, do want to begin with a developing story at JFK Airport affecting planes flying in and out of the airport. Right now, we have got what's described as an aircraft emergency, so departures from JFK are grounded because of that aircraft emergency. The FAA says the ground stop will be in effect until at least 2:30 with a medium 30 to 60% probability of an extension. So right now, again, a ground stop at JFK at least through 2:30. Keep it locked in to Bloomberg for the very latest on this developing story. U.S. equities, a lot of red on the screen right now as we wrap up the trading week. What a week it has been, but the S&P right now little changed on this Friday. S&P down under 0.1%. We've got the Dow down 205, down 0.5%. NASDAQ Composite Index down 4, little change there, down less than 0.1%. Your 10-year 4.41% with the 2-year 3.85%. The 30-year 4.98%. West Texas Intermediate crude oil down 0.4%, 67.26 a barrel. Spot gold up 0.4%, 33.53 the ounce. And as we wrap up crypto week, Bitcoin now at 117,613, a drop there of just about 1.6%. So again, repeating the JFK headline, we got departures out of JFK grounded because of a so-called aircraft emergency. That ground stop in effect until at least 2:30, according to the FAA, with a medium 30 to 60% probability of extension. Stay with Bloomberg for the latest on this developing story. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks for that update, Charlie. And again, we'll bring you any updates to the situation at JFK if we do hear anything. Well, as we mentioned, Federal Reserve Governor Christopher Waller hinted he would dissent if his colleagues vote to hold interest rates steady at their July meeting. He's made his case for a rate cut to support the labor market. Waller said he thinks Fed officials should take the step if, quote, you make it very clear you think at this moment in time it is important to do. He spoke in a wide-ranging interview on Bloomberg TV this morning and talked about inflation expectations, especially as President Trump threatens the tenure of Fed Chair Jay Powell.
After the tariffs came on, everybody was worried about de-anchoring expectations, particularly after some of these Michigan surveys came out. But when I always look at the market-based expectation, because people have money in the game. Firms are making decisions on what their chief economists are saying. And if those things are wrong, they're going to lose a lot of money. So I've always paid more attention. I haven't seen much in the way of market expectations being unanchored in any ways you want to measure them, any forward look. Now, in the near term, of course, they might go up because you would see inflation in the short term. But in the longer term ones, I'm not seeing it. So either the market is just dismissing all of this as chatter and noise, Or at some point, if something happens such that it becomes much more serious, then you might see a discrete jump. And then, that's going to be a problem for everybody.
One of the questions that we get all the time, Chris, from people on Wall Street is, or one of the posits they make is that all this criticism of the Fed is hurting Fed credibility, and that the next chairman's going to have a tough job because there are going to be expectations for the next chairman set by the White House rather than by the economy. Do you feel that inside the building?
No, to be absolutely honest, we just do our job every day. I go in, I just focus on my work on monetary policy, payments, and oversight of the reserve banks. That's what I do. I let this stuff go and then just try to focus on my job. And I think that's how all of us are proceeding with this. I mean, at the end of the day, the president, whoever they choose, you're going to have somebody that has credibility with the markets, or you will see, as Jonathan was just talking about, you're going to see inflation expectations spike. You will not get lower interest rates. You will get higher interest rates. This is well known. We've seen this everywhere around the world when this happens. And I know Scott Bessent knows this. So this is not something that is lost on anybody.
Well, there you have it. That was Federal Reserve Governor Christopher Waller earlier on a Bloomberg Surveillance. Michael McKee was part of the team that did that interview. You heard his voice right there. He's international economics and policy correspondent for Bloomberg TV and radio. When he did that interview this morning, he was in Victor, Idaho. Now he's just a few miles on the other side of the border over in Jackson, Wyoming. Mike, I want to stick on the credibility with the markets. That's the part that Governor Waller ended on right there. Obviously, Jerome Powell has credibility with the markets. Based on the reporting that you've done, the folks that you've spoken to, do the front runners to replace Fed Chair Jay Powell also have credibility with the markets?
Well, Jay Powell has a lot of credibility with the markets, and we've seen that in market reaction to when Donald Trump has threatened to fire him. The markets have essentially tanked. Chris Waller has a lot of credibility with the markets, and a lot of people say he might be Trump's best choice, especially when you consider what Waller was saying about how the market would react if they thought the Fed had lost credibility. Interest rates at the long end, which are the ones that matter for economic progress, would probably go up because there would be concerns about whether the Fed is easing too much. So at this point, there is credibility. The question is going to be who gets chosen and how are they seen? Are they seen as someone who is going to do the president's bidding, or they're going to follow the tradition of the Fed and do what's best for the economy?
Speaking of doing what's best for the Fed, I want to point out the most recent note by Neil Dutta over at Renaissance Macro, who has been weighing in a lot on this process. And in defense of Christopher Waller, in the idea of whether he would be, okay, so this is what he says first. Waller is bending the knee to Trump, or that he's losing respect in the process. Neil Dutta is knocking down that thought, and he's saying, who isn't losing respect in this process? Importantly, what Waller says will be taken seriously by the people around the FOMC table, and many of those people are not in contention to lead the Fed and already agree with the premise of his argument. Okay, so what do you think about that, Mike? The idea that there are more people around the table who agree with this idea that perhaps the economy is not as strong as the White House might be claiming.
I think everybody at the Fed feels that way. We heard it from Mary Daly in our interview with her yesterday. She sees the economy weakening. Now, she's not signed on to the July rate cut, but she does think they're going to have to cut rates going forward this year because the labor market, as Chris Waller said, is getting a little bit weaker. And as far as bending the knee, there's no question that Kevin Hassett and perhaps Scott Bessent have done that in arguing in favor of the president's economic plans. A little bit less so with Kevin Warsh, although he's a longtime Trump confidant. Chris Waller hasn't been seen as a Trump person, and I think what he wanted to do in his speech last night and in his interview with us is make a solid economic case for why he would cut interest rates in July, which I think he did. Now, the question is, do you think if you don't cut rates, the economy gets a lot worse, a lot faster? That's the nut question that will come up on July 30th for the members of the Open Market Committee. But I think what Waller was doing was demonstrating that he is not bending the knee, that he's looking at the economics of it, even if it appears he's supporting Donald Trump's ideas. And of course, it's going to be a little tricky for Waller when it comes to July 30th, because the question will be, how committed is he? Would he actually dissent if the majority votes another way?
You know, he spent a lot of time in that interview, Mike, talking about the importance of having conversations around this stuff and trying to bring other folks who are part of the FOMC and at least voting members of the FOMC over to your side, present the evidence, show the economic argument why you think rates should move one way or another if you do believe they should move. Given what you heard from the Fed governor, do you think that July's meeting is a live meeting?
I don't think so, for the reason that we have heard from most voting members of the FOMC up to today, and the blackout starts after today. They can't talk until after the Fed meeting. And there's only two, Waller and Vice Chair Bowman, who have suggested a cut at the July meeting. It may be that others feel that way, and we might see something in the minutes about people feeling that they could go either way. But at this point, they've led the markets to believe there won't be a cut, and they don't like to shock the markets, and that's what would happen if they did cut rates. And it's unpredictable what happens in the markets when something like that happens. So I don't think that it's really a live meeting, but the minutes will be very interesting.
Beyond the meeting itself, beyond the minutes, behind the economic data, how do you gauge the impact the uncertainty around the next Fed chair is going to have on the bond market? We've talked about this a lot earlier this week, the idea that the term premium could be higher at the longer end of the yield curve, which is exactly what the Treasury Secretary doesn't want. So how do they resolve this uncertainty when the president keeps on weighing in criticizing Fed Chair Powell?
Well, you know, Chris Waller was essentially asked that question, and he said he thinks Scott Bessent knows all about this, and that he will recommend to the president that he not do anything that would upset the bond market. Certainly there are people he could appoint that would send the markets, send bond prices falling rapidly and yields rising, especially from the belly on out. So that is something that at least the people who are paying attention to the economy and who understand the bond market in the administration will have to keep in mind as they get close to a presidential nomination.
Michael McKee, international economics and policy correspondent for Bloomberg TV and radio, joining us from Jackson, Wyoming. Mike, safe travels as you make your way back to the East Coast. Thanks for taking the time this afternoon. I do want to update everybody on a headline that we are following. That ground stop at JFK has been canceled. That's according to the FAA. Just to update everybody, there was a ground stop. Departures were grounded due to an aircraft emergency. The ground stop probability of extension was 30 to 60%. We reported that earlier. The FAA reporting that President Trump authorizing the Justice Department to seek the release of grand jury testimony from the prosecution of Jeffrey Epstein. It comes after the Justice Department and FBI last week, though, said that Epstein did not keep a client list and that no more files related to the case would be made public. Is it fair to call this some sort of about face?
It's certainly an effort to appease his supporters who are angry with his handling of the Epstein case. But I will note that this move falls short of the level of disclosure that his supporters have demanded, including some members of Congress. They want, witness testimony, they want client lists, they want FBI interview records, etc. And this would be a more limited slice of those records, referring to the grand jury testimony. On top of that, the Trump administration has to go to a federal court to ask them to unseal those records. Remember that grand jury testimony is usually kept secret. And so this is not maybe going to see the light of day for a while, if ever. And so maybe a way to appease them now, but it certainly falls short of everything his supporters have asked for.
You talk about it, it's not just his supporters. I've seen clips of the vice president, for example, on podcasts calling for the release of the Epstein files ahead of the election. I'm wondering politically where this is going right now, who's getting behind the president and who in the MAGA universe is saying, wait a second, there is more here that we want to see.
You're seeing the Trump's inner circle in the White House and Congress rally around him, but there are significant cracks, including House Speaker Mike Johnson, who's called for more transparency here in a rare moment of dissonance with President Trump. There's also those outside conservative influencers and podcast hosts that helped propel Donald Trump to the presidency last year and were really excited by the prospect of him releasing files about Jeffrey Epstein, but also the MLK assassination, the JFK assassination. And those folks have really been discouraged by his handling of this matter. And so you're seeing this rift widen as Trump kind of holds out on mass disclosure here.
Now, the move that we're discussing now came after the Wall Street Journal published a report alleging that President Trump once sent a suggested birthday letter to Epstein, to which the president said the letter was fake. In a social media post, he had threatened to sue the paper, its parent company, and owner Rupert Murdoch. How is the Wall Street Journal report resonating in Washington, Jordan?
It certainly caught a lot of attention, and it clearly rattled the president given his bellicose response to that report. And that's because it, again, drew attention to his past relationship with Jeffrey Epstein. We had this weird situation where you have the president and his supporters last year agitating for the release of the Epstein files, kind of spinning conspiracy theories that a lot of important people were part of his his inner circle and were perhaps participating in illegal activities. Where if the president is on tape and on camera, partying with Jeffrey Epstein at his estate in Mar-a-Lago in the 1990s, and so you had this weird situation, and that Wall Street Journal report kind of put that back in front of people's minds as he struggles through this controversy.
We should note, too, that the paper declined to comment on the president's litigation threat. Hey, I just wanted to, in the last minute or so that we have with you, Jordan, get an update from you on something that was reported yesterday. The president was diagnosed with chronic venous insufficiency after experiencing leg swelling, though physicians said he's in, quote, excellent health. This is coming from the White House on Thursday. How rare was it for the White House press secretary to sort of acknowledge something not great about the president's health, or is this an okay diagnosis? What can you tell us?
The top line is it is unusual for this White House to be that transparent about the president's health. At the same time, this condition, as they described it, is a fairly common condition. It affects 1 in 20 U.S. adults. It's especially common in those over the age of 70. And so, but at the same time, it was interesting because that highlighted, the president's age coming after a campaign where he hammered his predecessor, Joe Biden, over his age and fitness. And so, I think the White House was especially, cognizant that there were photos out there showing bruising on the president's hand, swelling in his ankles. And so at the same time, they're trying to put that story to rest, saying it's not a major health issue, but it does raise attention to the fact that the president is 79 years old, the oldest man ever to be inaugurated, and time's only ticking.
Jordan Fabian, appreciate you taking the time this afternoon, joining us from Washington, D.C. Bloomberg News White House editor Jordan Fabian there. Check out his reporting and the entire White House team's reporting at Bloomberg.com and on the Bloomberg terminal. Once again, repeating a headline that just recently crossed the Bloomberg terminal, the JFK Airport ground stop has been canceled, according to the FAA. A previously issued ground stop at John F. Kennedy International Airport in Queens, New York, has been canceled. That ground stop was due to an aircraft emergency. Coming up next on Bloomberg Business Week Daily, Huntington Bank shares lower, even though the company boosted its net interest income growth forecast for the year. We got the CFO next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. Bond yields fell alongside the dollar as Fed Governor Christopher Waller reiterated his case for a July rate cut. His remarks coming in an interview with Bloomberg Television and Radio. Right now we have got the Dow, the S&P, NASDAQ all in the red. 5-point drop on the S&P. Little change. That perhaps the key takeaway, down 0.1%. Retreating from a record now at 62.92. The Dow down 201, down 0.5%. NASDAQ flat on the day right now. Lower, little change, down just 6 points. Our Mag 7 index, though, ahead of earnings next week out of Tesla and Alphabet. The Mag 7 index up now by 0.6%. 10-year, 4.41%, with the 2-year, 3.86%. The 30-year, 4.98%. Gold up 0.4%, 33.51 the ounce. And West Texas Intermediate crude oil, WTI, down 0.3%, 67.34 for a barrel of WTI. Chevron won its arbitration battle with ExxonMobil, clearing the way for it to buy Hess Corp in a more than 20 months after that $53 billion deal was announced. Chevron shares lower now by 1.6%. That ground stop at JFK is over. We do have more details on just what happened. JFK lifted the temporary ground stop put in place because of a disabled aircraft on the runway. The FAA put out an advisory saying it was halting departures for a brief period of time because of an aircraft emergency. We're learning that Delta Airlines Flight 183 landed safely at JFK after what is being described as a hydraulic issue. So again, repeating that ground stop, JFK International is over. Recapping, stocks lower, S&P down 0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, nice sigh of relief there after that ground stop. Thanks for that update, Charlie Pellet. Well, Huntington Bank shares stock down about 1.8% as we speak. The company reported second quarter earnings this morning. It boosted its net interest income growth forecast for the full year. Earlier this week, though, the company also agreed to buy Veritex Holdings for $1.9 billion in stock that expands its presence in Dallas, Fort Worth, and Houston. Back with us is Zach Wasserman, Chief Financial Officer of Huntington Bancshares. It's the holding company of the consumer and business regional bank, Huntington National Bank. It's got locations in a handful of states, including Ohio, Minnesota, North and South Carolina, and more. Also with us, Bloomberg News senior editor Nina Trentman. She writes the Bloomberg CFO Briefing newsletter, which you should sign up for at bloomberg.com/CFO-briefing. Zach is in Columbus, Nina here in our Bloomberg studio. Zach, I want to start just with the deal for Veritex in Texas that will accelerate your operations in the state. What attracted you to this bank in particular and to the Texas market?
You know, we're extraordinarily pleased with the opportunity to partner with Veritex. And, you know, a couple things I would say. One is the Texas market in particular is incredibly attractive. As you probably know, it's one of the fastest growing states in the country. It's the 8th largest economy in the world if it was a standalone country. And just the dynamism and the amount of business activity there is incredibly attractive. It's one of the reasons why we launched our own business there more than a decade ago, and we doubled down with a local expansion in early 2024. But Veritex also is an incredible platform for us to partner with. They're a top 10 commercial bank in the state, and in particular focused on the two cities, as you noted before, the two MSA areas, Dallas, Fort Worth on one hand, and then Houston on the other hand, that we really are focused on. So we not only see a great opportunity to combine our activities, but to really build on that. One of the things we've talked a lot about is that this is a springboard for us to grow organically, not only now in the short term, but really over the longer term in Texas. It'll make Texas our 3rd largest state, to give you a sense. So we already will have a very meaningful presence in that really great market.
Zach, can you talk to us a little bit about how that deal came together? We know, of course, many companies have been looking at deal making this year. Deal making is actually up compared to the prior year period, but still, of course, there are deals that are not going through because of tariffs and uncertainty. And how far did that impact your deal, and also how did it come together?
Yeah, well, you know, so we have wanted to expand and sort of continue to grow into Texas for some time, and we've been therefore evaluating a lot of opportunities to do that, both organically. You know, as you probably know, in North and South Carolina, we've just announced a pretty significant organic expansion, building 55 branches and really doubling down, building out our whole franchise there. And so we were looking at opportunities to do the same thing in Texas, and obviously evaluating lots of different ways to do that. When we really began to talk with Veritex, and it came together pretty quickly. The first time we met with them to discuss a partnership in any specificity was in mid-June, so just about a month ago, and it evolved quickly for us to see, wow, these are not only incredibly strategic opportunities, but the organizations themselves share a tremendous affinity in terms of culture and mission, which, as you probably know, that is the sort of secret sauce to make an acquisition in banking successful. The cultures need to be aligned. The teams need to work together. And when we saw that there was not only the strategic opportunity, but the cultures fit, and then we were able to work together to find some of these growth opportunities that we could capture together, we said, wow, this is a partnership that we really should move forward with. And so on Monday, we were really, really pleased to be able to announce that.
Just turning to your earnings, talk to us a bit about the past quarter. We spoke to you at the end of the last quarter, and we're asking you, do you see any signs of a recession in your business? How is your business doing? What are you hearing from clients? Now that we're 3 months later, how does that look?
Yeah, Q2 results were just phenomenal, and they really built strength throughout the quarter. To give you a sense, loans sequentially grew just under 2%. That's 8% year over year. That was at the high end of our guidance range that we had given earlier in the quarter. Deposits grew 1%. Fees were up 7% year on year. Spread revenue 12%. Ultimately, we saw pre-tax earnings up 16% and earnings per share growing 25% year on year. So it really was a bang-up quarter. I will tell you, if you rewind the tape and you go back to April, I would have told you we had a lot of momentum. We felt pretty confident about how things would go, but there was clearly quite a bit of uncertainty in the market, and the capital markets were pretty volatile. Fast forward to June, and we saw strength build throughout the quarter. Loan and customer activity really firmed up, particularly in mid-May and into June. And now the third quarter is starting out with a bang. We just talked this morning with our analyst and investor community, and we shared that through the first couple of weeks here in July, it's pretty strong actually. So all signs are pointing toward continued growth and certainly a very encouraging end of what was to start with a somewhat uncertain environment.
Zach, Shonali Bassick here. Thanks for joining us today. Even with a lot of promising information coming out of this earnings season for the biggest banks, for the regional banks, there seems to have been a pretty muted investor reception for firms even like yours that have boosted net interest income guidance. That should be a really good thing. What are investors telling you in terms of what else they want to see, why the muted reaction, even if things are looking pretty good?
It's hard to know what's on the mind of investors at any given time, as I'm sure you know well. Look, I think if you take a step back, the regional bank stocks have expanded a fair amount over the last month. So I think there's part of that sort of profit-taking activity going on now as results come through. There's also obviously worries around how will different banks fare under this fairly wide cone of uncertainty around where interest rates are going to go from here. Are rates going to stay flat? And could they even go higher, or could they go lower? I'll tell you, for Huntington's sake, we have positioned the business to be pretty neutral and to effectively have the same outcome if we have 0 rate cuts or if as many as 4 rate cuts from here. And so I think that's one of the questions on the mind of analysts. I think another one is, as loan growth in the banking industry generally starts to pick up, which, by the way, is an incredibly healthy sign. But as it happens across the industry broadly, what will that do to deposit cost competition and the kind of the benefits of interest rates coming down by around a percentage point relative to the peak of Fed funds, over the last number of quarters here. So I suspect those and many other things are on the mind of analysts. For our part, I'll tell you, we put our heads down and we run the business. And I think, for what we believe pretty strongly is if we can keep posting that, teens to higher earnings per share growth and revenue growth in the high single digits, that ultimately we'll see the stock prices continue to expand as they have been for the last several months.
Zach, you talked about interest rates, which of course is a nice segue to our next question. We've seen increasingly intense debate this week and in recent weeks about the future of Mr. Powell as head of the Fed, with the Trump administration asking for rate cuts, wanting to remove him. We saw this big excitement earlier this week when the New York Times reported that Trump had written a letter and waved that in front of people in Congress. I'm just wondering, for you as a regional bank CFO, I know that your peers on Wall Street have expressed their support for an independent Fed earlier this week when they reported earnings. For you as a regional bank CFO, how does that look?
You know, what we want is a well-functioning monetary system. We want a predictable and stable environment. We want to understand that it's a fact-based and you know, based on the kind of fundamentals of the economy in terms of how the decision-making is happening. So far, that appears to be happening. I personally give the Fed a lot of credit. It was a very difficult environment they've been through, and they seem to have managed through over the last several years pretty well here. And you know, that'll be where our focus is. Fundamentally coming back, you know, we run the business every day. We take the interest rate as given, and we try to optimize around that, Nina.
We're speaking with Zach Wasserman, Chief Financial Officer of Huntington Bancshares. Zach, since you do operate in these geographies, including Texas, Ohio, Minnesota, North and South Carolina, and more, you've got a nice regional view on where there's strength and weakness. Are you seeing any particular geographical weakness emerge anywhere?
Really not. You know, I think pretty broad-based growth. Well, one of the things we shared today in the earnings results is that, like we've seen for the last several quarters, the growth we're seeing is very balanced between what we're calling our core, all of the businesses we've been operating for a long time, but also our new initiatives. Excuse me. The launches we're doing into North and South Carolina, into Texas. Recently, we launched our business into South Florida, and a number of new commercial specialties, and we're seeing a nice balance across them. So, you know, kind of across our traditional Midwest footprint, we're seeing strong growth in Michigan. I was just up with our Michigan-based team earlier this week, and we're seeing 6% year-over-year loan growth in that market, to give you a sense. In Columbus and in our central Ohio region, where I'm based, we're seeing very strong economic conditions and a lot of expansion. And then, of course, in some of the new geographies that we're growing into, North and South Carolina, Texas, Florida, we're seeing a fair amount of expansion there also. So not really seeing any areas of weakness. And, you know, again, as I noted, kind of the trend we're seeing month by month here is firming up pretty well.
Zach, thanks for joining us. It's good to see you again. Happy third quarter. I can't believe we're already there. Hope you have a good summer and do come back soon and join us once again. Zach Wasserman, Chief Financial Officer of Huntington Bancshares. It's the holding company of the consumer and business regional bank, Huntington National Bank. Locations include Ohio, Minnesota, North Carolina, and more. Stock right now down about 2%. The company did report results a little earlier in the day. Also with us, Bloomberg News Senior Editor Nina Trentman. She does write the Bloomberg CFO Briefing newsletter. You should sign up for it at bloomberg.com/CFO Briefing. Taking a look at equity markets on this Friday afternoon, and we're actually turning red. The S&P 500 down about 0.1%. The Dow right now down 0.5 percentage point, while the NASDAQ is pretty much completely flat. Coming up next on Bloomberg Business Week Daily, a check of the health of the housing market here in the United States. We're talking everything, including, yes, rates. Katie Hubbard of Walton Global next.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got stocks fluctuating between small gains and small losses as declines in tech and growth shares offset gains elsewhere. S&P 500 index still on track for a weekly advance after consumer sentiment rose to a 5-month high. Little change, the key takeaway at this hour, with the S&P down under 0.1%, down 5 points. The Dow down 213, drop there of 0.5%. Nasdaq Composite Index now flat on the day. Interestingly, the Mag 7 Index higher by 0.6%. Next week, we will be hearing from both Alphabet and also from Tesla. 10-year, 4.42%. The 2-year, 3.87%. The 30-year, 4.99%. Gold up $13 the ounce, $33.52. That is an advance of 0.4%. West Texas Intermediate crude down 0.2, $67.42 a barrel, and Bitcoin down 1.5%, $117,650 on a Bitcoin. Sarepta Therapeutics shares are plunging by 37%. The FDA plans to ask Sarepta to pause shipments of its Elevidys treatment after 3 deaths were linked to the company's gene therapies. Again, Sarepta right now down 36.8%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
Appreciate the update, Charlie. Thank you. U.S. housing starts rebounded in June on the strength of multifamily building, while weakness in the larger single-family market pointed to some ongoing struggles with bloated inventories and affordability constraints. New residential construction increased 4.6% to an annualized rate of 1.32 million homes last month. It's picking up after an almost 10% slide in May. That's according to government figures that were released earlier today. Our next guest watches all aspects of the housing market. Great to have back with us Katie Hubbard, Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. It's got over $4.5 billion of land assets under management and administration, and more than 80,000 acres under management and administration. Walton Global is in retail, industrial, commercial, and more. Katie joins us from Denver this afternoon. Katie, you were last on with us just about a month ago. Is the residential housing market now better, worse, or no different than it was then?
Hey, Tim, thanks so much for having me. I would say the housing market machine is definitely gummed up right now, and it is continuing to flatline, with the increased housing prices going up 60% from 2019 to 2024, and mortgage rates doubling over the same time. It's just affordability is keeping really everybody stuck.
What do you make of mortgage rates going forward? If you have a 10-year yield that has been pretty sticky, we have reached roughly 4.5% again this week, although we are below that level right now. What does it mean for the potential for mortgage rates to eventually go down? A lot of people think it will be the Fed that could help, but if longer-term rates stay sticky, then is there a chance that mortgage rates just don't follow on the path lower?
That is really the challenge. And so we obviously are hearing President Trump wanting to send rates down. However, the 30-year fixed rate mortgage sitting at rate 6.7 right now is tied to the 10-year Treasury more closely than the Fed funds rate, typically sitting 150 to 170 basis points spread. However, when the market perceives the risk for long-term debt to be greater, the spread increases. And so we really need the 10-year Treasury to come down. Right now, if you're looking at technical analysis, it is channelizing. So it is looking to make a move. Hopefully that move is going to be to the downside, bringing rates down. And really, that's going to be the biggest driver, I would say, for how we get the housing market unstuck. Even with the big, beautiful bill that was just passed, we saw home builder sentiment increase slightly because there are some tax incentives that are going to be helping out in housing, but it definitely isn't going to do as much as it would if we could bring the 30-year fix down.
What is your view on the Federal Reserve's role in this gumming up? And the reason I ask is because of a post that the president made to his Truth Social platform earlier today. Here's partly what it said. He said, "Too late," which is a nickname he uses for Fed Chair Jay Powell, and the Fed are choking out the housing market with their high rate, making it difficult for people, especially the young, to buy a house. He is truly one of my worst appointments. Is the Fed partly gumming up the market?
I mean, like I said, the Fed funds rate doesn't directly impact. It does, work in lockstep with the 30-year fixed rate. So I would say what the positive that we're seeing in housing is that at the state and local level, we are starting to see some reduced regulation to help with affordable housing, changing zoning laws. For example, Governor Newsom just changed the CEQA Act, which was enacted in 1970. So he's saying it's the biggest reform California is going to see in over 50 years, which is going to enable developers to have less red tape, making it easier to develop in urban areas that have less than 20 acres. So not having to go through all of the environmental red tape that they had to, and making it faster and cheaper. Because historically in California, it's really been a rich man's game to develop. And now people that have just written off development there are going to be taking another look. And so hopefully that and things like that at the state and local level are going to be able to help with the affordability, while, President Trump's comments on the Fed, even if we do bring the Fed funds rate down 3%, like he, tweeted a few days ago, that means we're probably going to be, in a recession at that time. So there's going to be bigger economic waves and impacts that come along with bringing the rate down.
Of the potential headwinds moving forward, and there could be many when it comes to construction and when it comes to just the creation and proliferation of new homes in this country, one question I have is actually around tariffs still. Because you have those Section 232 tariffs still very much up in the air in a lot of ways, particularly with a lot of the housing inputs like lumber in particular. Meanwhile, there's still a big question mark around how some of the immigration policies could impact the labor market when it comes to housing construction. How do you weigh those factors when you're thinking about new home starts in the next year?
Yeah, Shonali, what's really interesting is that Walton's home builder clients, which we work with mostly publicly traded home builders, they are reporting no increase in costs across the board. In fact, in some cases, they're reporting their costs to have come down even since the talk of tariffs. So we're definitely looking out for labor because of deportation issues. So places like California, they might be reducing regulations, but they could have labor shortages. So we have not seen the impact of tariffs from our clients. They're not reporting that. And what's interesting is that publicly traded building supply companies are still operating at near 30% gross margins, while home builders peaked at about 27% gross margins in Q2 of 2022, and they've reduced their gross margins 600 basis points. The building supply companies are still operating at that high gross margin. So what we think is going to happen is that there's really going to be a balance and a dance between, yes, the home builders are really eating into their margins to drive home prices down. They're buying down mortgage rates, offering incentives to keep people buying their homes. But they're going to be going back to their suppliers and saying, like, hey, now it's time for you to eat into some of your margins so that we can keep the homes as affordable as possible. So Lennar is actually offering 13.3% incentives across the board to their home buyers. And in places where they dominate, like San Diego, they have 50% market share. They're offering upwards of $100,000 discount on an $800,000 house to just, their strategy right now is pace over price.
So while that's good news to see a very muted impact on tariffs so far for the home builders, one big problem is that some of the tariffs that have been proposed are not enacted. Lumber in particular. Of course, they're not seeing yet the impact of the tariffs. We haven't seen the tariff yet. And so how are you starting to calculate what future tariff rates could look like on the impact of these home builders, given that there's still so much up in the air? Is there a potential for the industry to be shouting louder about this if they think it's going to create an impact, unless they don't think it is?
Well, for lumber specifically, our clients are using lumber futures. So the lumber that they're going to be building with in 6 months is what they're pricing in today. And then also, the president has really discussed how to open up federal lands for milling lumber in the United States and adjusting taxes to make it more incentivized to have lumber from the United States. And we do have the ability. I was just coming from Portland, Oregon today, and that's a hot topic for them as well. So we're hoping, and we don't really think that the lumber tariffs are going to impact the home building industry as much. In addition, our clients are really trying to use new technology and ways to really reduce lumber and use alternative materials to reduce the dependency on that as well.
Hey, Katie, thanks so much for joining us on Bloomberg Business Week. We got to run. Katie Hubbard, Executive Vice President of Capital Markets at Walton Global. It's the privately owned asset and real estate investment company. We are monitoring President Trump right now. He is speaking, he's participating in a signing ceremony for the Genius Act in the East Room of the White House. We'll bring you any comments as he does make them. Next on Business Week, Stocks on the Move.
Order filled.
This is Bloomberg Business Week Daily with Carol Masser and Tim Stenovec on Bloomberg Radio and Television.
It is Bloomberg Business Week Daily. I'm Tim Stenovec. Sonali Basak is in for Carol Masser this afternoon. The president is participating in a signing ceremony for the Genius Act in the East Room. Sonali, we kind of knew this was happening, but that's not why you're here. But you are the co-anchor of Bloomberg Crypto with me every Tuesday at noon. This is a big deal for crypto investors. It's a big deal for crypto companies. It's also a big deal for financial regulation in the U.S.
It really is. And remember, the Genius Act is the one that pertains to stablecoins. And the idea that stablecoins can be bigger and bigger buyers of U.S. treasuries is one big reason that Wall Street has their eyes on this particular bill, although that they've made more progress too with other parts of the bill, like the Clarity Act as well.
Well, let's take you now to the East Room of the White House and listen in on President Trump.
I said, did you learn it as a child? No, I just learned it over the last 4 or 5 months. I said, you learn Japanese. Maybe the single hardest language to learn. It's actually breathing rather than, it's breathing. I'm not going to imitate it because we'll end up with a big story, and I don't want that. But he spoke totally fluent Japanese. I said, that's very impressive. And he was introducing me to Mr. Honda. I said, oh, are you in the car business? He goes, yes. I said, you're a very rich man. And then he said, Mr. Toyota, right? Toyota. And I said, what business are you in? Let me guess. He said, cars. He was my interpreter, and I was so impressed. And I was getting ready to leave. He said, sir, I'd like to run for the United States Senate. I said, where are you from? He said, Tennessee. I said, well, I love Tennessee, but do they know you there? No, but if you endorse me, I'll win, right? And I endorsed him, and he took a 48-point lead. And they didn't know who the hell he was. And he's turned out to be a great senator. And now they all know who you are. Yeah, so you're fantastic, and we thank you. And just the fact that you're doing this and you understand this is a complicated world, and you understand it, Bill. So you've been great. Thank you very much. We're also pleased to be joined by our great Vice President, J.D. Vance. J.D., thank you very much. Good job. And he's been up speaking late at night on the phone. I said, J.D., how about you taking 3 or 4 of these people, please? Because 3 or 4 I cannot speak to. I just can't. And he'd take them and he'd come through, right, J.D.? Also, Speaker Mike Johnson. He is unbelievable. He's an unbelievable... I mean, if you go by what we're doing, if you keep at this pace, you can't keep it up for another 200 days. But I will tell you this, if you keep up this pace for another week, you go down as the greatest speaker in the House in history. So one more week. One more week. Who needs Tip O'Neill? Who needs Tip O'Neill? He's better looking than Tip O'Neill, too. But no, he's been going at a fervent pace. Would you say that's right? Your wife probably says, you are crazy. You've been aging beautifully at front. He's an amazing speaker, a great leader, and everybody likes him and respects him, and that's why we're with a very small majority, like 3. We had a time when we were 1. Remember? We said we're 1 heart attack away from losing the House. Then we won a couple of seats and a couple of other. Now we have 7, maybe if we're lucky, 7. But we win with, nobody's ever done, I don't think anyone's ever done this before, to win with those small. We had a little help from Tom, too, right, and a lot of other people. I want to introduce also Secretary Howard Lutnick, who's been fantastic. You have done a great job, Howard. We've got trade deals coming out of our ears, right? We had so many trade deals. They're all calling so many, and I really mean this, too. It's like, how do you deal with so many? But, I always say when we send out the paper, that was a deal. They don't want the fake news doesn't want to hear that. When I send out the paper that you're paying 35 or 40% tariff, that's a deal. Then they'll call and see if they can make a little bit different kind of a deal, like opening up their country to trade. In some cases, they've never been opened. But we're doing well, and we have a couple of big ones to announce pretty soon, right? Could almost do it today. Maybe we'll say it. Maybe later on we'll do it. Senator Bernie Moreno, a great victory. Bernie had great victory. A great victory. That was one of the truly tough races. A lot of people weren't sure anybody could win that seat, and you won it in easy fashion, right? We won it together when you think of it. But you won it in easy fashion. You did a great job. Great guy. House Majority Whip. This is a great leader, Tom Emmer, a great politician and leader. Really good. And I like his wife even better. His wife is, she's the boss, but you are married to a fantastic woman, huh? And he knows that, and he likes hearing it, because some people don't, they say, sir, could you please stop saying that my wife is better than me, sir? Those are guys that don't usually end up with a good marriage, He's got a great marriage. So thank you, Tom. You really are a fantastic leader and representative. And Representatives Troy Downing, French Hill. Where's French Hill? Where is French? You have been so great. Thank you, French. I spoke to him a little late. He was walking down the hall. I said, French. He said, I'm there, sir. You are great, great, great guy. Everyone respects you, French. You know that. Bill Heisinger. Bill, thank you very much. Thank you very much. Good job. Dan Muser. I thought he was going to become the next governor of Pennsylvania, but he likes Congress better, I guess, huh? So, but I think you're terrific, and, I would have always been behind you. That I can tell you. Tim Moore. Tim, thank you, Tim. John Rose. John, Hi, John. Thanks. Good job. Brian Style. Brian Style. Still young. Still nice and young. That's good. G.T. Thompson. G.T. Thank you. Andy Barr, good friend of all of ours. Thank you, Andy. Monica De La Cruz. Monica, she's here someplace. Thank you, Monica. Thank you, Monica. Mike Haradopoulos. Mike, thank you, Mike. Look good. Mike Lawler, Mr. Salt. Well, it should guarantee your district. I mean, you worked hard for New York, right? And you're on television, I'm on television, so this should be good for a couple of points. But without you and your couple of friends from New York, that wouldn't have happened. That was not easy, right? Congratulations. Great job. Anna Paulina Luna. Anna, who is so great. I don't, even if she's here or not here, I want to tell you that she has been so great and worked so hard to make sure we got it approved. Ralph Norman. Ralph? Ralph? What happened to Ralph? Nick Begich. Nick, thank you, Nick. Good job. Good job. Good votes. I just saw a great poll on you, huh? Very good. Congratulations, Nick. Andy Ogles. Andy, who's a terrific friend. Beth Van Dyne. Beth, thank you, Beth. Great job. Thank you. Thank you very much for the great support. Roger Williams, a great baseball player, who also had to take a bullet, unfortunately, but he is a great guy. He was involved in that whole catastrophe, but he's fantastic and has been from day one, along with a lot of other people that I won't call out because I have no idea where the hell you are. I think I saw Jason here somewhere. Where's Jason? Oh, it's lucky I called him. Ooh, it's lucky. They didn't put your name because I invited you at the last moment, right? He was over there doing some business in the White House. But you've been incredible in your position. Nobody knows more about taxes and finance than you do, so we appreciate it, right? Is that true, Howard? It's true. Thanks, Jason. Great job. And you'll help out with that other matter. You make him so strong and powerful, right? Along with Deputy Secretary of Treasury, Michael Faulkender. Where's Michael? Good, Michael. How are you? Good. You'll help out over there, okay? And Ambassador Ken Howry. Ambassador? Thank you, Ken. Great job, Ken. I also want to recognize some of the countless industry leaders here today, including Brian Armstrong of Coinbase. You've done a good job, Brian. That's a big deal. Dave Ripley of Kraken. Thank you, Dave. Jeremy Allaire of Circle. This is a big day. Good job. Good job, Jeremy. Paolo Ardino of Tether. Paolo, thank you, Paolo. Ryan McInerney of Visa. That's a good company. Thank you. Chris Pavlovsky of Rumble. Chris, what happened to your location, Chris? You're always a front row guy. You're just being nice today, I think. Huh? How's Rumble doing? Good? Good. If Rumble's doing good, that means Truth is doing good. Truth. That's great. You're doing a great job. Thank you, Chris, very much. Vlad Tenev of Robinhood. Vlad, thank you, Vlad. Thank you, Vlad. Good. Tyler and Cameron Winklevoss. These are two smart, handsome guys. They got the whole package. They're of Gemini, but they have the whole pack. They have a lot of things, actually, but Gemini's just the one for today, right? They've got the whole, they've got the look, they've got the genius, got plenty of cash, and it's great that you're on our side. You guys are great. I can never tell them apart, but their mother can. I asked, can your mother tell you apart? And the answer is yes, right? Easily, or is it tough for her? Easy, I figure. Good. You guys have been great. Thank you very much. Great to be with you. Let me say the entire crypto community, for years, you were mocked and dismissed and counted out. You were counted out as little as a year and a half ago. But this signing is a massive validation. And even before this signing, over the last year and a half, I think your stuff has gone up more than any stock, or just about more. A couple of stocks that were pretty good, I will say. But you have certainly, as an industry, gone up more than anybody. Nobody's gained the respect in such a short period of time. But this signing is a massive validation of your hard work and your pioneering spirit and your ability to never give up, because a lot of people would have given up 2-3 years ago. So I want to thank you for contributing to the incredible strength of America. This is going to make it stronger, and congratulations on this incredible achievement. You've made our dollar look really good and strong and powerful. It's good for the dollar, and it's good for the country. And that's why I backed you at an early stage, and I also did it for the votes, because you did come out and vote, I will tell you. And they changed tune, you know, Biden's team, they changed tune right in the middle of the campaign. All of a sudden, they loved you guys. They dropped all charges. They did have, I got you guys out of so much trouble. And you know what? I don't think anybody voted for them, right? Because you remember they treated you very unfairly, actually. So it's a great honor that we were involved. And it was a tremendous amount of support that we got at the polls. We won, think of it, we won every swing state. We won by millions of votes. We won the popular vote. We won the districts by 2,750. Think of that, to 505. Different districts too, by the way. Every once in a while that number can change, but it doesn't change by much. The map was almost totally red, and you guys were with us right from the beginning. Exactly 1 year ago this month, many of you were with me in Nashville, Tennessee. Do you remember that day, right? That was a big day, Nashville, Tennessee, when I became the first presidential candidate ever to address the Bitcoin conference. And at this time and at that time, crypto builders and founders were under relentless assault by the Biden administration, which was trying to crush your industry and crush you as people and go after your families. And they were a vicious group of people. You know, people don't realize it. They were vicious, incompetent, but vicious. Well, Joe was an incompetent guy, but he was always known as a vicious guy. I guess if you're going to be in that, you're probably off, if they're incompetent is better, right? Because you don't want to have a vicious guy that's competent. If you did, I wouldn't be standing here today, right? But I pledged that we would bring back American liberty and leadership and make the United States the crypto capital of the world, and that's what we've done. And under the Trump administration, this is only going further. You're going to do really well. I mean, I'm so proud of what you've done in the last couple of years. And very important, on day one, I remember I did this and I said this and I mentioned this name, and I got the greatest applause of the whole campaign. We fired Joe Biden's SEC chair, Gary Gensler. We fired him. But I remember I was making a speech, and you know, it was just a line in a speech. And I said, and I will fire Gary Gensler. The place exploded. I said, I finished like one, and I said, what the hell did that guy do?
You're listening to President Trump. He's about to sign the Genius Act. He's in the East Room of the White House, along with many executives from the crypto industry.
I appointed a visionary chairman who wants America to build the future and not block the future. He's going to be unbelievable. He'll go down as one of the greats. And Paul Atkins, where are you, Paul Atkins? And you know, Paul, the crypto guys, they said, everybody said, not only crypto, every industry, they all wanted Paul for the position. And he's a tough cookie, too. He's just, but they actually said, we don't care. We just think he's fair. All they wanted was fairness. And they have somebody that you're really a champion of the street and you're a champion of the country. You're going to do a fantastic job. I saw you interviewed the other night. I watched it about 2 o'clock in the morning. There was a little thing called C-SPAN, which I don't know how many people were watching. Don't worry, you were on primetime too, but they happen to have a little rerun. I don't want to embarrass you. But fantastic job, really. You are absolutely so perfect for the job. Congratulations, Paul. And Paul is here today among the commissioners, various commissioners, including Hester Pierce and Mark Yoida. Hester and Mark Yoida. Thank you, Hester. Thank you very much. And thank you, Mark, wherever you may be. Is Mark here? Oh, stand up, Mark. I didn't. Good. Thank you. Good job. Good. I'm glad I gave you a second crack you didn't hear because of the thunderous applause for Hester. But thank you. I heard tremendous things about both of you. Thank you very much. My first week in office, I also established the first ever presidential working group on digital assets, and we have an executive director. Where's Bo Hines? Bo Hines. Right, Bo. And Bo is a great football player, right?
Order
Bo is a
canceled.
great football player, one of the better players in college football. So I know you from that also. See, who would think that I know that? I know a lot of things, Bo. But he was a champion player. I stopped the weaponization of government against crypto and Bitcoin, and we ended the lawless operation Choke Point 2.0. That was a bad operation. And I kept my promises to the community and granted a full presidential pardon to Ross Ulbricht. Ross Ulbricht. And you have no idea how important that name became. It was like a symbol, and his mother was unbelievable. His mother was an unbelievable woman, but it was so important to a certain group of people. And in the truly momentous act last March, I signed an executive order establishing the U.S. Strategic Bitcoin Reserve, as well as the United States Digital Asset Stockpile. And that's all signed up. And with today's signing, we're pushing even further into the exciting new frontier. Just as I promised last year, the Genius Act creates a clear and simple regulatory framework to establish and unleash the immense promise of dollar-backed stable coins. This could be perhaps the greatest revolution in financial technology since the birth of the internet itself. A lot of people are saying that. I don't know. What do you guys think? Yes? If you say yes, I'm saying yes. I think it's great that you're involved, I will tell you. Many Americans are unaware that behind the scenes, the technical backbone of the financial system is decades out of date, many, many years out of date. You know that. Paul and others are straightening it out, but payments and money transfers are costly and take days or even weeks to clear. Under this bill, the entire ancient system will be eligible for a 21st century upgrade using the state-of-the-art crypto technology. Who would have thought we would have been saying that 2 years after I really met you for the first time? The Genius Act provides banks, businesses, and financial institutions a framework for issuing crypto assets backed one-for-one with real U.S. dollars, treasury bills, and other cash equivalents. It's really strengthening the dollar and giving the dollar great prominence. And, you know, you have this little group called BRICS. It's fading out fast. But BRICS is, they wanted to try and take over the dollar, the dominance of the dollar, and the standard of the dollar. And I said, anybody that's in the BRICS consortium of nations, we're going to tariff you 10%. And they had a meeting the following day, and almost nobody showed up. They said, leave me alone. We didn't want to, they didn't want to be tariffed to us. It's amazing. No, we're not going to let the dollar slide. If we have a smart president, you're never going to let the dollar slide. If you have a dummy, that could happen. Like the last one, he would, if you ever asked him about the dollar sliding, he would have no idea. But we can't let that ever happen again. Consumers, vendors, and people all over the world will then be able to use those stable coins for ultra-low-cost transactions that are cleared and settled in a matter of seconds rather than weeks and months. And it's really an amazing thing. And with the privacy, flexibility, and decentralization of cash, this revolution has the potential to supercharge American economic growth and empower billions of people to save and transfer in U.S. dollars. It's really all backed by the dollars. It's really a great thing. And a lot of, you know, we had a lot of Democrat support. I have to tell you that. I was shocked anytime you get one but we had a tremendous amount of Democrat support, which we appreciate, and which just shows you that you're doing the right thing. This will increase demand for U.S. Treasuries, lower interest rates, and secure the dollar's status as the world's reserve currency for generations to come. The reserve currency is so important. You know, if we lost that, that would be like losing a world war. We can never let anyone play games with us, and that's why when I heard about this group from BRICS, 6 countries basically, I hit them very, very hard. And if they ever really form in a meaningful way, it will end very quickly, I will tell you, for them. They won't be gone very long. I don't think they'll even do it. They're virtually afraid to meet. I also remain fully committed to my pledge never to allow the creation of a central bank digital currency in America. It won't happen. My first. Thank you. And the other night, I will say, with some of the congressmen and women, they wanted that so badly. That was so important to them. I was impressed that they knew what the hell it was, to be honest with you. Please, sir, please, the central bank digital currency, well, you have to make sure, sir. And I'm saying, what do you know about that? It's amazing the knowledge that people have gained all of a sudden. We had a lot of problems with some of them. I said, we've already got it from the Fed, right, from Commerce, and from an executive order. You don't need it a 4th time. Sir, we have to get it. It's amazing. But they knew their subject, though, didn't they, huh? And we helped them out. My first week in office, I signed an executive order to ban the creation of a CBDC in the United States, and very soon I look forward to signing legislation that will codify and ban make it a permanent law, put it in permanence. I'm also committed to signing landmark crypto market structure legislation this year to grow the industry. We're going to be growing it even more than people ever thought. It's a really hot industry. And for a little while, 2 nights ago, we were a little concerned because we were a little short on votes. Like, I would say maybe we were about 9 short. 9 short at 3 in the morning. We were about 4 short at 3:30 in the morning. And we were in good shape at 4 o'clock in the morning, right? But the people, and few people, have fought harder for the bill than we're signing than some of the people here today. You have been unbelievable. It's our White House AI and crypto czar, David Sachs, who has done such a great job. And he has a show now. I've become a showman, but a couple of years ago, right? It's probably 2 years ago now in San Francisco, and I did his show. And I heard he's a very smart guy, and we had a great show. You've kept it going a lot longer, and is that still your highest rated ever show? Oh, he knows what to say. He knows what. He had a rating that he had millions and millions of people. He said, what's going on? But we had a great show. And I said, that guy's really smart. I said, if I get elected, I was running at that time, if I get elected, we're going to bring him into government in some ways. He's worth a fortune. He's made a lot of money. He's a very rich billionaire, but this is more important, isn't it? This is, me too, it's like, doesn't matter. This is much, I know Howard and I talk about it all the time. Howard could go back to his wonderful brokerage firm, hire 1 or 2 people, and it's not the same as what you're doing, right? We're doing the biggest deals in the world. Actually, the deal we're doing now in tariffs is the biggest, when you add it up, the biggest deal ever made in history. It could be 1,000 IBMs. I mean, if you think of it, it's the biggest deal ever done. So it's hard to go back to a brokerage firm and, make $79,000 commission on the sale of a stock, right? It's true. But I want to ask David. So David's been fantastic. He's done an incredible job. And I'd like to ask David to come up, say a few words. Thank you very much.
Thank you so much. All right, thank you, President Trump. It's a great honor to be here, and it's true that I never expected to work in government at all.
You're listening to David Sachs. He's AI and crypto czar, making comments in the East Room of the White House as the president is participating in a signing ceremony for what's known as the Genius Act.
Who really wants to get things done for the American people, and if anything, that's been an understatement. The first 6 months of this administration have been more successful than any administration in American history. What's been done? It's just been incredible. President Trump has worked at tech speed. We're used to working fast in Silicon Valley, but even this is fast for us in Silicon Valley, the speed at which you moved President Trump. It's really incredible. And now today, you have another historic legislative achievement that is a monumental step to fulfilling your promise to making the United States the crypto capital of the world. This Genius Act will unlock American dominance in the crypto industry by creating clear rules of the road. It will update archaic payment rails with a revolutionary new payment system, and it will extend U.S. dollar dominance, like you said, globally, by creating a digital dollar that people all over the world can use. And for every digital dollar in a crypto wallet, there'll be a traditional dollar in a U.S. bank account, which will create trillions of dollars of demand for U.S. treasuries. So that is the power of this bill, is U.S. dollar dominance. This is a huge promise made and promise kept by President Trump. And there's just a few other people I'd like to thank. First, my family for being here. Thank you. And Bo Hines, who President Trump mentions, the director of our crypto council, he really did the heavy lifting here. So Bo, I just want to thank you again. And my chief of staff, Tracy Johnson, as well, who also does the heavy lifting. And Bill Haggerty and French Hill and all the congressmen and senators who have already been mentioned by President Trump, so I'll save the time, but it was really been an honor to work with all of you. This was really a team effort, but most of all, I want to thank President Trump for accomplishing what nobody thought was possible, and it's true that just earlier this week, the media was reporting that this bill was dead. This bill was dead, and then the media didn't know one thing, that we had a secret weapon. We have a deal maker in chief. And thanks to President Trump, he stepped in and saved this bill. And it's because of your vision, your leadership, your determination, your skill that we're all here today. So thank you very much, President Trump. Thank you.
Is that Laura? Please come. Just come here. This is our superstar. She was the head of the Republican Party, and nobody complained about anything. We went on to great. This is Laura Trump, married to a young gentleman named Eric. They have beautiful 2 children, but she has been so good. She stepped into that position like it was nothing that we won, and she said, "Dad, I'd like to go home right now to my beautiful husband."
The president making comments in a signing ceremony for the Genius Act in the East Room of the White House. President Trump said that stablecoins will be a revolution in fintech, that money transfers are costly and take a lot of time, yet he's not going to let the dollar slide. He said losing the dollar as a reserve would be like losing a war. He also said that the central bank digital currency will never happen in the U.S., and he said he'll sign legislation soon to cement an order banning a central bank digital currency. The president also made a comment that he's committed to signing crypto market legislation this year. We also heard from crypto czar David Sachs at the White House. He's also the AI czar. He said the Genius Act will create demand for U.S. treasuries. I want to bring in Frank Spicer right now. He's CEO of Metafied. He joins us from Myrtle Beach, South Carolina. Metafied is a blockchain ratings company. Frank joins us once again from Myrtle Beach. Frank, good to have you with us this afternoon. Before we get to your comments on the Genius Act and everything you guys are doing at Metafied, and perhaps differently now as a result of what's happening in Washington, just tell everybody what Metafied does, because it's, I think, not clear to people who aren't in the space.
Well, thanks to this kind of legislation, now we can be transparent and fully open and say Metafied gamifies a global competition amongst humans and AI to make a sport out of predicting asset price movements. And we do that through our own token. And now that President Trump and the administration have come forward with this legislation, we can get to work, just like a lot of founders that have been waiting to hear this.
What weren't you able to do before this?
So we were able to understand the movement of asset prices and run AI models against the trends and trades that are going on in the market. But now what we're able to do is link it up with what's going on in the real financial markets and add value to allowing people to be accurate and early in predicting these asset price movements.
How do you see the recent U.S. stablecoin legislation shaping the market? Could possibly tighter oversight drive stablecoin issuers offshore?
I actually don't think so. I think this is a great thing for the market, because the requirement of the Clarity Act and now the regulation framework around the Genius Act is that stable tokens now have to be backed 1-to-1. So what I think you're going to see is stable tokens that adopt the U.S. regulations to be the ones that are trusted, and people will see them as a viable on-ramp to link the digital asset world with the traditional finance system.
What is your view on CBDCs? We have President Trump earlier, just minutes ago, saying that he will cement an order banning CBDCs. This seems to be always kind of hand in hand with stablecoins when it comes to conversations or discourse in this space.
Yeah, so what I think the administration is making clear on that is that you're going to have the innovation in the hands of builders and entrepreneurs. And what they're not going to do is turn the currency itself into a surveillance mechanism, which if a CBDC were to become available in some other countries and were adopted, I think people would be a little hesitant to get involved with it, because all that's doing is letting people track your move and turn you off from the financial system whenever you run afoul of saying something somebody doesn't like, or take an unfavorable position. What this does is decentralizes the authority a little bit into the hands of builders and investors.
If you're watching on YouTube or Bloomberg Originals right now, you can see the president is about to sign S1582, the Genius Act. He's in the East Room of the White House. He's surrounded by people within the crypto industry, lawmakers who've been supporters of the crypto industry. You heard him call out a few of the people who were there: Brian Armstrong of Coinbase, the Winklevoss twins of Gemini, in addition to Vlad Tenev of Robinhood, David Sachs, the crypto and AI czar, there as well. I want to get back to Frank Spicer, CEO of Metafied. Frank, what legislation would you like to see when it comes to regulating crypto that is not yet law?
Well, right now there's clarity in the Genius Act as to what is a commodity, which is Bitcoin and Ethereum tokens, and the pathway to define yourself as a security. But I'd like to see some more clarity and some more help in determining what's a utility, because a lot of founders are building things with utility that link the two systems together, that carry value, but have a clear utility to them and are not such the case that they're a security. So it would be really great to see that. But I actually anticipate that we'll be able to work with the government to evolve that. And they seem really open to being able to have a conversation now, where before it was a little less clear on how to make that happen.
It's a big day for the crypto crowd today, because the entire market cap of this space just hit $4 trillion, which is a big deal. So in light of
It's like the size of NVIDIA, right?
Yes, exactly. And really, the story got a lot of views. I see it on Twitter. Everyone's really celebrating. Do you think that macro factors like Fed policy, inflation, or rate cuts still affect the risk appetite? Or because of the maturation of this space, do you think they're kind of isolated and, they have their own factors going on?
I think what we all just witnessed was the mainstreaming of crypto. So given what's happened in the markets recently, I think the stable tokens allow an on-ramp to connect people in their everyday lives to be able to use digital assets. They're going to find their way into assets like Bitcoin and other projects that are worth investing in. And I think what you're going to see is you'll start to see the continuation of the Bitcoin asset, especially, become unhinged from inflationary policy, or in some cases run counter to the markets, because the original intent of Bitcoin was to hedge against central bank inflation. And now with a way to on-ramp dollars into the asset in a digital format, like stable tokens like USDC trading into Bitcoin, you're going to see people understanding, well, when they're printing more money, maybe I'm going to move into an asset that hedges inflation like Bitcoin does, because there's a fixed supply and they're never going to make more than 21 million Bitcoin.
But how do you view Bitcoin? Because sometimes it behaves like a risk asset and moves in step with the NASDAQ, but sometimes it's a haven asset and behaves more like gold, and then Bitcoin lives up to its digital gold status. I feel like critics will say that it's still in the melding phase of discovering its role in a portfolio. What is your take on that?
Well, I think you're right in your observation there. Bitcoin has gone through several phases. So the first was it behaved like digital gold because there was a fixed and finite supply of buyers, and they were basically just voting a vote of no confidence in the inflationary aspects of the monetary system. And then what you saw was people investing in the speculative potential of Bitcoin. But now that it's becoming more and more mainstream, I think more and more people can look and say, well, if they're just going to keep printing more money and they're just going to keep sort of devaluing the purchasing power of my money, maybe I'm going to move some into a commodity that holds value and is non-inflationary. So I think we're moving back to the original intent, and it's just a phase shift of Bitcoin behaving like it was originally intended. I think it's going back that way.
Frank, I think it's fair to say there are people listening and watching right now who are not sold that crypto is even a good thing, not just for the United States, but also for their own portfolio. Sell it to them.
Well, first of all, let me say, not all crypto is great crypto. There's a lot of junk projects out there. There's a lot of nonsense floating around. Yeah, and but it's one of those things where you shouldn't throw the baby out with the bathwater. If you look like the original Web 1.0 revolution, where there's a bunch of companies that came about that got a lot of hype and hoopla just because they added .com to the end of a dumb idea, right? That's essentially what we're leaving behind right now with crypto, where we're going to move into the potential of the technology to remit money across, various regulations and various economies in a very cheap and efficient manner. You're going to allow people to trace things by ownership through a blockchain. That's all great technology. And now, with some clarity around how it's supposed to be used here in the United States, I think we can lead the way and show people that there are actually viable, great projects that follow the rules. And the technology itself is great technology because it allows you to be transparent about who's owned it before and who you're being transferred to. So you can shift compliance, you can make quick work out of chain of custody. And I think today is a real big step forward in getting us to where the potential of the technology is.
We're speaking with Frank Spicer. He's the CEO of Metafied. Frank, correct me if I'm wrong, but Metafied as a company has evolved in the last few years. Can you talk a little bit about that and the way that you've changed as the industry has changed?
Yeah, so we've always had an AI component to the company, and in understanding the movements of asset prices, but we started off as sort of a ratings company to help people understand which was a healthy asset, which was real, and which was, according to my last point, junk. And we wanted to do that to help people. But where we've landed now is there's a lot of movement and back and forth with these asset prices, and there's a real need to predict the movement of these prices through AI systems. We use neural networks to help predict the movement, but there's gaps that could be filled by people. And what we do is we gamify that competition, turn it into a sport of predicting, like the same way that video games have evolved to be a sport, and we help people fill the gaps in the machine predictions. And we found a real momentum right now, and we're moving to market very quickly. We'll be out in September, and people will be able to get into our games and participate in adding signal to the market and get real value for it.
It seems like that's what we see as the crypto landscape really just grows. Companies also learn to adjust. You earlier mentioned that not all crypto is good, and it's true. From where I sit, it seems like Bitcoin is still really the dominant coin when it comes to Wall Street interest. Are you seeing other coins like Ether, Solana, or XRP gaining traction as well when it comes to institutional interest?
Well, if you look at Ethereum, the Ethereum token has moved about 40% in the last month up. It's about 20% up for the week. And what that is a signal that the decentralized finance ecosystem, where all the innovation and smart contracts and stuff are happening, those are waking up, coming into the market. And so Ethereum is worth looking into if you're an investor, because it's indicating that people are developing new and innovative ways to interact with blockchains. Solana is a way to accelerate the speed and efficiency of transacting on the Ethereum network, so it's not so expensive. XRP has its own sort of purview of things. It's more institutional in the way that they're approaching things, and I think the jury's still out, so we could see where that goes. But it's a strong project, and it's worth paying attention to. But I think you're going to see applications evolve on top of the tokens themselves, because if you go back to the early days of the internet and people invented TCP/IP, for instance, no one walks up to you and says, "Hey, are you using TCP/IP?" They say, do you know Facebook? Do you know Google? Do you know Amazon? So the way that things have evolved to help people's lives be better, be it faster, cheaper, easier, that's the next phase in what this is all going to bring.
Frank Spicer, good to talk to you again. Co-founder and CEO of Metafied, joining us from Myrtle Beach, South Carolina. Taking a look at markets, just with about a little less than a half hour to go. We're seeing stocks in the red, but ever so slightly. S&P 500 down 0.1%. We drive to the close next.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. We are wrapping up the week with a loss for the Dow, the S&P, and NASDAQ, all in the red. Let's head over to the First Word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Sean. That's right. U.S. stocks are trading in the red right now with the Dow down 181 points. S&Ps are down 5 and NASDAQ is lower by 14. The U.S. 10-year yield is at 4.43. Gold is in the green, oil is in the red, but Bitcoin, that's down by 1.3%. Among the main 11 S&P sectors, leaders were utilities and consumer discretionary. Energy was under pressure, and leaders to the upside in the Dow, IBM and Travelers, while 3M fell 4.4% after earnings and led to the downside. Also after earnings, Netflix fell 5%, and wrapping things up, Sarepta plunged as much as 42% on news the FDA will ask the company to halt its gene therapy shipments. Live from the First Word breaking news desk, I'm Bill Maloney. Charlie?
Okay, thank you very much, Bill. Have a great weekend. And to hear live breaking news over your Bloomberg, type Squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us to the dawn.
On Bloomberg Radio.
All right, everybody. It is just about 18 minutes to the close of U.S. equity market trading on this Friday, July 18th. Isabel Lee, does it feel like a Friday to you?
It feels like a Friday. This week felt long and weird, but we're almost going to make it.
We are. Well, almost. We got, 18 minutes to go until the close of trading. We got an hour and 20 minutes of the program left. I think we can do it. The S&P 500 down 0.1%, the Dow down 0.4%, the NASDAQ down fractionally.
And we got a slew of earnings this week, really lots to digest. And with us is Jared Cassidy. He's the head of U.S. Bank Equity Strategy and large cap bank analyst at RBC Capital Markets. He joins us from Portland, Maine. So thank you for joining us, Gerard. So first of all, trading revenues held up strongly in the second quarter, especially in equities. How much of this do you think is structural drivers versus cyclical volatility?
Sure. Thank you, Isabel. I would say that trading revenues are always going to be impacted by market conditions. And when there's increased volatility, like we saw especially in April, trading revenues benefit from that. And so even though the big broker dealers, the big investment banks, Goldman Sachs, JP Morgan, Morgan Stanley, et cetera, are certainly benefiting from the trading environment, it's more, I would say, cyclical than structural. But again, volatility benefits the trading areas for these banks. And when you compare trading revenues to investment banking revenues, they're much, much larger. Now, investment banking revenues, on the other hand, want stable and calm markets, and that helps those revenues, which really impacted them negatively in April and May.
With Goldman and JP Morgan outperforming in capital markets, what do you think they're doing differently that's allowing them to really gain market share across equity trading, advisory, and many more?
It's a combination of factors of, hiring the right people, having the deeper relationships. But it's also both these companies, and Goldman in particular has pointed this out, is that they have a very laser-like strategic focus to be the top investment bank, or I should say the top broker-dealer to their top 150 clients. So Goldman has identified these clients and has steadily improved the penetration in their wallets of those clients. And it's been a focus point. JP Morgan has been doing that as well. And so I think that's part of the reason that you see their market shares improving in this area, is because of this increased focus, plus having the proper or the right talent in the chairs that do the customer facing has been a factor as well.
As these results have had a few days to breathe, and you've looked at the commentary again and again, and you've heard interviews with different executives, how would you characterize the way they've spoken about the economy? And the reason I ask is because we love looking at the banks because they've got a great view on how U.S. customers are doing?
Tim, it's a really good question. In fact,
Hey
I
guys,
was asking
sorry
that
I had
question
meetings and calls.
on the earnings calls
I'm
because,
here.
to your point, think
I'm just
about
running these
what we just
bundles
came
I
through.
have, trying to
You know,
make,
the president
trying to get to
announces
15
his
quick.
tariff policies in April of this year. The
I ended up
market
having
goes
another
into
5
a tailspin.
they gave me.
The economists,
So,
many of them raised the
be
probability
nice to see
of
the
recession
NQ run up to
meaningfully for 2025.
the
But
VWAP
the
real
bank's
quick.
results
That would
in
be
the
good.
second quarter were very, very good. The first quarter of this year, according to the FDIC, the industry had on an annualized basis record profitability. And since the second quarter results were in general so far better than the first quarter, that record profitability is likely to be maintained. So what gives? I mean, you have all this uncertainty. We see the headlines, but what the driver, I think, is the employment picture remains very healthy. Not only do we have a low unemployment rate, we're still producing anywhere from 130 to 160,000 new jobs every month. And when you look at the JOLTS numbers, the job opening and labor turnover numbers, we still have a shortage of workers. And so as a result, wage growth remains very buoyant and the consumer is in good shape. Now, corporates and commercial customers, they see a little more relief, I would say, versus what they saw in April when the banks reported first quarter results and the Trump tariff news just hit. So it's still cloudy, but it's not as dark as it was in April. So there's a little bit of better confidence now. We'll see if that holds through the end of the year. But it's really kind of interesting because, you know, in April, nobody was expecting the results like we're seeing today with the banks suggesting the economy is much healthier than people were thinking it was going to be.
Given the year-over-year rebound in capital market revenues, are we at an inflection point when it comes to broader financials exposure, or do you think headwinds like tariffs or elections still warrant some caution?
It's interesting because, you know, trading revenues for some of the banks were at record levels. And so you could argue that, you know, we have to continue to see maybe record levels for this to continue for the industry.
All right, let's run, baby,
those
run.
are always hard to
get one
predict.
through.
So I wouldn't say you necessarily have to get bearish on the investment banks or the trading businesses. Plus, you know, we still haven't seen the investment banking results come back to, you know, above trend lines when you look at both ECM, DCM, and advisory. Goldman pointed out that the advisory revenues now are above the 5-year trend lines, but ECM, led by IPOs, initial public offerings, they really have not fully recovered yet. And when that happens, that leads to more equity trading, of course, in the as more IPOs come out. So there's always risks. We don't disagree with that. There's always concerns out there. So I would say that there's still real opportunities to own banks and investment banks to make money in this market relative to the market. The financials in general are inexpensive. And, you know, should the market go into a correction for the higher PE, higher value stocks, the banks should hold up, you know, pretty well relative to the market.
Just 20 seconds left, very briefly. Do the big banks have anything to be concerned about when it comes to fintech firms and crypto legislation?
No, the banks are going to embrace it. The banks are going to be part of it. Nothing to, you know, we don't believe any major disruptions coming from fintechs. The banks are going to be in there fighting it out, and I think they're going to do a very good job in competing.
Gerard Cassidy, head of U.S. Bank Equity Strategy and large cap bank analyst at RBC Capital Markets, joining us from beautiful Portland, Maine on this Friday afternoon. We are just a few minutes away from the close of equity trading. S&P 500 still down less than 0.1%. The NASDAQ composite pretty much flat. The Dow down 0.4%. I'm Tim Stenovec, along with Bloomberg News cross-asset reporter Isabel Lee. She is in for Carol Massar on this Friday afternoon. When we come back, we're going to be joined by our Bloomberg TV team for our cross-platform coverage. We're going to count you down to the close next.
All right, let's push up.
This is Bloomberg Business Week Daily with Carol Massar and Tim Stenovec on Bloomberg Radio.
It is Bloomberg Business Week Daily. I'm Tim Stenovec. That is Isabel Lee. She's from the Bloomberg News Cross Asset team. She is graciously hanging out with us this afternoon for Carol Massar on this Friday. Second time this week that you've been with us. Thank you for joining us. Are you having fun?
I'm having so much fun.
Okay.
And honestly, it's been a crazy week.
Let's
Wednesday
go,
was crazy
push.
for us. Today is also crazy.
Oh my
Every day
gosh.
must be crazy for you.
No, not every day, but when it's like big weeks of earnings, like we had
That's
this
true.
week
Touch
and
the
like we have
VWAP.
next week. We got Tesla next week. We've got Alphabet next week. We'll talk about earnings coming up in just a few minutes. We're going to have some fun, though, because you pointed out this story to me. You sold me on it.
6 minutes till
It's
the
about
close.
a Taylor Swift bump for a certain startup. What's going on?
So there's this startup, Phase-It or Fazit. Their revenue is on track to exceed $40 million this year because of a viral moment that really accelerated their rollout in Target stores. So what is it? It's glitter freckles. So I don't know how much you know about current trends, Tim, not to expose your age, but the younger folks now, they do makeup, like freckle makeups.
I
Because
did not
they think
know
it's
this.
cute, but
Okay.
then they do it as natural as possible.
So we're talking
brown
Gen
stuff.
Z here?
Yes.
Okay.
I grew up thinking that freckles are it's different. Freckle reputation now is good. So they would put brown makeup and stuff, but then for this startup, it's glitter freckles. And if you can't imagine it, just imagine glitter droplets on your face, and that's exactly how it is. And the story that we had says that within 48 hours, sales of makeup freckles sold on their website exploded to more than $1 million. And that's a 3,500% spike. That's almost like a meme stock.
So the folks who started this are 29 years old. They went into 2024 hoping to sell $3 million worth of products. But thanks in large part to the luck from Taylor Swift, they topped out at $10 million.
And
Wow.
yes. So again, TikTok influencers have really been obsessed with fake freckles. They use everything from eyebrow pencils to liquid eyeliner. Some have used ball pen to make freckle spots. It depends on your skin tone too. You know, some freckles are brown, some are black. But yeah, now there's glitter freckles. And it really just shows how you just have to wait maybe for that one viral moment if you're lucky enough. And that will really change the trajectory of your startup.
This company, Phase-It, it seems like this was launched around Coachella last year.
Yes.
Popular for concerts, festivals, sporting events. Since October, more than a dozen NFL teams have contacted the startup about potential collaborations. NFL teams?
And over the past year, the partners say they've had roughly 25 meetings with PE firms who want to invest. I can only imagine that's like tenfold now, probably.
Doesn't this seem like something you can replicate though? Like I'm sure there are all these imitators out there now.
That's true. I think first mover is important, but you're right. There's still a lot of imitators, but I don't know. I mean, if Taylor Swift advertised this product, nothing can beat that.
And she wasn't even trying to
That's
advertise
true.
it. It's Taylor Swift. So if she, does something, everybody pays attention.
I would not do this personally, but I'm a more conservative person. But it would be fun to see someone do it. Honestly,
So you're not.
Can you imagine?
What's the next TikTok trend that I don't know about because I'm an old?
So I'm semi-old in that I watch TikTok on Instagram.
Yeah, you and me both.
The cross, when you cross-pollinate or cross-post, that's when I watch it. So not really up to speed about the latest TikTok. A boring TikTok trends I realized there's a lot of issuers
I
of
should've
ETFs
sold on
are
the
now
200.
using TikTok.
It always comes back to ETFs when you're talking to someone on the cross-asset team. Respect. I got respect for that.
But because they see a bump, they see interest, and this goes to show that even for us in media, you go where the audience is, and maybe you go to TikTok, maybe you go to Instagram, but you have to meet.
Well,
where
your colleagues on the cross-asset team, Vildana and Emily Graffeo, Vildana Hyrick and Emily Graffeo, they wrote about
3
Matthew
minutes
Tuttle
left.
recently
Yes.
using
That was a fantastic Yes.
Discord as a place to find ideas.
That's where he's getting ideas
Yeah.
because that's where his audience is.
All right, check out this story and, of course, that big take from
Emily Graffeo.
and Vildana Hyrick on the Bloomberg Terminal and at Bloomberg.com. Coming up next, we'll be joined by our Bloomberg TV team for our cross-platform coverage. The closing bell starts now.
I fucked up on this one then. I should have just got out on the 200. It's going to push it down.
Of the U.S. market close starts right now.
We're about 2 minutes away from the end of the trading day. Scarlett Fu and Bonnie Quinn here with you, and here to help take you through the closing bell, we've got a global simulcast. Tim Stanovic joins us, as well as Isabel Lee. We bring together our Bloomberg television, radio, and YouTube audiences worldwide as we parse through the most crucial moments of the trading day. And Tim, it doesn't look like a whole lot is going on when you look at the closing numbers here in the S&P 500, little change, but it's been a walloper of a week in terms of some of the dynamics within.
Yeah, I think that's the exact right way to put it. The big banks reported, and certainly this week was a big one when it came to conversations and chatter around the future of Fed Chair Jay Powell and a lot of Fed speak ahead of that July 30th meeting. But if you thought this was a big week for earnings, check out what we got next week. Verizon, T-Mobile, AT&T, NXP, Lockheed Martin, Philip Morris, Coca-Cola. Are we going to hear about Sugar Coke? Maybe? Tesla next week as well.
Wait a minute. Let's get a boost straight on the
We'll also
button.
get
That's just a
Blackstone.
sampler.
That's just a few. That's just a few.
But it's interesting because even with all the political grandstandings and even the recession warnings, the U.S. economy just really refuses to buckle, even with President Donald Trump berating Fed Chair Jerome Powell and newer central bankers really just debating the course of interest rates. We're still in a good shape, especially when it comes to the equity market.
It is pretty stunning, isn't it, Isabel? We just had Christina Hooper saying this is the calm before the storm, and it certainly feels like there could be more, at least squalls coming, let's put it that way, because we do have those tariffs. Just 1.5, I think, more weeks, 2 more weeks until the August 1st deadline. So, you know, we're bound to see more of those letters go out and more comments from the president. He couldn't even help himself. He was commenting on it earlier today during the signing of the Genius Act.
But that just goes to show that it can all be rolled out another week as well, because he's constantly moving goalposts, and the deadlines are, well, they've proven to be somewhat flexible, at least from his perspective. Let's take a look at how things are shaping up here as the closing bells.
The force is strong with the 200
New York
EMA.
Stock Exchange and over at the NASDAQ. You have the S&P 500 finishing basically unchanged at 62.96, so just below that 6,300 level, so very much holding near its record highs. The Dow Jones Industrial Average losing 1/3 of 1%, lower by 142 points, 44,341. The NASDAQ finishing marginally higher. And we take a look at the Russell 2000, the small caps. They are the laggards of the session, losing ground by 0.6% here on the day. Of course, when you look at how things fared for the week, we are looking at, let me just pull this up, gains all around here for the S&P 500. You have gains of about 4.9% for the Dow Industrials and 9.1% for the S&P 500.
You know, it just switched, but we were 250 in terms of gainers and decliners in the S&P 500. That's not how things settled, but pretty close to that. 255 stocks, excuse me, moved higher. Isabel, 244.
If we look at the IMAP, this also tells the story because, Scarlett, you mentioned it earlier, but utilities were the best performer. We're talking mainly, though, Vistra Energy, for example, these utilities that are involved in power consumption by AI companies and so on, up 1.7%. But energy companies in general down 1%. So there was a lot of stories going on underneath. It wasn't just crypto week.
And just a quick correction, when I gave those numbers, I'm sorry, I was referring to volume, not the actual index levels, because the index levels are not moving like that on a weekly basis. The S&P 500 marginally higher by 0.6%. The NASDAQ little changed on the week.
All right, well, let's talk to some of the stocks that were on the move today and this week as well. A few of the gainers on my radar included Charles Schwab, up 2.9%. The company did report second quarter earnings earlier today. It topped estimates. Client assets hit a new record. Trading revenue increased. Rick Wurster, the company's new-ish CEO, he said they are continuing to build out digital assets, and it'll include spot trading in Bitcoin and Ethereum. The company expects that to be a, quote, meaningful growth driver. Also, watching shares of what's happening with crypto companies today because of that signing of the Genius Act in Washington. We heard comments from President Trump earlier today talking about that bill moving through Congress and ultimately ending up on his desk. Shares of Robinhood higher by 4% today. The president hailed that new law as a giant step to cement American dominance of global finance and crypto technology. It delivered a major victory for the digital asset industry. Robinhood CEO Vlad Tenev was actually at the event at the White House today. The president called him out by name just a little bit ago. And finally, here's an interesting one. California Resources. It's an energy and carbon management company based in California. It popped in late trading. You can see it on the chart right there, up close to 7% on the day. This after news reports that Governor Gavin Newsom of California is proposing a bill to streamline permitting for new oil wells. Environmental groups, though, are pushing back. They say it would wipe out scrutiny of the industry. California Resources up today by 6.7%.
On to the decliners, we have to start with Humana because shares closed just 1.5% lower, but intraday it was wild because the shares sank as much as 7.5%. That's the lowest since at least April 2017. So Humana lost its lawsuit seeking to reverse cuts to its Medicare bonus payments. So this is a blow for the insurer because they really hoped that the court would restore billions in revenue. So we're definitely going to see a squeeze in profits. We have Barclays telling Bloomberg in April that a win would have doubled their 2026 profits. So this is why stocks are edging down for now. Next is Lucid. So this is also in the red, down by 2.5%. Shares are just really consolidating after the massive jump we saw on Thursday. That's yesterday, which we saw the most in 2 years. So this came after the company said it was planning to team up with Uber and self-driving tech startup Nuro to launch a robo-taxi fleet. And last, we have Chevron. Shares are down by almost 1%. So Chevron won the arbitration battle with Exxon, which is its larger rival, to finally close its acquisition of Hess. So the victory comes after more than 20 months after the deal was announced, which was worth $53 billion. So really, at least a lot of overhang there lifted in the industry.
Yeah, overhang lifted, but it was something that investors were anticipating, which might explain why the shares ended up finishing lower. Let's take a look at what's happening across fixed income. The Treasury yield down across the curve, but certainly more so at the shorter end of the curve. The 2-year now down about 3 basis points to 3.86%. The 30-year finishing the week below 5%. But remember, it did reach about 5.07% on the day that there were reports that President Trump was considering firing Jay Powell, really threatening the independence of the Federal Reserve.
Well, this story in the Wall Street Journal got our attention this afternoon, maybe because I'm always hungry. But if you've been to a McDonald's recently and you've ordered maybe, I don't know, some sort of chicken sandwich, a McChicken sandwich, and it hasn't come with lettuce, there's actually a reason why. It's because the snack wraps that they brought back have been such a hit that some McDonald's are actually running out of lettuce.
This is shocking because I can't ever imagine eating a burger without lettuce, tomato, bread. Even maybe I can live without the bread, but definitely not
I thought you were going to
lettuce.
say sesame seed buns. Isn't that part of the whole?
Pickle also
That's
will
the
be
jingle,
good.
right?
Terribly sad. It might be literally the only good thing in that whole snack. I mean, good as a nutritious.
I know what you
don't
meant.
at me,
It was
McDonald's.
still funny.
It just goes to show how big a player McDonald's is in anything, right? When demand for any of its goods changes, like it absorbs so much of the supply chain that things can run out. It on its own, if it launches a new product, there's a run on everything that goes into that particular sandwich.
And that's why you have to wonder if the person who decided that this should make a comeback and thought it was going to be a success you know, and then enacted it, then why didn't they have enough lettuce? Why do they have
You got to
all
call.
of the...
You got to call Tim Cook in situations like that. That's his specialty. He's the supply chain guy.
So we're saying that McDonald's needs a new supply chain specialist?
I didn't say it,
A
but
lettuce
you know,
specialist.
didn't they have an issue with eggs too when they brought
They
back
did.
breakfast?
They did, but they defended themselves. They said that the outage was brief and now resolved. So there is that.
Okay, people need their protein in the morning. All right, let's talk about another story, which is we know that private schools are a big deal here, certainly in the tri-state area. Have you heard of Harrow, which is a boarding school famed in the UK?
I had not heard of it before this story.
Okay, I mean, it's like the second most famous British boarding school after Eton, but it now will be opening a New York-based offshoot. Vani, I know you've heard of Harrow.
I've heard of Harrow, yeah, tangentially since it's British, but yeah, this particular one is going to be run by the Amity Education Group, which is an Indian family foundation.
So it's licensed.
Exactly, it's fascinating. Also, I mean, I don't know about the visa situation and when they're going to be able to get that all sorted out, because not immediately, apparently. But if you were a Harry Potter fan and you wanted to go to the school that served as a stand-in for the Harry Potter movie, then you would want to go here, because this particular school actually served as that stand-in.
Yeah, well, the one in New York won't be the stand-in for the Harry Potter school, but they're going to be opening one in New York, and it's not in the city of New York, and it's not in Long Island, and it's not in the Hamptons, which is where a lot of New York's moneyed elite summer and have their second homes, but it's going to be somewhere in between. So it's kind of a school for people who kind of make their way between their Manhattan homes and their Hampton homes.
And $75,000 is the price tag for tuition, right?
Including boarding, though, Tim.
So, which actually seems, if you're in the world of New York City private schools, kind of the cost of a day school here in New York City.
You're saying it's reasonable.
Yeah, which is you know, a different conversation, the cost of education. But all right, grab your Quidditch brooms and head on over to the new school, Harrow International School in New York. That is going to do it for our cross-platform coverage of the market close. You guys have a great weekend, because we will see you back here, same time, same place on Monday.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Massar and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
It is Bloomberg Business Week Daily. I'm Tim Stenivek. That is Isabel Lee. She's in for Carol Massar on this Friday afternoon. She's Bloomberg News cross-asset reporter. And among the many great things that makes it great when you join us is you also know a lot of the guests that we speak to, because you end up speaking to them for some of your stories.
Yes, and I only bring the best of the best. And
Yes,
I feel like
that's what I
today
like
we
to
have
hear.
the perfect guest, because it's really been a crazy week. We had Jerome Powell almost getting fired from his job, or maybe just in jeopardy. We had a lot of earnings, stocks fluctuating. We had data showing consumer expectations is improving. We also had a lot of inflation data. And let's not forget, crypto hit $4 billion in market cap. So to help us make sense of all of that is Rafael Tuin. He is the head of capital market strategies at Tikeo Capital. That's an asset manager with over 50 billion euros in assets. And I bug Rafael a lot, maybe once a week. So I'm really excited to introduce him to you. So maybe we could start with that. What do you make sense of the week? Why does the economy refuse to buckle even with all these headwinds? Do you think that euphoria has gotten too far?
Yeah, euphoria is clearly a word you can think of when you think of what's happening in the market. You know, cyclical, the stocks performing well versus defensive, Bitcoin being all-time high, meme stocks. You see that in the credit, high yield market as well. Lots of deals coming in. So, you know, investors are feeling good. And so far, the economy is going their way. When you look at the latest data, retail sales have been fairly resilient. Manufacturing, industrial productions were also pretty good the past few days. Labor has shown some resilience as well. So a lot of those initial thoughts about, you know, a massive slowdown on the back of high uncertainty, tariffs, the Trump administration, the rising deficits are not materializing just yet.
Well, you said just yet.
I do say just yet,
Why?
indeed. Well, most likely we feel like those tariffs will have ended up having an impact on the economy. Maybe we can say that taco is kind of dead.
Really? You think so? You think
Feels like-
Do you think it's dead because come August 1st, those tariffs that were threatened last week via letters will go into effect and there will be no changes?
It looks like, first of all, the market was assuming kind of a base rate of like 10% for most countries and potentially a bit more for China, up to 30%. Feels like this base 10% rate is probably higher now. We are getting closer to maybe 20%. This is the latest data from Europe, apparently. So this is going to be obviously an additional impact on the economy, on inflation. And also it feels like obviously President Trump has had a few wins more recently. The big, beautiful bill, geopolitics, and so on. And potentially, we know this is the core of his program. He's very serious about implementing those tariffs. So when you put all of that together, you feel like maybe there is not such a taco trade anymore. Maybe we should buckle up for real tariff impact on inflation, on the economy. We're starting to see a little bit of that. When you look at the inflation data, we've seen indeed, especially in some categories, the impact of tariff being felt. It has been offset by non-impacted sectors such as services and housing, but you're starting to see some of that. You're starting to hear that also in the conversation. There is some stagflationary impulse going through the economy. But for now, it's true, the resilience has been very impressive.
Where do you stand on the rate cut debate? We have Fed Governor Christopher Waller hinting that he would dissent if his colleagues vote to hold interest rates steady in July.
Well, when you think of Jerome Powell, you probably feel like he's having a very difficult hand now. I was saying the word stagflationary. This is the worst case scenario for a central banker. Is going to have to deal with potentially a slowdown in the economy. Yes, it's resilient, but it is somewhat slowing down on the one hand. And at the same time, obviously, inflationary pressure that should build in H2. And this combination will probably have to push the Fed to stay on the side, wait for more data, but obviously at the same time, a lot of political pressure to act. Every day a new headline from internally or externally from President Trump. So how do you reconcile the fact that the economy is holding up well and inflation is creeping back in with this massive political pressure for cutting rates? Is going to be an interesting show to watch.
We're speaking with Raphael Tuin, head of capital market strategies at Tikehau Capital. He joins us here in the Bloomberg Interactive Broker Studio. About $59 billion in assets under management. Those assets, where are they allocated right now?
So we do private credit, we do private equity, real assets, liquid markets. So it's really a 360 approach to investing in many ways. Historically, we're a European company founded in Paris, but increasingly we're international companies, especially in North America. That's a major focus.
Are you starting to see cracks form in private equity? You see a lot of the institutional, well, I would say institutions here in the US, a handful of them in recent months that have traditionally had large exposure to private equity start to sell some of that private equity. I'm talking about some of the universities that have done that of late.
You're seeing somewhat of a slowdown, it's true. Some investors are more on the wait-and-see mode, waiting to see some cash back to redeploy. But at the end of the day, it's still a very positive long-term trend for that kind of strategies. Clients are still willing to allocate more and more. You have also the retailization of the asset class, more and more retail people coming in. And we saw President Trump announcing some measures on that front also for retirement plans. And so at the end of the day, this is a mega trend. Maybe you will have some setback along the way, but still a fast growing market.
You've also increased your exposure to US tech. What macro signals or valuation metrics are giving you conviction to do that? Because some people are saying it's too frothy now.
Well, it's an interesting setup for tech. When you think back early this year, people were expecting a couple of negative factors to impact the asset class and to impact the sector. People are talking about DeepSeek, impact of DeepSeek. What about the return on investment on all these CapEx? Could we see a shift in the amount of CapEx here? That was actually not the case when you listen to those companies, and we're actually seeing an acceleration of that trend. Same with tariffs. People were expected those big tech to be impacted. So in many ways, this did not materialize. And at the same time, the valuations you're paying are expensive. You're paying a premium for US tech, but not necessarily very expensive for all of them. You do still have pockets of values. So you have to be selective. You know, the Max 7 concept is probably kind of too blurry and too messy to be considered. But within that bucket, you do have some pockets of interest.
And there's also growing debate about the end of U.S. exceptionalism. You mentioned earlier that your focus is more North America. What evidence do you see for or against rebalancing towards Europe or other emerging markets? Or are you still really go U.S.?
No, we do see a lot of rebalancings. So we're not saying this is the end of US exceptionalism. You have many reasons to believe that, yes, indeed, there is away from the US a deficit of growth, of productivity, of innovation, and this is not going to go away. But when you look back over the past 5 years, for every dollar invested in the world, 80 cents were invested in the US. So
that worked out for that period of time. But do you think it's going to work out like that in the future?
That's a key question here. Like, is it sustainable? When you look at the global share of GDP coming from the US, it's 28%. So this is a massive imbalance. And the result of that has been twofold. First of all, US assets have outperformed massively. Second of all, they are now extremely expensive. And everywhere you look, this is the case. The gap, for instance, in equities between the US and Europe is the largest ever. In credit, you do see US credit spreads now trading tighter than European spreads, something you've rarely seen in history. We can speak about the dollar. The dollar was clearly very inflated, and you're seeing some impact there as well. So, not saying that US exceptionalism is dead, but the rebalancing of flows is probably something that could have legs.
Raphael, we'll have to talk about the dollar next time. We are unfortunately out of time. Raphael Tuin, head of capital market strategies at TKO Capital. It's an asset manager with over 50.6 billion in euros under management. That's about $59 billion. Coming up next on Bloomberg Business Week Daily, it is one of the most read stories on the Bloomberg terminal. It's about Jane Street. That's next.
It's 421 on Wall Street. We do check markets all day long here at Bloomberg. Little change for the U.S. equity market. This Bloomberg Business Flash brought to you by Oracle. Attention growing businesses. Oracle's offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Dow Jones Industrial Average ended the day with a loss of 142 points, down by about 0.3%. S&P 500 index little changed on the day, down half a point, close to a record 62.96. Nasdaq up 10 at 20,895 for the Nasdaq Composite Index. That was an advance today of just under 0.1%. 10-year 4.41% with a 2-year currently yielding 3.86%. Spot gold up $11 the ounce, up by 0.3%. And West Texas Intermediate crude down 0.2%, 67.41 a barrel. Crypto week is behind us. Bitcoin right now, 117,240. Bitcoin today down by 1.9%. Netflix shares tumbled after earnings. Netflix lower today by 5.1%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Today's most read story, Tim, we get an inside look into one of the most secretive trading firms. It's filled with juicy anecdotes and fantastic quotes. It's Jane Street's secrets spill into the open and face rival scrutiny. It's by Catherine Doherty and Bernard Goyder, and there are really a lot of fantastic information. I really read it from start to finish, and sometimes I just scroll through things. And I love this detail. It says Jane Street's market making and other trading operations are now so expansive that competitors are a who's who of the industry, namely Citadel, Susquehanna, Virtu, as well as banks and broker-dealers. And you have great quotes from Larry Tabb saying they came from virtually nowhere 7 to 8 years ago to one of the top 3 or 4 retail market makers. Larry Tabb is from Bloomberg Intelligence. So we now have Kat to join us. So tell us more about this. How hard was it to unveil a lot of these details, given how secretive they are?
Well, to give you an anecdote of if you were to go on LinkedIn and find a Jane Street employee, most of them do not have profile photos. And I would also say that the majority don't even have a title. They might say that they work at the firm, but you can't really identify who they are or what they do there. Some do, I would say the more senior folks. But in general, this is a firm that operates behind the scenes. They are under the radar. They're just focused on the work of being a middleman in the markets, and they're a crucial part of how U.S. trading and globally in other markets, they perform a important task of just making sure that that trading is actually happening. They're executing the trades, but they don't have to be front and center and talk about how they're doing it. So reporting about this firm is quite tricky, given that they don't really need to say much about what they do. Their work speaks for itself.
So what made Jane Street so successful? You also wrote in your story, you quoted Ben Eifert of QVR Advisors. He said that they take a lot more risk than a Citadel Securities would. Why is that?
Yes, there's a few factors. Risk is a big one. The reason that they're able to take more risk is the money that they have to support their trading operations is all theirs. That's their own capital. So unlike a bank or even a hedge fund that has capital that they're trading with, that money is either their investors or they have to answer to shareholders. If you're a bank and you have a major loss, you're going to have to disclose it. And ultimately, that's not all of your own capital that you're having to put to work. Whereas Jane Street has billions of dollars that they've built up over time. And the more money that they've generated over time, they've put that back into their operations. And they're playing with the bigwigs. And in many ways, just their numbers speak for themselves. Their trading revenue has surpassed Bank of America, Citigroup. They're now some of the biggest players on Wall Street. They're trading operations. These banks that I'm naming have other units that are far larger than what Jane Street is generating just as a trading firm. But if we're just talking about being a market-making firm in not just the U.S., but globally, Jane Street has become one of the more dominant players.
Why I never heard of Jane Street until Sam Bankman-Fried came on the map, and this was before the old FTX blow up. Didn't hear about Jane Street for a while, and then Sri Natarajan comes into our studio. This was like maybe you were just getting married at this time, and he comes
the coup?
Yeah, with this story. Jane Street boss says he was duped into funding AK-47s for a coup.
Yeah, Jane Street's been in the news for a few recent weeks, which is unusual. You bring up the other time, which was Sam Bankman-Fried is an alum from this firm. So often people were Googling the firm. I could see like an uptick during that period, and now of course you're seeing it,
it was like
on a larger
of
scale.
Sam Bankman-Fried was like he got out of college and then went and worked at Jane Street.
Yes.
And he was really successful there.
Yes, and I think that. Let's use Sam as an example because he speaks to this larger culture that Jane Street represents, which is mathematical. They have quants. They develop their own puzzles. Someone pointed out to me today, and I wish I knew this before my story was published, that they're even like developing, they're hiring someone to develop their own puzzles and games within this company. So that's kind of how they think. They're quantitative, they're problem solvers. And Sam was like that, and he represents kind of what others that you might find currently at this firm are doing. They're problem solving for the global financial system in many ways. They're trying to be smarter and faster and better than their rivals by developing their coding, and they're developing algorithms to essentially create like the technology that makes them as successful as they are today.
Okay, we got to get to the coup.
The coup.
Yes.
I mean, that's just a separate side note that one of their founders had found himself.
You include this in your story.
We did. Yes. Well, because these are the moments that you're bringing up that has pushed this firm into a more public facing, into the spotlight per se. And that's unusual for a company that is notorious for being, again, behind the scenes, for not speaking out. It's noteworthy that many of their competitors, the ones that they even name to their own investors, they do have credit investors that they answer to. So they identify, hey, these are our competition that we view. And to the competitors who might put out comment letters or give their views on the marketplace, Jane is not one to put forth their opinions as loudly as some of these other firms that they're naming as their competitors. So these are the few kind of differentiators that in many ways make them, well, they're very unique as a market-making firm, and they're not like some of the biggest banks as well that they're competing with.
Yeah. As a reporter, when I read a fantastic story, other than learning from it, I always wonder, oh my gosh, how did the reporter do that? So can you share with us an unexpected moment or like a hiccup you didn't expect that happened through the course of your reporting? Because clearly it really took months and it's really well reported.
Well, not to reveal all of my secrets, and I will say that my reporting never finishes, so I try not to give too much away. So that I view this story as just, there's going to be many, many more. But I will say that what I love about reporting in this industry, and it's not just specific to Jane Street, but any market-making firm or an exchange, but in the world of the financial markets, when you speak to people who are so in the weeds and so mathematical, or they're trying to explain a dynamic that is changing in the marketplace, and Jane is at the heart of it because they're such a big player, my reporting leads me down rabbit holes that I can't even fit into some of my stories sometimes, but that I think is the biggest surprise to me, and has been a surprise to me about Jane's is just the size of, you mentioned risk taking, but it's the wallet that they have to do that. That I think was shocking, not just to me, but to people I talk to in the marketplace. Their own competitors have been sifting through these documents that have come out, and everyone was asking the question, how do they make the type of money that they do at the scale that they do? And we're starting to see some flavors of that.
And because we've seen that, this is why they caught the attention of the regulators in India and said, oh my gosh, let us look into it. And so they did. And now the secret is out in the open. In general, how do courts or regulators view those tactics? Because it had something to do with options. So they said they see it as arbitrage, but some may see it as manipulation. I don't know. What have you heard in your reporting?
So the situation that you're referencing is over the July 4th weekend, the regulators in India had come out with a 105-page order against Jane Street, alleging that they were manipulating the market. That is an ongoing situation. That is something that the firm is going to respond to in a more formal way. But they've already come out and said that they do not agree with this decision, that they will fight it. But all things aside, it is very specific to the Indian options market, where they have grown quite large. So that is the reason. And again, it speaks to this larger story about the firm itself and its prominence. They have taken such a role in the Indian marketplace, and they're based in New York City, but they have offices globally. So that one instance that you're mentioning of the regulators looking into Jane Street within their own marketplace in India, the people that I talked to, I was trying to understand, well, what does this mean on a global scale? Because you have to just zoom out and think about, what does this mean for the firm and what does it mean for the competitors? And the answer that I kind of came to, the conclusion that really is the story that I put out today, is this opens the door for further questions, further inquiries. There's nothing to stop other regulators in other countries from just knocking on Jane Street's door and saying, hey, we are going to look into this further, or we have further questions. Not to say that anything has led to that, but there's absolutely that potential based on the folks that I talked to. They're all saying that this is potentially the beginning.
We only have a little bit of time left, but it's one of the most read stories on the Bloomberg terminal today. It was like the most read until JFK like shut down its airport for 30 minutes or whatever.
Yes, that's an important story to our readers.
Now it's the most important. Now this is the most read story, though. What has been the response? People reaching out to you again, not giving away any sources, but what are you hearing after publication?
A lot of surprises, which is kind of fun because the whole point of this story is like, here's the surprise that you didn't know about, and then. You know, people love to share their opinion on the situation in India that you brought up, whether a lot of comparison to some of Jane Street's competitors, like a Citadel Securities, a Susquehanna, which is where the founders came from. It just generates so much discussion, and I love the feedback like that leads to stories ahead.
Kat Doherty, Bloomberg News finance reporter, joining us here in the Bloomberg Interactive Brokers studio. Check out her story on the Bloomberg terminal, co-written with Bernard Goiter. Jane Street's secret spill into open and face rival scrutiny. A regulatory probe and bond documents show how a $42 billion war chest and an embrace of risk drive profits. Again, among the most read stories on the Bloomberg terminal. Coming up next, we're talking Players TV.
Order filled.
All right, closing it down. Have a good weekend, and we'll pick it up again Monday.